despite them taking
Now,
a
in a
potentially
few words,
massive
tell me, what can I help you with today? For example,
billion-dollar hit to their current quarter, and also announcing that they are going to stop production on their EV F-150, at least temporarily.
Yeah, I think the market appreciates the decisive nature of this decision, and there's a lot of details. This was a statement issued when, of course, Mr. Farley, CEO of Ford, has been on several interviews discussing this. But let's go through kind of what we know and some of the thoughts. So, as you mentioned, Ford Motor announced that they're going to take a $19.5 billion charge tied to a sweeping overhaul of its electric vehicle business after struggling for years to make it profitable. They're canceling a planned electric F-Series truck, shifting that production towards gas and hybrid vehicles, and repurposing the battery plant. This will ultimately convert its signature electric F-150 Lightning pickup into an extended range hybrid vehicle. They expect these moves will make its EV operations profitable by 2029 and boosted its guidance to $7 billion before interest and taxes up from a prior estimate of $6 billion to $6.5 billion. When you look at this, Marley, you mentioned most of this is going to take place in the fourth quarter in terms of where these charges will take place, but
I'm going to see where my money's at. Look at them agent on the phone. I hate y'all robots.
Chief Executive Officer said,
I'm asking the question.
It didn't make sense to keep plowing billions into products that we knew would not make money.
Man, hurry up and get somebody, though.
So, it's a very,
Only just tell me that you're going to get somebody, but I want somebody the whole damn time. Hurry up and get somebody.
And it might just
Thank
be
you.
the reality of where the consumer is and where the economics are, especially as we watch policy shifts out of Washington really change those economics for so many of these different businesses.
And it is interesting, too, that one of the plans that the company announced that I think may be an additional reason that we're seeing some of the move to the upside is that they're going to take some of the EV battery capacity and repurpose it for energy infrastructure and growing data center demand. So we're now seeing a car company enter this massive space where we continue to hear about this opportunity, and that this opportunity, and a lot of the guests we're talking to saying they think a lot of the winners in this are going to be those who can actually supply some of the capacity. I wonder if we'll see other car companies follow suit.
Yeah, they definitely put a roadmap out for, hey, you have these assets, you're maybe going to use them differently. This is one of the more intriguing options for how they're going to use them, but also shifting their production to where the consumer is, and that's, at least in the larger vehicles, favoring longer range hybrid vehicles as opposed to pure play plug-ins. But he did say, Mr. Farley, that is, they're not going to cede the future to China, and that they are adding that newer line of lower cost EVs as well. So it's not completely ripping the Band-Aid off from the whole operation. It's shifting the focus where maybe those light duty, heavy duty pickups, maybe that's more of a gas powered vehicle, hybrid at the very least, and then some of these smaller vehicles can compete with the BYDs and the like.
Well, we're seeing the honesty met with positivity today for Ford, trading up about 0.5%. I'll take you to Alex Coffey, co-host of Next Gen Investing, for breaking that Ford story down for us. I do want to welcome in our next guest, so talk more broadly as we head into the end of the year and some of the action that we're going to see. And into 2026, joining us now, Larry Werther, the chief U.S. economist at Iowa Capital Markets America. Larry, thank you for being with us. I'd love to get your thoughts on, we're seeing more red, the NASDAQ trying to find itself in the green today, but, a bit of a choppy start to the week, and we did get some data this morning. I'd love to get your thoughts on the action we're seeing in our last full week of trading for the year.
113-249-1716-0605-832.
I would add to this conversation simply that maybe there's a bit of a rethink going on.
Oh my God, it's the capture card, bro. The Garmat video capture card. The order number is 113-249-1716-0605-832.
Not enough to prompt additional aggressive action by the Fed in the near term, but it suggests underlying softening in labor market conditions. Headline retail sales were soft, although the control number was pretty good. I would argue that at least a portion of that was related to higher prices rather than a pickup in real activity. So I think as we head into 2026, there has to be an adjustment in how investors are thinking about the real economy, Fed policy, relative valuations in the equity market. So there's certainly a lot swirling around.
You're tracking close to 3% growth in the third quarter. You are saying you had a markdown for fourth quarter growth because of the government shutdown, but you're seeing expansion lasting through 2028 in the note that you sent over. What do you think the single biggest reason that we're seeing this resiliency in the U.S. economy is?
By and large, I remain constructive on the U.S. consumer. Recall that the consumer sector has weathered now several bouts of rapid underlying inflation. But all the same, the labor market right now remains pretty good. Shoppers are still showing a willingness to spend, even though consumer confidence has been in the low end of the range of current expansion. So right now, my forecast primarily hinges on the consumer sector. I would add also what I view to be a dynamic business sector. And importantly, I think investors, within businesses, as well as consumers, certainly next year they will be cautious, but I don't necessarily see the thesis being derailed unless I'm projecting that the economy remains on a growth track over the forecast horizon.
And I'm looking at your thoughts on this K-shaped economy that we keep talking about, especially as we got a lot of these retail and restaurant earnings. Is upper income spending going to continue to hold up? And do you anticipate in 2026 and even beyond that growth becoming increasingly more uneven?
So to answer the first part of your question, I do think that upper income spending will remain on track. Wealth positions are elevated. Cash on hand and liquid assets for upper income individuals are still strong. Moreover, there are elements of the One Big Beautiful Bill Act that are going to benefit upper income individuals, namely the increased SALT deduction. So I think all of that will provide a tailwind for ongoing consumer spending for your upper income individuals. Middle and lower income individuals, it's more dependent on the labor market. Their marginal propensity to spend is contingent on solid underlying labor market conditions or moreover perceptions of the labor market, which I think are holding up all right now, but I think we could see some additional weakening among middle and lower income individuals next year, especially if the labor market continues to soften. So I think what we'll see next year is a continuation of this K-shaped story with upper income households holding up well.
Well, they didn't even send that money on my card, bro.
Households are the key growth engine in your thesis. We've got unemployment rising. We've got delinquencies climbing. What's the tipping point where you see consumers really starting to pull back in any part of our K-shaped economy?
Well, certainly, the linchpin there is the labor market. I remain guardedly optimistic, but all the same, 4.6% unemployment that we saw today was my projected peak, which I had expected to be reached in the first quarter of next year. So that begs the question, should employment start to contract? Should the unemployment rate drift towards 5%? I think there will need to be a bit of a review of my expectations for the consumer sector. I would add, though, Marley, not to be underestimated, the business sector certainly pinned on the AI story remains solid. CapEx was certainly strong in the second half of the year thus far. So the consumer, again, is the linchpin for my projection, but certainly we don't want to, throw out thoughts about that decent business investment as well. But again, specifically with respect to the consumer, hinges on the labor market, and we just have to watch the next few months worth of data very closely.
Certainly, and I was going to ask you about you foreseeing that we were going to see an unemployment peak around 4.6%. We got there a little bit faster than you predicted, so I'm putting you on the spot here because you haven't had time to adjust any of your thesis. But do you see now that could push even higher? Especially as Powell has suggested that payrolls may be being overcounted. Are we seeing job losses under the surface that are going to come to the surface in early 2026?
Continue. Can I send you a message to verify your account?
Yeah, man.
Part of the jump in November was noise. Recall back in October there were 160,000 layoffs among federal government workers. That was tied to previous
Oh,
labor
retest on
force
her
reductions related to Doge efforts in early 2025. I think that introduced a little bit of volatility into the unemployment numbers, so near term you could see them ease a little bit, maybe the rate fall back to 4.5%. I would add also that unemployment claims are still range bound. The NFIB index last week saw a bit of a positive move in the labor market indicator associated with the survey. So I'm still trying to look at the labor market from a glasses half full perspective, but I do especially think in light of Powell's comments about the overcount in payrolls, in light of some elements of the report today, I do think caution is warranted. But again, you can't jump to conclusions based on any one report, especially when the Labor Department noted that statistical analysis could be hurt by the government shutdown, that your standard error for data over the next couple of months could be wider. So I'm in wait-and-see mode, but certainly I remain vigilant on the labor market.
And Larry, last question here. I want to talk about AI because you mentioned it there. We've seen AI investment as a bright spot, even with, this pullback that we're sort of seeing in the last couple weeks here. How much of overall business investment growth is now dependent on AI and us being in the early innings and not in this bubble scenario that keeps getting discussed?
I would say a good portion of it. I mean, there's even been arguments that GDP, which is really the best metric that we have on CapEx, is undercounting to a large degree just the amount of AI investment that's going on under the surface. Look, the AI story is a compelling one. I think we are in the early stages. We're starting to see some knock-on effects on productivity. So I think over time, AI is transformational, and it means outstanding things with respect to the U.S. economy. That being said, though, there are always winners and losers in the early stages of investment. We saw the dot-com bubble. We saw this earlier with fiber optics and other communication-related technology at various points in the past 2 decades. So at some point, I don't think I'm going out on a limb saying there's going to be a repricing of certain AI stocks, and maybe we're starting to see the early stages of that. In total, though, I think the AI story is broadly compelling. Again, though, it's just in the beginning. There may be some firms that seize the day and others that ultimately are valued too high by the market currently.
Larry, we appreciate you. Oh, continue. Go ahead.
Nope, that's it. Thank you.
Well, we appreciate you taking the time to speak with us. Some great insight there. That's Larry Williams, the Chief U.S. Economist at Daiwa Capital Markets America. And we've got plenty more for you to come on Trading 360. Of course, we've got the big three coming your way. 3 stocks, 3 charts. Kevin Green will go through the technicals for us, and Jessica Inskip will take us through her picks. GE Vernova, NASDAQ, and Seagate. That's next on Trading 360.
Thanks for verifying your account. Are you calling about your order that includes your Samsung Galaxy S01?
No, but I need to speak to someone.
Now, in a few words, tell me, what can I help you with today? For example,
Give me someone to speak with, like I just said.
my order didn't arrive,
Oh.
or I'm waiting on my refund. Sorry, I didn't quite get that. How can I help you?
I need to speak to
Just to
someone.
give you some examples, you can say things like, my order, my return, or refund. In a few words, you can just tell me what I can help you with today.
There's somebody on here.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories, and big markets
Could you
move.
please provide some more
Minute
details about
by
the
minute
problem you are
breakdown of the
experiencing?
biggest headlines,
I never got my return. I'm trying to get this one. Got my return, bro. All you gotta do is get
as the
anybody
bell
on the
hits
fucking
and the
phone.
markets react in real time. Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way.
To verify,
But there's Carl's Way is the best
is
way.
that correct?
Is it? At Schwab, how I choose to invest is up to me.
Yeah.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
I am transferring you to a customer
Where are you going?
to help you further.
Schwab.
For customer support in Spanish,
Schwab,
press
I'm on
9.
our approach to wealth management.
Otherwise, please hold.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks and 3 charts here. Kevin Green joining us today to take us through the charts, and here to take us through the trades is Jessica Inskip from StockBrokers.com. Great to have you both with us today, Jessica. I'd love a big picture thought on the market action we're seeing. We got some important data this morning, some of it, albeit backwards looking, but, important numbers nonetheless.
That is where the quality of the data is certainly important, and we're seeing that key theme emerge, which is the bifurcated economy and that K-shaped economy. But I do want to point attention to that unemployment number around 4.6. During the FOMC press conferences, I feel that Powell gives us some really important instances, and this brings me back to, I believe it was May 7th of this year, where we had unemployment around 4.2%, and he characterized that as low and consistent with a balanced labor market. The phrasing was in the fours, so I've been watching since that moment. Anytime we move from the low fours, so above 4.5 or greater, which we have, so I think it's going to be interesting to see any commentary we have from him from here, but I think that this actually warrants more of a cut. I think we might have a reacceleration perhaps next year because of fiscal policy and things like that. But if the risk is to the labor market, and we categorize this risk as low for employment being balanced, and now we've moved out of balance, so that risk is more skewed towards the labor market, I do argue that this warrants more of a cut, which should bode well within markets next year, and I don't think that's what the market is pricing in right now. So I think something to pay attention to how rates react to all the economic data we have until the next meeting.
Yes,
All right, so let's get your first pick here. We're talking about GE Vernova. They've had a very good last couple days. They're up almost 9% just in the
I
last
sent my
week of
capture card
trading.
back, and
You
I'm
walk
trying to
us
see
through
where
this
y'all
pick
put
and
the
what's
money
left
at.
for you.
I just was talking to somebody,
Absolutely.
and he said a
We've been talking
MasterCard.
quite a bit about data
I think
centers,
y'all
and
said
actually
this
going
in
into
my PayPal account,
2025,
but
that was one of the key
there.
themes that I called out was
I was
data
just
center
not seeing
construction,
my
infrastructure,
college
industrials, and
now,
also
they
retail trading.
overdraft like
GE
$2.
Vernova goes
And
into
I
that
probably
data
did
center
that with that
play. It's
with
becoming a critical
refund.
power
I sent
supplier
that
for AI
stuff
data
back
centers,
maybe
but there's grid
a couple weeks
delays
ago.
that push
3 weeks
customers
ago. I
toward
don't know how long.
on-site generation.
I was
And
trying to see what
why
my
this matters
refund
for
went to.
GE Vernova, data centers are
Get my
turning to this
balance.
on-site power because grid interconnection timelines, those build-outs there, they take a while and they're very uncertain, and we want to see fiscal policy follow through, and I think they can be a beneficiary from that. Additionally, we've got a shift to this high voltage power
where'd you guys-
creates new opportunity for them to earn customers, but I
I
want
mean,
to
it's
look
a
at
bunch
the
of cards on
backlog
my account,
due
but I'm
to
trying to see where y'all
this
put the money at.
issue, if you will, of longer backlogs. It's high quality and it's on track, especially as we go into next year, and then
It's the capture card.
2027
That
due to
silver
the way
one.
that they have conservative order
Order
booking.
ended in
And additionally, there's
8/26.
expansion, but what I like is their execution discipline. They require permits,
I mean, it's
storage
only one
fees,
capture
and
card that I
supply
ordered that
stock
I'm returning
with
with.
rare minerals, and that reduces risk with those
Thank you so
delays.
much for that. And do you have the last price
So
of
they
the
take a look at the chart for GE Vernova.
What are you talking about?
They had a pretty meteoric rise from the tariff
I
lows
just
we
told
saw
you
in
it's
April.
a bunch of cards on my account. I have all the card numbers on my account.
the order number?
I don't want no. I just told you the last 3 was 832. I just said that. Yeah, the entire order number is the entire order number, since you're not listening, is 113 249 1716 04 05 328. I just said that. 832.
Alright, thank you so much. Let me just double check it here on my end, okay?
Yeah, it's only one Garmag video capture card that I'm returning. It's right there. Like, I hate when y'all do that. What's the number? What's your name? Like, you got my information. You're in my account. You see the return I'm talking about? That one right there. That one right there that we both talking about.
Alright, thank you so much for that, children. As per Secretary, you refunded this process on December 9 on your MasterCard.
I know that's what I keep saying, but is that my PayPal card? Because the money's not on there. So I was trying to see where y'all put it at.
Oh, for this one, this is not a PayPal, it's your MasterCard.
Yeah, see,
for this one, we just sent you the email about it.
No, why y'all put it on another card that I didn't even spend it? That's the question.
If we're going to trade it very much, we're talking about the NASDAQ here. Ticker
For this
NDAQ.
one, it's showing
What's
here
that
the
NASDAQ
NASDAQ
for you?
using your MasterCard.
So why ain't the money on there? That's why I'm saying, like, if I pay with my PayPal card, why didn't y'all put it on the PayPal card? Because it's not on there.
Expansion of market access that starts with overnight, that's even event contracts, but we have an increase of retail participation, and that retail participation is going
I'll
global.
just send you
When
an
we have
email so
overnight
you can
trading
see
in
the
this
last
additional
4
session,
digits,
it's
okay?
not
Of the
necessarily
card that was
domestic
refunded.
users, it's global. It's our friends over in APAC that are trading on their timeline. And NASDAQ also has exposure to tokenization and those other
Alright,
types of
children, can you
tokenization that
please check your
allows for
email?
further access, and that's still a key theme that I'm going to see accelerate, or at least I believe to, into next year in 2026. Additionally, there is about 60% of NASDAQ's revenue comes from their AUM-based index funds, and there's recent data that shows investors have been rotating a little more out of active equity funds and into passive equity funds, which means that's going to translate into
Did y'all send it to the card ending in 2394?
Market's going global, but passive investing
Ah,
is
yeah,
growing,
that's the one
which is
that
very
was
good
used
for
for
NASDAQ. They
this
make money off of
purchase, for
transactions
this
and this
video
data.
capture
They're
card.
making moves to
And
make that
yeah, it
expand.
was refunded to the card as
Look at the
well.
chart for NASDAQ.
That is
No, I asked, no, well, the question, hold on, the question is, did y'all send it to the card ending in 2394? Did the money go to that card?
Correct.
That's the
Yeah, you are
question.
correct. On this, yes. And children, on December 9, it was processed or it was refunded.
I don't see the money on there.
For this, I already checked here, children, and I can see that it was refunded to you on December 9. Have you tried to contact your bank about this?
Well, I just spend it, remove it. I should want to say, look at the bank.
With that neckline at $97.50, and if that's going to be the case, you look at the high to low between that cup, that potential cup pattern.
Since I can confirm now here, children, that we have we just processed here $21.19, and it was I can confirm that it was processed on December 9.
This actually looks like a textbook base and potential breakout here over the next month, 2 months or so. So I can see
Okay.
the optimism.
I was just saying, I don't even think I got it, but I'm about to look for it.
Alright, let's get this next
Yeah, you
here.
just
Has
check
a
your
headline of its
statement
own
on
when it
December,
announced
and then
getting
you
included
will
in the
see,
NASDAQ 100 with
and then you will
NASDAQ
see
did
the
its
refund
announcement
for the
was effective
$21.19.
December 22nd. We're talking about Seagate here, who'd already had a really good year up to this point. You know, walk us through your pick.
Absolutely. So part of it, that headline, is important to pay attention to, and which flagged my attention. And then diving deeper, they are of
Okay,
course
thank you
supplier
so
of
much.
data storage hardware, which is used in data centers,
You're
servers, and
welcome.
AI
And is there
infrastructure
anything else
that
that I
we're
can
going to
help you?
continue to see. Then
I'm gonna be sending my phone back,
I like to deploy
just be on the lookout
cash
for that.
inputs, and I love the trade construction and setup
Well,
that
there's,
follows Seagate
you can do-
technologies. So I can sell a 30-day
Oh,
cash input at a
hello?
strike price of around $290. What I'm doing is I'm
Well, that's
creating
always
an obligation
something.
to buy the stock at $290. And earlier today, I could collect a premium of about $20.90 a share. That represents 7% based on a $293 stock price. So that is a healthy premium in a 30-day time frame. The way that this works is I am risking that entire purchase price of $290 per share. Remember, one contract represents 100 shares, but I'm offsetting it by that $20.90 per share, that's 7%, which effectively allows me to buy that at a discount. And the reason why I like to deploy this, if a stock has had a really high run up, I pull up the quote and I see that it's up a large percentage for the day. I don't want to chase that, but what I'd like to do is create a cushion. So essentially I've created a cushion of $42-ish, so $20.90 to the upside and $20.90 to the downside based on my stock price. So this is a long-term bearish, short-term neutral play, and it allows me to add Seagate technology to my portfolio if something happens and we move below 290 a share and I'm spent.
All right, KT, so as you take a look at the technicals, knowing that potential example trade there, how are they lining up?
Yeah, if you kind of look at the technicals, the stock has obviously been in a bullish trend, but you can also make the case that maybe it has run up too far, too fast, just given the cyclicality of the business. If you look at it this time last year, we were in a consolidation pattern, or basically consolidating in a range before that breakdown for the tariff lows. Now, we've been in an uptrend ever since, and you can see that with that purple trend line here. That's going to be the primary trend line. So until that actually breaks, you got to kind of be a little bit more bullish than bearish on this name. But we are also seeing, once again, a defined range to the upside, making higher highs, making higher lows, and we actually got fairly close to that upper end of that support area of around $320. It looks like it's trying to pull back. The 20-day moving average over the last, let's say, 2 months, 2.5 months or so has not been a key area of support. So even though it is for some stocks, other stocks, maybe it's not going to be that significant. So I would actually kind of ignore that 20-day moving average and really focus on the 50-day moving average, which obviously the stock did hit and had a nice hammer candle and moved a little bit higher here. Any type of breakdown below that $240 to $230 range here, a little bit more bearish on this name. The reason why I also kind of bring this up as maybe potential bearish divergence, RSI making lower highs.
Yeah, good morning.
What, you just wake up, bro?
Yeah, my mama was in the hospital last night, so I was talking to her.
Oh, what's wrong with your mama?
I don't know. She was saying that she was trying to go to bed last night, and her head was spinning real bad, so she just had to go in, and she had called me around like 2 something or 3 in the morning, so we was just talking for a bit.
Oh, dang. Well, I'm glad she's alright.
Yeah,
I just got little headaches.
yeah, that's what it was. So,
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smart.
Every trading day at 8 a.m. Eastern.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Platforms and tools webcasts are designed to broaden your knowledge of platform features and resources available to Schwab. You'll learn tips and tricks on Schwab.com.
Alright, so this morning I'm gonna take a 3 trades. I took one.
Best of all,
My third one.
you can ask
I took 675. I took 675.
It's
I
interactive
took
learning
December
at its
25th,
finest.
675
Tune in
puts.
live and watch on demand.
0.5.
Head over to schwab.com/coaching
Right?
and start learning today.
I took them at 0.51 and they ran to, and I took it at, what time did I take? I took it at 9:36:48. 9:36:48. I took those puts. And it went from 0.5, it went from 0.5 to 0.1 to 0.109, right? So 100% are there on spot, right?
Yeah, I
so
see it.
6:30, so at 9:35, at 9:36:48. You can see it at 9:36:48. I took, 9:36:48. I took SPY December 25th, 675 put, right? That joint paid 100% off open, and then I just took. Then my second trade was I took December 25th. I took December 16, 675 put at 0.41, at 950. That stopped me out 20%. I lost that trade, so I made 100% of my first trade, lost 20% of my second trade, and then check his third trade I just took right here. Look, I got in the puts at, I got in the 675 puts again at 0.41, right, at 11 o'clock, cuz.
We're still trying to go a little bit lower too. I see it.
Yeah,
I see it all
we
right here.
rejected the base. We rejected the base. My signal tells me we're gonna keep on dropping until we get a rejection retest, which we're gonna keep dropping, bro. We're gonna drop, and our next level we're gonna go to is 676.22, and if we break below and close below 676.22, we're going to 675 even.
Woo. Well, they trying to hype us up for our Christmas rally too, boy.
Cause I sniped the heck out of the market today, boy. 200% trades caught too. And I did the second trade, which I think you got a level on your chart too, but I got a level at 679.38. And nigga at 630.79.38. Once it gave me a 15-minute rejection on 679.38. Once we retested that level, nigga, I took puts, bro, and that joint got the dropping, boy. Got the dropping,
down here. Boy, we go down here to 639, boy, this is code red, code 10 in the market.
Man, what?
We go way down there, boy. They about to panic.
I'm gonna be honest with you, cuz we got room down, bro. I'm not gonna lie to you, cuz. Like, we got room down, bro. Like, we probably got another, I'd say we'll probably see relief in the market, bro, once we get to, we'll probably see some relief once we get down to maybe 673, maybe around 673. We'll see relief either at 673 or we can see some relief at
There's so much information, economic information that will come in, CPI, PPI, and other pieces of news. You'll get the jobs report for December, for example. You'll get all of that before the January meeting. So I don't think we can hold our breath for anything at this moment. Other movers and things that we've been watching. We had a guest on who picked Merck, and there's still people who are just out there still feeling more optimistic than pessimistic. Oil is at the lowest that we've seen since May, and this is on peace talks with Ukraine and Russia, and that coming together, and that seems to be going well. And some of the laggards are Valero, Occidental, EPAM, Molina, just to name a few. And we have winners too, of course, but most of the laggards.
Yes, definitely on the laggards. But let's talk about one of the winners today. We're talking about Southwest here, and even some of the other airlines all moving in sympathy on this move higher, and also probably combined with those lower oil prices we're seeing. But Southwest hitting a 3.5-year high after getting an upgrade at Barclays.
Yeah, that's some good news there, right? And the price target now is $56. The prior price target was $34. The stock is trading at 42 and change. So $56 continues to show more upside potential for a name like Southwest, ticker symbol LOVE. It's already year-to-date of 27%, and 6 months had a nice run of 36%. The Jet ETF has also been at new 52-week highs. So what is behind the Barclays call, and why do they like what they're seeing with Southwest in particular? They see material improvement in its relative revenue generation growth going forward. They talk about the new commercial strategy that they like a lot. They're very positive on that, and I'll explain that in a moment. And also just idiosyncratic stock opportunities in transports and airlines overall. Let me get back to the commercial strategy that they like and they feel positive. They talked about the assigned seats. A lot of folks remember, you go on Southwest, you don't have an assigned seat, you get a number. I did it for the first time a couple months ago. I couldn't believe it. It's an experience. I mean, maybe people love it or hate it, I don't know, but it certainly was an experience. Bag fees, things like that. Also, just the fact that there's been years of stagnant, if not contracting industrial economy, a volatile travel market. So they put this together and they talk about the revenue generation that this company is likely to see, and in the future. in 2026. So really, you see a record winning streak here, 11 straight days. If the stock overbought, of course, we had a guest on saying that, in fact, he felt it was overbought because it's had an incredible run. 11 straight days is pretty great, but it's a nice move here. And so the new price target is $56. And I will note, as I look at the JETS ETF, I'm just curious because that has been also at 52-week highs, and that too is at 52-week high today. Marley.
Thanks so much, Nicole. We appreciate you breaking that down for us. Southwest, trading higher, up more than 2.5% this morning, along with several of the other airlines, like you mentioned, the JETS ETF up as well on the day. That's Nicole Fedelides. Thanks again for that. Coming up, we'll have our Disruptor segment, and we'll also take a look at trends to watch in 2026, which is a midterm year. We'll be right back.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services.
Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching. Start learning today.
I just get some books.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight investing in 2026. Joining us now is Lucas Downey, co-founder of MoneyFlows.com. Lucas, thank you for being with us today. We've been talking about 2026 and trends to look out for, but something we haven't highlighted much is that it's also a midterm year, and that potentially changes how investors should be positioning themselves coming into that year. You sent over quite a bit of data showing that midterm years tend to underperform. Why do you think that pattern persists? And do you think that the setup is the same for 2026?
Thanks for having me. Yeah, we were looking at some data going back to 1960, and we looked at the presidential election cycle, so year one, midterms, pre-election, and election years. And I think a lot of people are surprised to find out that midterm years tend to be rough years for the market. The average return since 1960 is a negative 1%. And if you think back to the last time we had a midterm year was 2022, markets were basically in a bear market down 19. It changed, and then if you go back 4 years prior to that, it was 2018. Markets were down about 6%. So there tends to be this choppiness that occurs every 3 to 4 years. You look at bear markets, how often they come around. It's usually between every 3 and 4 years on average. And I think it's lines up with midterms. We know that there's going to be a lot of mudslinging that goes on during midterms, and maybe that's a little bit of the skittishness that happens with markets. Maybe people are worried that the control of Congress can shift. So all of these, I think, come into play, and as we look at the markets are trading down, it does seem that some of the big downloads and big mega cap tech are starting to take a breather as we start to see more broadening in other areas of the market.
As we are starting to see some of that broadening and that tech pullback that we've been witnessing over the last couple weeks, are you watching a possibility where this leadership may continue to fade out in 2026, or is this cyclical and we're going to get these mega cap names leading again?
Well, I mean, it's really early to see. We were looking at our data before this, and we noticed that in the month of December, about 80% or more of our inflows that we're tracking are in this small and mid-cap space. So you're seeing a lot of money going into healthcare, a lot going into banks. You're seeing it also in staples and some industrial pockets. And then you really have seen an absence of these continuation inflows into some of these mag stocks. And so, you know, a lot of people.
See, the things I was trying to get going. I was even the stuff that we got placed in, like say like
so it just seems to make sense that there's room for other areas to start to participate in 2026. We do think it's further to go. You look at rates coming down, it just seems like a nice cocktail for leadership shift.
If we see that leadership shift alongside of the historical dip that we typically see in a midterm year, what tactical shifts would you recommend for investors?
So we really like the value-oriented areas. We like dividend growth. So specifically, we're telling our customers to be focused on banks that are going to have some stimulative effects as rates come down. Also, healthcare was abandoned months ago. People hated it. It was one of the biggest underperforming sectors, I think, ever relative to the S&P 500. You're starting to see that start to come back. So there's a real economy type stocks that we think are undervalued. Also, the discretionary space looks very interesting right now. We know that sentiment is pretty lousy right now. When investor sentiment is low, we tend to see discretionary stocks outperform. So, you look yesterday, you see Tesla's doing well. That's one big piece of the discretionary space. So, there's other areas that will be some tech names that are going to work, but as far as just, putting chips in and hope everything goes up, it might actually be a bifurcation.
Specifically want to hedge against the potential volatility that we've also historically seen in a midterm year. Where might they look, or where might they put their money?
That's a great question. A lot of people have been putting money towards precious metals as a type of hedge, just in case we have some issues. People are worried about the amount of debt that is out there. Other areas you could be looking at is you can hedge on the S&P 500. Why that could be interesting is if 40% of the S&P is mid-cap tech, those do tend to underperform. You would expect that the index would be relatively muted there. But we still are very constructive on stocks. We just think that the blinkers, could start to shift a little bit. But overall, this is not a bearish call per se. It's just more of a be open, be willing to expect that there could be some change in leadership.
Fascinating, Pat, because we really appreciate you bringing that research, but also highlighting the importance of acknowledging it is a midterm year in 2026, and that could be what potential changes to the market activity we're seeing. That's what we found from
You know what I'm saying?
Time for our disruptors segment. Correspondent is here with today's company. We're talking about Roku after Morgan Stanley double upgraded shares to overweight today. George, what's behind that call?
There's a few things in it. Of course, there's some political element to the call as well for Morgan Stanley, but one of the broader things about Roku, first off, is the pivot of the business. It really was traditionally sort of a video on demand or ad-supported business. They're actually moving quite rapidly into the connected TV space, where they're going to be moving or pivoting towards subscription services. So it's sort of a ad monetization model, but also a subscription-based model. The other thing about Roku is that they also have ad technology in the background, which competes with the likes of companies like Trade Desk, and that's sort of a value tech proposition for the underlying business. Now, if you look at the call for Morgan Stanley, they did double upgrade it. They moved their target quite aggressively from $85 to $135. So they do see the connected TV growth that I mentioned just a moment ago as a primary catalyst. They also see the ad market actually quite healthy going forward. And particularly, they suggest that the political advertising next year is going to be very accretive to Roku plus sports advertising, as well as the fact that they see the profitability profile for Roku improving to potentially profitability for the first year. And if you look at the last 4 quarters for Roku, they essentially lost about $28 million, which again is a loss, but nonetheless it's still a small loss compared to the $4.5 billion in sales. Just going back a couple of years, in 2023, they lost $700 million. So the profitability profile is improving alongside maybe some of the catalysts that Morgan Stanley suggests. And like I said, the political ad space looks pretty promising next year, sports ads, but also the connected TV subscription-based model that we're moving into.
Yeah, and interesting they're highlighting that connected TV should be the fastest growing area in the healthy advertising market, and we saw these connectivity-enabled TVs as one of the top items bought during Cyber Week. So, an interesting setup there. But as we look to trade this for example purposes with Roku, how would you structure an example trade this?
Okay, so one of the things about Roku, and I didn't suggest a chart on this one, but you have to look at a longer-term chart. Instead of basing pattern, potentially could break out. One of the things you have to keep in mind too is maybe earnings coming up in February. Just something that I suggest keeping in mind. If you look at the daily chart on Roku, it's having a tough time breaking through the 110 area, which is some levels corresponding back to October even recently, the last week or so. So with the markets being relatively tepid or weak, not moving higher or lower, so let's just call that for what it's worth. I do think there's a possibility that Roku pulls back, but it's still in a nice daily uptrend. So I'm going to suggest here that if you want to play the pullback but also stay bullish with some premium harvesting, you can sell the put spread going into January, the third week of expiration, and then sell the 105.95 put spread. So sell 105 put, 595. You can earn about $2.50 a share or $250 a contract. So the whole premise behind the trade is to essentially hold the 105. Your break even is a 102.5. Your max loss is 750 on 250 premium earned. Now if you're in the stock, it's 95 or lower by expiration. So again, the 50 period moving average is right around these levels, split between the two strikes around $100. But nonetheless, again, there's a possibility that Roku breaks out, but it's too soon to tell.
All right, well, Roku trading down just ever so slightly on the heels of that double upgrade here, up down about 1% at 107.96. Thanks to George Tillin for the news and that example trade there. And coming up next, we've got our 360 round. We'll take a look at AI as we head into 2026. That's next.
Trading with Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Putting your trades into focus on Thinkorswim Desk. Tailored the platforms that your unique goals, only endless customization, and track market trends with up-to-the-minute news and insights. Trading with Schwab.
I'm Alex Coffey. And I'm Jenny Moore. This is Next Trend Investing, where we track the trends shaping the stock market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a major platform for
Only on Schwab Network.
I have a question for you. Who ran that first-time investing?
Brenda had a Schwab before the Brenda scenario. Worked hard and the conversation unfortunately passed away. Likewise, Jennifer, she was with the journal, helping with the state. Two grandchildren planning for their college education. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
And that's what my
trade ideas, structure, options, for earnings, to volatility. We bring decades of trading experience every second.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at 2 Eastern, live on Schwab Network at schwabnetwork.com.
But I'm making everybody look like, wow. Say like if I say somebody might have this going on, what is that? Say I'm like, I might just throw these investment and let that shit ride up. Only way I do, especially if they just actually get their money back. But if I'm trading it, like if they know I'm getting it traded, most of the time I'm getting that version of principal and I'm gonna give you some on top. It don't be like, right, anything I make I keep. You know what I mean? I don't think about that. But they have their principles still. And then I make it worth their while. They ain't even have to put the
Everybody's going to try different things. Doesn't mean, of course, it's all going to be a success, but you'll see companies experiment.
50% on the thousand will be another 500.
And Noah, coming to you, we continue to have this conversation about AI being like an arms race here. So I'd love to get your thoughts on who's actually winning right now and by what metric investors should judge that.
Sure. So I think right now, when you look at rankings at least, and so there's different approaches on how you might rank it, certainly just on the quality of the software and the results that you get, or from an investor perspective, you want to look at, market cap for some of these companies, based on model performance, the LMSYS chatbot system that tracks and ranks these different AI programs has Google at number one, but with XAI as a close second, so those seem to be, I'd call them almost more retail friendly, not used institutionally. Anthropic, which comes in third, is one that you see as having probably more corporate usage and support. But certainly from an investor perspective, right, which ones are going to make it, which ones have the opportunity. You've got companies like Google and XAI that have ecosystems to use it. Anthropic is well to extent with Amazon. OpenAI is going to really have to compete for business, try to pull in search, try to pull in advertising, try to sell an institutional clients. And so picking a winner at this point might be too soon. You could probably do it this where they're public, invest in all of them. But I think it still remains to be seen who's going to be a winner. I still think you'll have an environment with multiple winners, not hundreds, but certainly tens of winners in the space.
You brought up the consumer and sort of how we have this bifurcated user of AI, where some are all in on AI and others who are just sort of shrugging their shoulders at it, not really interested. In the next year, as AI really becomes more a part of everyday life, where are daily users, do you think, going to see the biggest impact, including those people who are not actively seeking it out?
Yeah, so that's going to be the real challenge, right? You've got to move beyond this idea of chatbots. It's literally the most boring aspect of AI. Sure, they're kind of fun to use, but it's going to be things, to borrow a phrase from Apple here, they want their technology behind the scenes right now up front. That's where AI really wins. So, for instance, companies like you can now bring big smart cameras for your house, and not only can they sort of identify people versus say a dog coming up in your yard, but they can actually identify the people via facial recognition. Now, there's a lot of controversy around that, but that is one aspect. We're getting previews right now for CES. We've already seen like a toilet that analyzes your urine for a health insight, mirrors that can actually measure your blood pressure. These are all instances of machine learning and AI in our lives, but it's not something you directly pick up and it's like, I am now using AI, and that's really going to be the future here. We're going to see just everything around you kind of get smarter. You're not necessarily going to know how it works, what it's doing, what it's even called, but it's going to be all these features sort of improving our lives daily. At least that's the goal. I'm sensing a lot of blowback right now from consumers who are either tired of all this or sort of, there's a lot of promises, plus with the threats of eliminating jobs, it's not helping. So I think there's a lot of challenge here to build up confidence in users.
And Noah, last question coming to you, and it's sort of a double question, and we're a little bit tight on time, I'll warn you before I ask it. What do you think the most overhyped AI trend is coming into 2026, and what's the most underappreciated?
I honestly think it's probably more retail usage, sort of mom and pop, and as he just described, the chat box, sort of aspect of things. What's underappreciated is its productivity, right? In the workplace, whether it's design, whether it's accounting, whether it's finance, legal, you've got a big project that you're putting together in an Excel spreadsheet with, two different data sets or things like that. And the ability to accomplish those things so much faster is where I think AI is going to have its biggest impact. And probably, as you mentioned, impact on jobs as well.
Well, I want to thank you both for being with us to preview AI, which of course will continue to be a top theme in 2026 as well. That's Noah Hammond, the CEO of Advisor Shares, and Daniel Rubino, Editor-in-Chief at Windows Central. Also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on schwabnetwork.com. I'll be back with Sam Bonus with Market on Close at 3 p.m. Eastern, 2 Central, but stay with us as Market with Diane King Hall is coming up next.
I'm trying to make it happen.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. The platforms and tools webcasts are designed to help you broaden your knowledge of the platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, make the swim, and local-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning and experience. You get live or watch on demand. Head over to schwab.com/coaching. Start learning today.
You can get through at the bottom, you might find the bottom side of the end.
Yeah, like I brought down like
I think one of the most important things is you're making a play for a risk-defined way here for it in earnings.
Be a further downside area to watch.
Streaming live and Schwab Network. Streaming 24/7, anywhere, free. SchwabNetwork.com. 2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network. I'm Steph Lattice, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
I still love y'all. Somewhere in there, I think that's gonna help me. I might talk a lot of shit, but I mean, I love everybody still. I know what gaslight is. I might gaslight a little bit, but I'd be like, bro, I'm just playing, Right. My boy is really trying to get over on that nigga and tricking nigga and shit. I don't do that.
I try to get 2 times a year. Do not capitalize it proper entry.
Yeah, that's what I'm telling you out. Before I went to that pantry, I said, bro, I need a whole 600. I said, bro, I'm gonna pay the loan back and get the loan back out. I can give you money right now.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up 1 noon Eastern here at the New York Stock Exchange. The stocks are taking a step back today as investors process the latest economic data, which shows some weakness in the economy. Let's get right to it to a check of your scorecard as we hit the lunch hour on Wall Street. The S&P 500 right now is lower by about 1/3%. Seeing broad-based weakness across sectors, but again, off by just 1/3%. So we'll see if the bulls manage to turn things around later in the day. The Dow right 500 flipping just above the flat line right now. We'll see if that holds and builds throughout this hour. Russell 2000 lower by 0.5%. Here's the roadmap for today's show. We'll look at example option strategies for Tesla, which has made quite the comeback recently. Plus, the team from Portfolio will be along with new sentiment data on DART. It's got earnings this week. And Lennar is also on our radar ahead of its earnings. Those come after the bell today. Now that we've got the roadmap for today's trading action, it is time to bring in my co-hosts and trading veterans. You've got Tom White in our Chicago studio. Kevin Ing's joining us live from Gazebo. As you know, we've got you covered from exchange to exchange and beyond. All right, we got a slew of economic data today. We had October numbers showing the economy lost 105,000 jobs, but November was better than expected with a gain of 64,000. Tom, I want to go to you first and ask the question, how do you square all of this?
Well, I think it kind of is reflective that the jobs market is still weak at this point and not improving like maybe we anticipated. Maybe there's more pain. I think if you take a look and take a deeper dive into the numbers, the losses of government jobs, we're at the lowest level that we've seen in a decade, basically, on those numbers. And that's probably a good thing as you shrink the government here a little bit, but it's impacting these headline numbers at this point. I think one of the things that sticks out the most is that unemployment rate up to 4.6%. It's the highest level since 2021. So we're still at full employment, guys. And I don't think it's anything to kind of get excited about or volatile about at this point, but at the same time, it's just kind of confirmation that the Fed, after 3 rate cuts this fall, is spot on, just because of the weakness that we've seen in the jobs market. And if you take a look at maybe the wage growth, a little bit came in a little bit lower than expected, but on a year-over-year basis, about 3.5, 3.6%. So that's a positive also. That's starting to come down a little bit. But yeah, I think if you take a look at just the jobs number in general, it kind of confirms what we've already known, that the jobs market is weakening. We're in that no hire, no fire type situation. But I don't think there's any red flags, and the market's kind of reflective of that. There's not really any red flags at this point.
Not really any red flags at this point. And to me, that was initially the read when the jobs numbers came out this morning, Kevin, in which we were watching as it looked like the direction of the market was going to be higher. Now, listen, we were going through a lot of economic data fast and furious because we're playing catch-up. What's your read-through when you think about this and the market reaction?
Good morning, Diane and Tom. Listen, I see things differently. I think the market is getting this slightly wrong, and here's why. I think this is an economy with private payrolls growing and government payrolls decreasing, not by weakness, but by choice, by an on-purpose shrinking of the U.S. government. This month, another 6,000 jobs lost. Now, all those people that took the early resignation, deferred resignation, that hit during October. That was 162,000 jobs. But those were the people that took that. So that's not necessarily people getting laid off. They took early resignation. Now, that means year to date, since President Trump came in office, since January highs, 271,000 government jobs have gone. That's how much government jobs have gone down. Yet the private sector continues to grow. Now, the unemployment rate did tick up 4.573, rounded up to 4.6, but labor force participation rate went up by a tenth. That negates some of that increase. So I think with the wage data coming down, remember, wages had exploded during COVID and the government spending that came after that. Those wages are starting to come down now. The inflation picture is looking better, and the overall path for lowering interest rates is looking better. I think this is a U.S. labor market switching from government jobs. Remember, the Biden administration, last 12 months, averaged 41,000 jobs a month. Average. Now, we've lost 270,000 since then. I think this is a much healthier private sector than we're looking at here. Not perfect. the higher interest rates did their job, which was slow the overall economy. Now it's time to get them down to neutral or maybe even a little lower.
You know what is speeding up, or I should say flying higher? Shares of Southwest. Those are taking off today after Barclays upgraded this stock to overweight. And it's been catching some momentum recently. It looks like the analysts like the direction that the company is going. Bags don't fly free anymore. You've got to sign seats anymore. Tom, what do you think about this take when you look across the analyst views?
I don't know. I think if you're an investor in Southwest over the past few years, you're finally going, it's about time, maybe to management at this point, because now they're going to try to compete on equal footing with some of the bigger names in this space, and that's Delta, United, and American Airlines at this point, getting rid of those no bag fees, assigned seatings, reconfiguring some of their planes. It's probably going to be a benefit for them. They're going to start opening some airport lounges too, because they realize what the other big three have stated over the last couple of years, that premium is outperforming. People will pay more for premium seating. International is booming, and then business travel starting to come back. So that's a positive for this company. I think one of the caveats that you have to look at that Southwest is on a 12-session win streak, hitting highs that we haven't seen for 3.5 years. But at the same time, look at the price of oil, crude oil. What does that mean when you're at basically 5-month lows in crude oil? If we break down through 55 and go towards $50 a barrel, that's going to help their margins immediately, because if they're not doing that much hedging, you've got crude oil prices just streaming down. Jet fuel prices will start to come down, and that goes right to margins immediately. So that's been a benefit, because it's not just Southwest that's rallying over the last 2 weeks. It's Delta hitting record highs. It's United Airlines. It's American. They're all doing really well because they haven't seen any pullback in demand at this point. We are in that holiday travel season, so that's a benefit also. But you start taking a look at crude oil and jet fuel prices going down to levels that we haven't seen for years. That's going to be a definite benefit for this company, on top of the upgrade that we saw at Barclays today.
Okay, Kevin, what's your take when you look across Southwest and the momentum it's had recently?
Diane and Tom, there was a time not long ago that Southwest was one of the premier airlines in this country, right up with all the efficient names like United and Delta, and it lost its way. It forgot to update their technology. It had that horrible Christmas season a couple years ago, and it's been in a winter ever since then. So slowly but surely, this is still a well-run company, but they're clawing themselves out of this, getting their technology up to date, becoming a real airline where you have seats and all these things that the other assigned seats and boarding and luggage and all the things that make these other airlines more profitable now, but more legroom, by the way, too. You're not just packed in there anymore. So the tweaks that they're making are finally starting to pay off, and this is a company I think has a fairly bright future if they don't have another one of those mishaps like they did a couple years ago. That was brutal, and it took forever for this stock to recover from that. Maybe it's starting to now. The Barclays upgrade signals that maybe they're through that really rough period in their history.
You got a chuckle out of me, Kevin, because when you said now we'll have seats, we always have seats. It's not like it's the bus where we have to hold on and hope we don't fall. I know, I got it. You caught yourself. You caught it. It's been an outperformer year to date compared to the S&P 500, but let's go from the skies to the ground. We got Ford in focus today. Initially, those shares were shaking off the news that the company will take about $19.5 billion in special charges. But now, as we hit the afternoon hours, shares are, under a little bit of pressure. And Tom, what's your take when you look across this? Because initially it looked like the market was shaking this off and saying, okay, it looks like some of this was in the past, so we don't have to account for this. What's your thought?
Well, I think if you take a look at the legacy automakers, and GM's right in there, GM's hitting 25-year highs today, is the fact that they've become a little bit more flexible as far as pivoting at
this point. If you take a look at the push away from EVs, they're going to start ramping up hybrid. That seems to have worked so far. They're going to continue to do that, dropping this higher priced F-150 Lightning that wasn't selling well because it was such a high price point. Internal combustion engines, ICE engines, they're cheaper to produce, and they've still got great margins. And the companies kind of made that realization that, hey, we're not going to pivot into EVs completely. And then you start looking at the regulatory side. A lot of what the previous administration put into place as far as probably goals that couldn't have been met, that they've slapped onto some of these automakers. They're kind of pulling back from that now. And that's going to be a benefit for the automakers at this point. Consumers are still stretched at this point, but the activity within this space is still pretty robust at this point, even though the prices are high, because the consumers actually pushing loans for these automobiles down to or out to 7 years, and maybe even further in the future. Who knows? But at this point, I think the things that we used to look at with the legacy automakers like GM and Ford was that they were slow moving, right? But now these new CEOs are getting in there and they're pivoting when they have to. And they're making probably better decisions at this point. But going with the hybrid strategy, that seems to be working. It doesn't hurt that fuel prices are coming down. That's a little bit more money in the pockets of consumers also. If you continue to look at just the metrics that you've seen out of the automakers, they haven't seen a real big pullback. The biggest pullback's been in EV sales at this point, and that's why they're pivoting away, just like GM took a big hit as far as billions of dollars that they've kind of wasted, and Ford, they've thrown in billions of dollars since 2023 into this, and now they get to pull back a little bit, and I think that's what investors are looking at here.
And the EV space has been more challenged this year. Kevin, what's your take when you look across Ford and the announcements they made about the charges and just the impact to shares?
I think this is a major mea culpa by them. The good news is, when they took this $19.5 billion charge to basically wind down a lot of their EV stuff and transition back into a hybrid model. And by the way, kudos to Toyota, who, when everyone was rushing towards EVs, they stayed with the hybrid model. They got a lot of criticism for it, and now it's turning out that was the right model for them, the right business model to do. And this, I believe, that this country, from an infrastructure level, is not ready for EVs, and now you're starting to see that. There was a government push into EVs. Those numbers were not realistic, and now everyone's adjusting back towards normal. Internal combustion engines are still extremely popular. The future is still going to be electric cars, but it's further out unless you can bring those prices down. And when Elon Musk, when everyone was criticizing him for bringing down and cutting margins, lowering the prices, this is why he basically priced them out of the business. And so they couldn't make it work. So it's a good move by Ford. The stock actually rallied for a while because they were able to raise some of their full year guidance, but all things considered, this is an exit of the EV market by Ford, guys.
Let's talk service now, you guys. It's gaining some ground today. It had been weak recently. It's got a mixed bag, though, of analyst adjustments. You got Guggenheim, who's upgrading it to neutral from a sell. You have Mizuho, though, lowering its price target. They are still constructive on it, though. Tom, what's your take?
Yeah, I think it's getting bifurcated from the analysts in the space. Now, you look at the Guggenheim report, that guy was spot on. The stock pulled back 35% from those all-time highs that we saw about 11 months ago. So he's been spot on. We're down 35%. We're in bear market territory. And I think this is a reset. The amount of money that they're throwing around at this point, whether it's the potential $7 billion acquisition of Armis, the MoveWorks acquisition was $2.5 billion from earlier this year in March. There's rumors that they're going to spend another billion on another company. So they're in this M&A activity at this point. But maybe there is a reset due. You've seen a lot of the software as a service stocks taking it on the chin recently. because your margins and growth rates are starting to shrink a little bit. But this might just be that reset that we need. But I think investors probably want some stabilization. Stock's up over just 1.5% at this point
This
today.
is an up and coming.
Maybe a little bit warranted at this point after a massive pullback.
All right, let's some pitching. Oh, Kevin, actually, your thought on service now.
Guggenheim analysts got it right. The other two, D.A. Davidson and Mizuho, they're chasing the stock lower. Guggenheim had a sell. Now he's neutral, playing this much better, staying ahead of the stock in terms of an analyst. You don't see analysts do that very often. Kudos to him.
Absolutely. All right, coming up, we got bull versus bear. The guys can get their example trades put together. For Tesla, it's been grappling with some resistance today, but listen, a record is closer in sight than further away.
Right.
More fast market after this break.
That's what I was saying. That's why I put my face on her, bro. I mean, I got cameras and shit, but it's like, bro, niggas don't need to be knowing exactly what I look like, where I'm at and shit. But I got kids, so I know around, nigga. I want to go out with my kids and not have to worry about, hey, that's the game. You might want to take your chain, hey, you might want to. I don't got time for that. I don't got time for that type of shit. I don't got time for that. Me neither. So the busy know and do things don't do that. I feel you 1,000%. I ain't got about it, I don't need this.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done it. Same goes for where you invest.
I got plans, cuz. That don't involve more.
Welcome back to Fast Market here on Schwab Network. The way Tesla
I understand. I want to do the same thing. That's why I want to move, like you said too. But I just didn't know exactly. It has to be somewhere where I can just see some shit, and that should be protected. And it gotta have no space.
17th
Yeah, not for real. Not for real. Like I said, me and my wife and my kids, nigga, we would dip. Get a battery here, nigga, see ya. We're going to be here.
They got old block, they got all kind of little weird shit over all these little pop-up games and shit. Cause
yeah, I ain't got time for that.
That's why I say, like,
y'all niggas can have all of it. That's crazy. All you niggas wanna die for a street that your mama's renting. Your mama don't own a house, and y'all, none of you niggas own a house on that street.
Coming to the flat line. Now it's higher. Buy more than $5. If it closes at these levels, we'll hit a new record. Kevin, what's your take?
I think there's big momentum here. I think the news out of the other car companies is actually good news for Tesla. You saw the note that Mizuho raised their price target to $530 from $475. Hitting the tape right now. Morgan Stanley, here's the headline: seen meaningfully expanding robotaxi fleet in 2026. All the futuristic things we were talking about with robotics, robotaxis, full self-driving, those are not the future anymore. Those are coming soon. And now some of the stories coming out that Tesla, if you want full self-driving in those cars, it's a software update. You don't have to buy a new Tesla to do that. So all that is a software update. So Tesla has got massive momentum now. You're starting to see it in the the name, and it's hitting new highs, Diane. I tell you, I'm a big fan of the news flow, and the news flow in Tesla is all positive right now.
Yeah, the news flow seems to be on its side in an upbeat way, especially lately. Tom, what's your take when you look across Tesla?
Yeah, we talk about this one quite a bit. The price of this stock is not based on EV sales because if you looked at November U.S. sales, they fell about 23% to about 39,800 from over 51,000 a year ago. So it's not, the positive price action, as Kevin mentioned, isn't because of EV sales at all. Those are going away. Those sales are starting to deteriorate due to the fact that you don't get the tax credit anymore, and people are switching back to ICE engines or hybrid at this point. But we always talk about this one. It's bifurcated, just for the analysts or individual investors. You either love it or you don't. And you take a look at the expectations moving forward. Robotaxi roll out to over 30 cities in 2026. That's what they're talking about. They're continually upgrading their full self-driving. They're trying to work in the fact that they can get rid of the driver in the robo-taxis that they existing have right now in Austin and another city, and that's probably a benefit for them. You throw in the humanoid robots also, and the expectations on that side. Yeah, there's a lot of hype around this stock. It's run up pretty far, pretty fast, back to those highs that we saw last December. So yeah, it seems like the momentum's with this one.
Yeah, and I know we have a headline up saying the all-time high of 488. That was an intraday high. So same thing as that. It was all about this time last year. The 17th and the 18th were key dates on the calendar as it relates to those highs before Tesla. So let's get into the example trades. Kevin, let's start out with yours. What's the approach today?
So the paper money trade that I'm looking for, I'm the bullseye of the bull bear discussion, Diane. And I looked at something. Remember, the good news is you have elevated levels of implied volatility in there from expiration. So if you think this thing could go, it's only Tuesday. I looked at a very short term, buying December 26th, selling December 19th, the 495 call calendar. Now, I did this $5 ago. I put it in about $3.90. It's now trading about $4.40 because the stock has moved about $5 higher since we put this in. Now, the vol has come in a little bit. The expected move was 20, now it's about just under $15. So the strikes actually still line up at $495. So the 1 week 495 call calendar, Tom, it's collecting data, it's bullish, and you can extend duration into a type of a vertical spread if it gets up towards 495. But this is one that is looking for a move at or near the 495 strike, in line with that expected move for the day, the expected move for the week, about $21. So a little higher even now. Tom?
Yeah, let's break this one down. 495 strike going out to December 26th. Weekly options that expire in 10 days. Buy that 495 call. Sell that same 495 call in the near term December 19th. Options that expire in just 3 days. Paying roughly about the 390 debit we've got on here.
Too.
As Kevin mentioned, it's a little bit higher.
Any stock that go down, especially in his option, bro, he buy that position up.
So if you pay $430,
that's the secret skill. Like, that's another secret. Like,
$390 per spread. But I think the key here is you want it to go up and grind up towards new all-time highs at 495. But you've probably got a range between just above 470 on the downside and just below, maybe or near 520 on the upside to potentially be profitable on this 1 week wide bullish call calendar here that expires in 10 days. I think one of the big things is you're selling the near-term options that have higher time decay, so this is positive theta type of trade. The 495 calls that are about $15 out of the money to the upside, those still have $4.30 worth of extrinsic
intrinsic option premium in them. It's $15 above the current share price, and you still have over $4 that need to come out of those options if the stock stays here. So positive time decay on this, but you want it to kind of just grind up towards that 495 level. But hey, even if it remains here, you could potentially be profitable on this range-bound, slightly bullish call calendar here, taking advantage maybe the lower vol as the stock's risen to those all-time highs. But Kevin, I'm going to flip the script on you, and this is more directionally and a little bit more aggressive to the downside here in Tesla. I went out to the January 2nd weekly option, so we're going to get rid of some of that maybe volatility around the holidays here that expires in about 17 days. I'm going to buy an unbalanced butterfly if you think maybe it's time for this stock to kind of maybe consolidate, pull back a little bit. We're going to buy one of the 480 strike puts, that's at the money. We're going to sell two of the 460 strike puts, that's where you want it to go, and then buy one of the 455 strike puts. So in essence, you're buying that $20 wide bearish put vertical, offsetting some of the cost by selling the $5 wide put vertical with that same common 460 strike where you sold two options. You're going to pay roughly, I've got 740 debit on here, that's where it was trading earlier. It's trading closer to 710 right now, so you can get it a little bit cheaper, but that's because the stock has moved higher. Now, if you pay that 740 debit card, there's your risk, $740 per spread. You need the stock to go below 472.60 to the downside, thereabouts, to get below that break even where you start to see some profitability on this one, Kevin. But this is almost like a moderately bearish kind of look at this trade, Kevin, over the next 2.5 weeks.
I told you, cuz. Definitely told you a way to basically get a rejection, cuz. I do, cuz. I don't know if you think I just be talking.
No, I got the trend line right there. Yeah, I know. As soon as you said that, I saw it, what you said.
All you did was look at a $20 move on the downside.
No, hell no.
460, then you sold the
Everything you say, boy, I can see it and feel it and believe it.
You're looking for a move right to 480, as close to 460 as you can get top. However, because you're unbalanced, because you're $20 wide and $5 wide on your verticals, you hold on to profits on the downside as far as
and as you mentioned, even if it goes below the 455 strike, because you made it unbalanced, or we made it unbalanced, or a broken wing butterfly, is the fact that you still have more than a double the profitability below the 455 level at this point. So it gives you that exposure to the downside, but it lowers your initial cost on this, as opposed to maybe buying the 480, 460 put vertical. That's still a bearish trade, Diane. But this one offsetting some of the cost and debit on this, and that basically takes away some of the risk on it. But you lose some profitability before below 455 on this bearish put butterfly here to the downside, kind of going against Kevin's bullish call calendar.
All right, there you have it. That's the full bear debate on Tesla today. Thanks, guys. Coming up, we've got cash tags. Team from Light Oil will be along with news such as the data on Darden Restaurants. Got earnings due later this week. Stay right here on Schwab Network. Fast Market. We'll be right back. Indeed.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiments in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading strategies. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live and access support by phone, email, and in-platform chat. Trade for weekly with Schwab.
Whether you're an experienced investor
or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Still waiting, still waiting. The people are doing something different things here. Same thing right here.
No spam. Just open market. Close and beyond. Streaming 24/7, any stream, anywhere at schwabnetwork.com.
Welcome back to Mass Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our hashtag segment. So then we want to bring in our next guest, and that's Landon Swan, co-founder of Lifefolio. Today, taking a look at Darden Restaurants. All right, Landon, when I look across one of your charts, I noticed what comes to mind is the K-shaped economy, right? And one of the things I noticed is the lack of momentum I see, for instance, in Capitol Hill, very little momentum in Longhorn. How can we interpret your latest data?
Yeah, I think what we're seeing is, it's kind of interesting because when we talk about how the retail sector's been doing this holiday season's been really strong. I mean, the data, we expected it, frankly, to be weaker with the K-shaped narrative, but we're seeing a lot of strength coming from people. People are spending, consumers are spending a lot retail-wise, but not so much in restaurants, and it's actually making us wonder if maybe there's a trade-off there. Maybe, the gifts are taking priority over the dining experiences, and so we already knew that people were trading down for sure. In fact, Olive Garden even talked about that in their last earnings report. Even though the customer stays within their portfolio, Darden is making less because they're trading down their smaller margins. But you can see here across some of their platforms, Chewy's a big winner. I mean, that was a great acquisition for them. But some of the names that give us a lot of concern, obviously Olive Garden is the one that should stick out to everyone. That's their biggest one, 40% of their revenue. And that number is particularly concerning because if you look at what our data was last quarter, we had them at +8. Same-store sales were basically +6, so we're pretty close now. Now we've got them at -12. Now, I'm not saying they're coming in -12 same-store sales, but it's a big shift to the other side. And then again, very similarly, if you look at Longhorn, they were +5 for our data last quarter, and that's what they came in at same-store sales. Now we got them at -1? Or positive, excuse me. So it's still a shift in the wrong direction, though. But Olive Garden is the big one, really moving in the wrong direction. And I think it has a lot to do with, again, people prioritizing what they've got money to spend on it. It looks like the priority is spending on physical goods and experiences, trips, things like that, but not so much dining on this. And if you're forcing people to choose, that's what they're going with. We're also seeing that, as they mentioned in their last report, business dinners during the week are decreasing significantly. It's just not as much, especially at those high-profile, those higher earning restaurants with the higher cost restaurants. So a little bit of a concern on Darden. And if you look at what happened last quarter, I mean, I think they went from 209 to 192 or something like that on an earnings report. They dipped even lower than that, but over the last month or so, they've made a nice rebound, which in my mind is a good setup for a bit of a bearish look going into this one, just because, again, their two biggest names that we've got have trended in the wrong direction on the data, and I think that they may come in soft here on this earnings report.
And when you take a look at their portfolio, they've got everything, right? They've got Longhorn, they've got the high-end with Chris and Capitol Grill, but then, Olive Garden, which is their staple. Are you guys seeing any traffic flows across all these restaurants, these casual ones? Because the Olive Garden was doing well on these meal deals, right? The inflation buster meal deals. Are you guys seeing any let-up in traffic for any of these names? Because it looks like a lot of your data is starting to weaken here, along with the stock, which is off about 19% from those all-time highs we saw about 8 months ago.
Yeah, absolutely. In fact, when you look at the chart that kind of combines everything, that line chart that we've got, you can see overall the shift on all of their portfolio moving in the wrong direction. There's actually a bit of a divergence when you look at the stock price versus the the blue line, which is our data, it's not huge, but it has moved apart. It's going in the wrong direction. And again, that is led by Olive Garden to the downside. And, just based on what we're seeing and what we're hearing from social media and how people talk, I think that value's been really important. So I'm a little surprised to see the weakness coming from Olive Garden because they have made a definite effort to get that, become a value place. I mean, it made sense. I mean, if you're going to McDonald's to spend 12 or 15 bucks, why not go to Olive Garden and spend 12 or 15 bucks? It's a better experience, it's better food. I think that was their case that they made to people. It did pay off for a little while. Maybe there's some fatigue, I'm not sure, but I just know that over the last quarter, they shifted from +8 to -12, and that's a big move. Again, that Olive Garden was a 4-point move in the wrong direction. That's a 6-point move in the wrong direction. That's why their revenue leader, 40% of their revenue comes from Olive Garden. So I think that's really the story, is what's going on with Olive Garden, why have people started to fall out of favor with it. I know they've got some problems with beef prices and imports on shrimp prices, things like that. I don't think that's all of it. I think that, again, some people are having to choose between, do I get, do all the loved ones get all the gifts that they got last year, or do we go out to eat? And I think people are choosing, let's give them all the gifts and let's hold off on eating for just a little while. So it's maybe just some temporary pain, but I don't think investors are going to like hearing it either way.
You think it may be temporary thing? Because that's a good point that you brought up in terms of the trends you're noticing where consumers are putting their dollars. Because, for instance, just anecdotally speaking, when I went out recently with my son, I was like, oh my gosh, it's so expensive to eat. I'm like, it's so much cheaper to eat at home. I wonder if the competition is partly competition
long as you just sign that to where they have a second home over here,
and as you mentioned,
if you want to, this is actually. Hell no.
And so we did see a lot of the
Bro, she done got where she
blamed
blamed,
kind of playing into Darden's favor for a while, depending on which brand you're talking about. The trade down was working. Olive Garden is a trade down for some people, and it's a trade up for others. It just depends on what you're talking about. But they were a value play for a while there, where they hadn't been. I think that was a good move for them. Again, I think that that's where they got to +8 on the last quarter, but now it's shifted, and so we're a little bit concerned there. But I do, again, I see so many of these trends moving in the direction of, it may be just temporary. As you can see here, if you look at some of these competitors, Darden's third on this list at -6, or Blooming Outback is the top of the list. So some pretty interesting dynamics that we've got going on right now. It seems that restaurants overall are on the wrong side of the trading economy, the trade down economy right now. I think it's maybe a choice economy right now, right? It's not just, well, I can eat Olive Garden instead of McDonald's, or I'll eat Olive Garden instead of Ruth's Chris. It's, I want to get my kid that gift instead of going to Olive Garden. I think that may be what's happening out there. We'll see if the data comes in as we predict. We'll see if they're able to sort of spin it that way and to say, look, this may be just a little bit of a temporary thing. The data early on, and after this, should we expect to do better in January? I'm not sure, but again, just based on the stock running up a little bit over the last bit, and all of the data on the top 2 brands moving in the wrong direction, has us set up for a bearish play. Not like a push your chips in and buy out of the money puts, but a disappointing earnings report from Darden Restaurants today.
Just got a new phrase there, choice economy, different than the K-shaped economy that we've been talking about for a while. Thank you, Landon. That is Landon Swan, co-founder of Portfolio. All right, from a trading perspective, all things at Darden. Let's bring Kevin back in here for you guys to have a final thought on this, based on the insights from the Portfolio team. Tom?
Yeah, it's kind of reflective when you look at a one-year chart. Everything was going well for a lot of these fast casual or casual restaurants, just because they could offset maybe some of the losses of some of the names like high-end or Darden. Olive Garden was doing well, Longhorn was doing really well also, kind of offset some of the losses there. But I mean, the stock last quarter pulled back pretty significantly post-earnings. Brinker had a decent, one of the competitors had a decent report here, Kevin. But the option market kept pricing in about a plus or minus $11 move, and I think that's probably as far as Portfolio data, that's the most bearish I've heard those guys talk about this stock in a while.
You guys are bringing me down. You're taking me out of the Christmas spirit. By the way, my own personal once. I was just in a Seasons 52 restaurant, packed, loaded. And that's one of Darden's signature restaurants that they serve everything under 550 calories or below. I think, remember, this stock is already sold off, and the problems with that young consumer, that's that 25 to 35. Not sure that's a Darden restaurant customer. I think they'd like it to be, but I'm not sure it is. Tom, I'm a little more bullish on this than everyone else is. So why? Because of the sell-off, because of their ability to manage everything. The job they did in COVID, it was spectacular how they managed expenses. I think they'll continue to do that. So I looked at something where, remember, they don't have weeklies. So you have to round up to the January 16th expiration, bought the 185 call, and then went to the December expiration, sold the 200 call. So if you look at the move until expiration, it's about $11.50 now. I'm doing the 185.90. I'm putting it at $6.15. It's trading right there at $6.15. So I'm doing a call diagonal in Darden restaurants with a month, and then you could, extend duration and make this a vertical spread. But right now, I'm looking for a little bit of recovery. I think the price action where it's back up through the 50-day moving average is pretty impressive, guys.
Let's break this one down. Because they don't have weeklies, that's where you got to start adjusting maybe the length and duration of the trades. But let's get into Kevin's example here. January 16th monthly option, so just about a month until expiration. Buying the at-the-money 185 strike call. It's got the higher delta, right? It reacts more like the stock. Then against it, about $15 higher than these 19 monthly options that expire in just a few days. Sell the 200 strike call, $15 line. Bullish call diagonal, you're paying only $6.15 debit for it, so less than half the width of this call diagonal because of the vol dispersion that we're talking about, where you're buying a little volatility out in January on that 185 call, selling higher volatility in that near-term December 19th 200 strike call. Pay a $6.15 debit. Anything above about 188, 189 is going to be potential profitability on this. As you can see here from the risk profile, you make the most money on this type of bullish directional trade up near that 200 level. But because you're paying less than half the width of this call diagonal, anything above maybe 188, 189 is going to be profitability on this. You mentioned this is a bullish example trade taking advantage of the I was just looking at like Folio's data on this. If we were to buy the January 185 strike put and then sell the near term December 19th of monthly option for 170, so $15 line. Bearish put diagonal, about the same, about $6.20. So that would kind of flip this. You're talking about different bearish strategy, but using the same strategy to take advantage of this one. So Kevin going against like Folio's grain here, but you could also
he got a gun, so it's just like,
I think it's going to go lower. Kevin's just up to the push here right now.
the girl hit me big and shit. I'm naked. I feel so weak because I'm naked.
We've got the breakdown coming up, guys. Across Lennar, it's got earnings due.
These niggas might step on my feet. I'm trying to break these motherfuckers apart.
We'll be right back.
Bro, I swear to God, she handled my baby mama. She left the house. Nigga, I had to get the door up off the ground, nigga, and put it back on the frame, nigga, stand up, diagonal on the frame. The door was knocked off the fucking frame. So it wasn't on just putting the door, shutting the door. So, yeah, it wasn't even the door. The wood came off right there. No, nigga, like, we couldn't call the police and nobody even knew it was happening. Nobody could answer their door. They act like they didn't even hear us knocking on it. I was deep on niggas before. Charles never answered or anything or anything. Bro. put the ice on the head. I'm picking my I'm kissing Dave Bob, you like bro, I had the ice pack. I said, oh, shit.
Whether you're an experienced investor or just getting started,
Kiss
Charles
her
Schwab
shit.
offers a webcast that's
I
right
swear I
for you.
told her.
The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab.
I put the ice right
You'll learn
there.
tips and tricks to help navigate
Bro, I swear to God, this is how I am.
and
I told her, I
home-based
said, bro, like, you know,
Best of all,
it's
you
gonna
can
be
ask
alright.
questions
It was
by
alright
chatting
for a little
directly
bit,
with an
because now
education
she
coach.
see that
It's
I got my
interactive
back
learning
down,
at its
so at least I
finest.
tried to do something.
Tune in live
And,
or watch on demand.
We held it
Head
down,
over to
though.
schwab.com/coaching.
Yeah, we held it down, though. Look, so we had our love, and we tried it again, though.
Welcome back to
You know
that
what I'm saying?
Schwab Network.
All
I'm
of us
Diane
do that,
King, live on board Big Board. We'll get to the breakdown of the test on where markets stand as we get closer to the bottom of this hour. We are still looking at some red on the screen and weakening throughout the hour. The S&P 500 lower by more than 0.5% now. Dow lower by 0.75%. NASDAQ 100, which was positive at the top of this hour, now lower by a little bit more than 0.25% there. Russell 2000 lower by 0.7%. The housing sector has continued to struggle in 2025 amid affordability and inventory challenges. And Lennar is next on deck, moving its quarterly results. Those come after the close of trading today. Now they're expecting the home builder to post revenue of more than $9.1 billion. The big question remains how much did Lennar have to rely on incentives to stoke demand? Time now to break down that Lennar Bridge so senior markets correspondent for the fundamental look at Lennar. So George, Lennar's got results due after the bell today. The home builders have been difficult here.
You know, he can't even look.
What's the expectation?
Bro, he just had a run. I bought home that day. My girl wasn't on the front.
Yeah, I mean, so if you look at just the EPS numbers, $2.23 estimated. Now
I done ran outside, came back in,
20%
so I break them up.
compared to last year, where the company
I
printed
couldn't break up.
$3. If you look at top line sales, expected to be down 8%.
And that other one was
$3 billion versus last year's
like, boy, she was gonna knock on top of
$9.5
her
billion.
head,
So again, take that into consideration. The quarter that they're about to report, ending of course,
ran out the house. They
last time
ran
around,
out the house.
expected down both sales and earnings. I think the other thing that investors and analysts are looking for is the scorecard. The scorecard is attributed to Lennar. The prints in terms of new orders estimates have between 20 and 21,000. You know, if you look at average selling prices as well, 380 to 390,000. The other thing is Lennar, which is the largest home builder by revenue, generating $34 billion based on trailing quarters. Financial service operating earnings, again, includes things like mortgage services, real estate services, and even insurance pass-through services that the companies expected to continue to generate. The email Lennar is, yes, very challenging environment. Look at the chart.
I had did a push report over shit, and they gonna come tell me, the baby mama did the push report, I can't even use
So
the
the
push
stock is
report,
down
I was trying to
significantly
use that
down
when baby mama
today
trying to
as
get the
well,
kids the
about
first go around.
22%.
Like, the only reason why
One of the
she
things you have to be mindful of is, irrespective of price, getting cheaper is not getting cheaper in terms of earnings. What I mean by this is that as prices moving down, earnings estimates are actually coming down on a consensus basis. Going back to last quarter, they were around $8.95 for this year, now $8.21. Next year, they were around $9.85, all the way down now to $8.87. So looking at prints in terms of earnings multiples, 14.5 for this year, we're looking at 13.5 by next year's earnings. Those earnings multiples haven't changed, is my point. Irrespective of the price continues to drift lower. So give you an idea that the estimates will continue to fall for Lennar. So that might present a challenge going forward, especially if they don't hit some of their other scorecards, their federal margins, which are expected to be around 17.5% of sales.
Yeah, the thing is that I know when I talk to different analysts who cover this space, the thing that seems to be most concerning is they continue to have to do incentives margins. And it doesn't seem like there's necessarily light at the end of the tunnel. It immediately on that having to do all the incentives. And then the average selling prices have come down. What about when you look across Lennar and the home builders?
Well, I think, a lot of these factors, play out to what we're seeing in terms of the distribution of price action in the chart. If you do consider market capitalization of the business, roughly $29 billion, they do have essentially about $7.4 billion. Now, that has increased by about $1 billion since last quarter, but the debt load also increased by $1 billion. So they did issue some debt as of late. At least in the last quarter, as far as I can see, they have that cash, which is kind of a substantial position, about 25% of the market cap. So they do have financial flexibility. They do have capital investment capacity to expand their business. The question is the market going to be receptive to new capital expenditures, new homes, or are they going to have to continue to discount the homes to move the inventory off the books? And that essentially is going to hurt the EPS numbers as well as the top line sales.
All right, thank you, George. That's George Solis, our senior markets correspondent, with the fundamental look, the breakdown on Lennar ahead of its results. Look at Tom and Kevin back in there for example trade purposes. Example trade in Lennar. So, Tom, you heard the breakdown there. What's the important thing?
Yeah, the bar is low, but maybe it should be low. I wrote about this in our newsletter today, just due to the fact that interest rates are still elevated. 30-year fixed mortgage rate been bouncing around between about 6.2 and 6.5.
In her head, all this shit is going on, but my daughter don't talk. So we working with the communication tool. And she own it, but now that baby mama got it,
this is one of those names, and maybe this sector has been in that rolling recession due to the fact that, hey, you know what, it stagnates people moving when you've got low interest rates versus where they are right now. A lot of people are locked in under 3, under 4, and that's not going to make anybody move if your monthly payment goes up. So they've got some headwinds. Margins are getting squeezed due to incentives also. I looked at this one, the option market's pricing in, Kev, about a $6.40 move either way in the shares. The stock's pulled back about 13% this year and far off those highs that we saw just about 13, 14 months ago of over $193 a share. So, yeah, maybe recessionary here movement in the sector. So, Kev, I look at something, if you're going to take a directional bias, even with earnings coming up, there's not a ton of extrinsic option premiums. The volatility is not like super elevated at this point going into the report. Only a plus or minus basically 5.5–6% move in the shares expected. But I went out to all the way to the February monthly cycle here, Kev. Looked at something directional. If you're bullish on this name, this may work out if the stock does move higher or maybe rebound. But giving yourself 66 days in this position. Buy the at the money 115 strike call, in the money by a couple bucks here, and then against that, sell the 130 strike call. So a bullish $15 wide call vertical, paying roughly about a $6 debit. That's where it's currently trading right about now. So $600 in risk that can expand to $15 over the next more than 2 months in this trade. So Kevin, taking advantage of not really super elevated implied volatility, but I think the key with this directional bias trade, if you think there's a rebound, you've got plenty of duration. You got over 2 months in this position.
Yeah, 66 days, and then all you did was take that at the money or slightly in the money strike, line up the expected move about $15 out to February 20th, and that helps you create your 115, 130 call vertical. You know, the chart, can it go to 130? Of course it can, right? That's right back to where it was not a very long time ago. So if you're looking for a recovery in this name, this could be a spread that lines up with the implied volatility, the expected move, buying the at the money call, selling about $13, $14 higher.
Yeah, you make a good point there, Kevin. A week and a half ago, this stock was above 130 bucks a share, so it does have that potential to get above there. If you pay that $6 debit on it, there's your risk bucks per spread. You can see there, takes a break even up to 121 on a percentage basis. It's not a monster move on this one. You pay a $6 debit, that's your risk. Potential to make an extra 900 bucks if the stock goes above 130 into expiration over the next 66 days. So there you go, Diane. If you think a rebound's coming, this trade gives you duration and maybe some of that flexibility where I don't have to wait 66 days to get paid on something like this if you get the move that you need prior to maybe earnings or prior to that expiration on that front also.
Okay, and speaking of earnings, to recap what the expectation is, Street looking for EPS of 223, revenues expected to top 9.1 billion. We'll see if it's up here or not. That's going to do it for us today on A Fast Market. I'm Diane King Hall alongside Tom White, Kevin Hayes. Download the Schwab Network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. Stick around. You've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network. Real-time market coverage, expert strategy, big balance, big bell. We've got you covered. Inside the minds of pro traders.
Companies that are getting a higher rate of change in sales based on their guidance, and not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Slot insights, actionable data, veteran traders, and trusted financial judgment. Streaming live and recorded. Schwab Network, streaming 24/7, anytime, anywhere, free. SchwabNetwork.com.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force of the family. Wait, had a stroke? Yes. Now we're in the car together daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com.
Not like powerful volume like these to follow. The condition is powerful, but it's slow too.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Call. see, and Alex, as we check out our markets here, we were talking before the show about how it does feel substantial. We are down, I mean, about 1% in the Dow as well as the Russell, so it's definitely some more substantial pressure than we've seen to kick off our show in the last several sessions, but it's also coming off of basically markets being at all-time highs.
Yeah, so I always feel the responsibility that we bear as market commentators on days like this to kind of take a step back, take that, big picture viewpoint and kind of, I guess, illustrate that, like, not everything's falling apart. And that doesn't mean, and I'm the first to say, like, that doesn't mean there's not risks. That doesn't mean that it might turn into something and snowball into something far greater than it's been so far. But it does feel like, a very broad sell-off today. It does feel like every attempted rally has failed. And it's felt that way for a couple days now. And then you look over at where the S&P 500 is at 6760. We're only like a couple days off of all-time highs. We're within, a percent or two, and maybe 2.5% of the all-time close. And you start looking at it, and you say, maybe we've been a little spoiled. And that doesn't mean that you shouldn't demand, success in things and performance that you want. But at the same time, it's like we know these things don't happen in a straight line. Like, how far removed are we already from that massive drawdown that we saw in the first and second quarter of this year? And almost quickly forget, like, things were really scary then, and how quickly it recovered. And I'm not calling for something similar like that again. It's certainly always lingering and looming around the corner, some sort of drawdown, but you look at this market, and in April, I think we would be over the moon with the performance that we ultimately had this year. In early April, it really looked like, things are falling apart a little.
And for good reason. I mean, like, we were talking about basically the entire economic pricing system that we knew in the United States. I mean, we operated in a very different import-export world than we do currently. And so I do think that with all of these inflationary fears, I mean, there's proof in the pudding, frankly, about the strength of the U.S. consumer, often the price of oil, which I know we don't frequently talk about on the show, but, I mean, you're seeing some deflationary measures that are also encouraging.
Yeah, to some extent, right? Because deflation can be scary if it's overdone. So we are threading a very tight needle. You look at the jobs figures, that 3-month average is like 20,000. What's still a positive number? That is something to be happy about. And for those who were worried about cost pressures, yeah, it's hard to have an inflationary environment when growth is really weak. And we're getting to that point where we're kind of in this cooling pattern. But I do think it's, important to look back in time and say, look, April and the sell-off in March, like, objectively that was an overreaction, and the fears were overblown. We can say that in hindsight, I think. But that doesn't mean that every time we go down that you shrug it off and you kind of do that stocks only go up things. That's not true either necessarily. Now, over time, history has shown us that risk assets like equities do outperform over time, simply, partially because they're priced in dollars, and we know that the value of the dollar has eroded over time in terms of purchasing power, just how the system's built. But I know we're kind of saying two things at once. I would say is we overblow the fear, but we also we over-rotate into complacency. So it's somewhere a healthy, pragmatic place is somewhere in between those two places.
I also think we diminish, the strength. I feel like anytime we see positive economic figures, any positive developments as far as relationship with China, it's like we're so quick to be like, this is right now, wait and see. But oftentimes good news is good news.
Yeah, I think that's a really good way to put it. It's well put in the sense that we're sitting just off all-time highs, not for a coincidence. We're in this productivity boom from what this technology that is in the process of being rolled out will potentially bring. And technology largely throughout history has been productivity positive and deflationary in the sense that it's just more efficient. It's not been negative deflationary. Now, there are questions we don't shy away from them. We've talked about, if you eliminate jobs, which seems to be the easiest way to make some of these technology investments make sense, that adds some, other questions to the mix. But, we're we're sitting just off all-time highs. Interest rates have been relatively range-bound. Volatility is very, very normalized into where it is. There's a lot going well now, and that's not to say that we couldn't continue to sell off, but we'd be selling off for a very different reason, it seems, than we have in times past.
Yeah, because it did feel like there in the spring, for example, there was, I mean, good reason.
There was fear.
There was
definitely fear.
Even more widespread than just the like market participants. There was fear, I think, in like the general country where people were saying we're going to curb our spending, we're going to change our purchasing habits because we're concerned about the price of goods. And so I think we started to see that normalize. It's still, I think, being reallocated into different pockets, but all that to be said, you look back at the year that was, and I definitely agree that from April to now, you'd be very relieved with 2025's overall performance, and the analyst community has been busy, and so that's really where we will focus much of our attention for the next hour on. We have a lot of analyst upgrades, downgrades, just basically updating coverage as we do approach course 2026. So we'll dive into some of these analyst calls to kick off the show today. Then we'll also look at some charts and example trades in Lennar as well as General Mills. Now for FOMO, we're discussing a name that is not particularly a FOMO candidate. That is Southwest Airlines, which is getting a positive call out of Barclays with all of this massive revenue opportunity from, of course, no more, now having assigned seats, having to pay various baggage fees, and being more like a traditional airline operator. And so Barclays sees this massive opportunity for Southwest. We'll dive into that note later on. We'll also discuss some broader auto market trends. As we know, Tesla, Ford, GM, Rivian, they've all been busy as of late, and we'll close out our show very timely, of course, with a discussion on Ford, which actually had some of the most interesting news of the day, is it now is expecting to report about $19 billion in special items related to this restructuring of its business related to EVs. So that is not a small price tag.
I'm really looking forward to that conversation with George because agree, disagree, whatever, dollars, all that. That's part of the story. It's a very important part of the story. But I respect the decisive nature of the decision and the quick pivot. If something's not working and it's sort of a tease, stop doing it. Find something else. Like that is your responsibility to stakeholders, and apparently Ford is leaning into that and really making a sharp pivot. So how different things have turned out over the last several years and some of those projections we were getting just a few years ago in terms of electric vehicles, but maybe a conversation for later on. Let's get to some of these movers though. Okta on our list. You know, I'm shocked to see there's actually some green on the screen here. Ford's bit of stock has done pretty well, but it's lost its gains. Okta is still up almost 2%.
Okay, and I think that the Okta note is especially interesting because it highlights something that a lot of the analysts were more cautious on yesterday. So it goes to show what a different session can bring. But Jefferies is upgrading Okta to buy from hold. Price target was raised up to $125 to share from $90. So nice upside from here. But this was part of their broader 2026 software outlook. They said Okta has a significant opportunity as it does attempt to build a complete identity platform and capture growing agentic demand. They also do believe the stock's value dislocation has become too significant as the company has faced several fundamental catalysts now in fiscal 2027 from various things like improved execution, secular agentic tailwinds, as well as the potential for estimate revisions forced to the upside. So we talked a lot about these software names yesterday because there was a different software world. Obviously not all software is created equal, but more of that caution out of like ServiceNow, Adobe, but Okta, of course, has a very different type of software exposure, being more into this cybersecurity nature of things, where I do have to say, I totally believe if you are a believer of AI, you have to be a believer of cybersecurity.
It's kind of in a specific part of it, which is like authentication and identification. And so you start thinking about the more we interact with data and things that need to be protected, whether that's as consumers or as agents of big businesses, small businesses, and medium-sized businesses.
Alright, sorry about that, y'all. I had a phone call. And
what's a really, really important way
I just want y'all to know I'm the coldest. And the market's going to pull back. Hey, we're going to have a bounce and then another rejection somewhere, y'all. If you guys are scalping these puts, just know you're the coldest.
Doesn't mean that a company that provides that's going to be the winner itself. But we'll stay within cybersecurity. I know we're in sort of this 2026 outlook season now for analysts, but I'm not sure this Mizuho note or not is for Zscaler.
yeah, okay, and speaking to our cybersecurity world, and obviously Zscaler, different than Okta, but more similar than, say, you know, just comparing it to like a broader semiconductor name. But Zero is upgrading shares of Zscaler to outperform from neutral. Unchanged price target, though, of 310. So also would imply significant upside from where we are currently trading. But they cited valuation, saying that shares are now, again, too attractive to ignore, and that they, having sold off despite reporting a very solid fiscal first quarter, they also are confident that Zscaler remains very well positioned within Zero Trust, with the stock down about 31% since the end of October.
Ooh yeah, life goes on. I'm about to pop up in a game of 2K.
Downward price activity that we've
Let me see how much money I got.
Zscaler shares. So I will say that from, of course, us.
I know I got $10 I can do something with though.
Post these earnings moves, broadly we saw a lot of weakness post earnings, but that doesn't mean that the earnings were
Oh, this might at least go up here and retest this.
Broad standpoint, we saw really great numbers out of
Let me see. They only went down. How much is this so far? This rejection, like as a whole. Let me see. Is this 20% yet?
Yeah, exactly right. And I do think this.
Yo, Cable!
Greg Moskowitz,
like a broader
2026 update, because he's the same analyst that covers ServiceNow, and we have a ServiceNow Mizuho note, and I know there's also, I think, a Guggenheim one as well that we're going to talk about. Also, I want to take a second, Jerry, before we get into some of those news headlines, just do a PSA. ServiceNow is scheduled, it looks like, for
out of here, boy.
Thursday, 5 for 1. So when you see a very different
out of here.
investor, just know that's why.
There we go.
A great reminder, and obviously an important event to keep on the radar. We've seen stock splits in the past be actually a huge boom for shares. Not huge, but oftentimes it has not really been that way in the last.
I come on here messing with stuff, y'all.
Necessarily a shoe that you'll see this.
I gotta stop messing with stuff. I gotta leave stuff how it is.
Stock splits are, they shouldn't be a huge upside catalyst, but I feel like we've seen more evidence of, hey, doesn't always mean that necessarily.
Hey, bro, why they doing the market like this for real? So look, bounce somewhere and then rejection. Look, they didn't even get up here before they try to reject.
But Nvidia made a stock split. What was it, like 120? Adjusted for the split, at least one of the splits ago, and it's 175. Oh, and by the way, it's like
you gotta make sure you time this right though, because they could still bounce right here.
It doesn't change the value, but it may spark interest.
But this is where they rejected that, so that needs to break also.
Now trading at like 150 or whatever it would be, that invites a new type of investor to consider buying.
Yeah, there's a psychological level. I think of course looking like they're getting shares at a more relatively, say, capital efficient way than previously prior to splits. But to dive into some of the ServiceNow news that we're seeing today, we are, seeing some actually positivity after yesterday. It was pretty downbeat. Guggenheim did upgrade shares of ServiceNow to neutral. And we're seeing a nice percent gain today after.
I don't know why I thought Lulu was gonna go for.
They did say that valuation again behind some
of
these
Lulu was
upgrades.
gonna go, and it just never went.
Downside from here, but they've always seen this name as a quality software franchise. So I mean, talk about
it just never went for real, bro.
Yesterday, part of that was also due to.
It just never went, bro.
I mean, don't necessarily take yesterday's price activity as like driven by one analyst. It was just one conviction, and right now we are parsing through all of the various expectations for 2026, and I want to keep track of this better, because for all the analyst notes we talk about, it's like how much of these, obviously we get paid to be direct and paid to make a call, but you always like to know the end of each year, how many of these calls were correct.
Yeah, well, one thing I would say too is the announcement of the deal was this Armis company, which is like this IT security type company. So that would be in my mind, and correct me if I'm wrong, it would be kind of a second meaningful pivot into cybersecurity. This isn't really ServiceNow's bread and butter, but they're creating a new vertical within their company. They're kind of a data management, and it does seamlessly fit within sort of this idea of workflows and things that ServiceNow works on. But at the same time, Mizuho, although they are now incorporating Greg Moskowitz again as part of this 2026 software group outlook, lowers the price target though to the pre-split level of 10.50 down from 11.50. So the bull is getting a little bit less bullish, and the bear is getting a little bit more neutral. So take that for what it is.
Yes, we seem to be a bit more guarded now as we approach a lot of these predictions for the next year. But what has not been a guarded story as of late is GE Vernova, which has been on an absolute tear. And we're up now 13.7% this month. We are also now up about 106% on the year. And no surprise, a lot of different conviction on this name, but I will say it's pretty overwhelmingly positive. So we did see Morgan Stanley raise its price to $882 a share with an overweight rating. Goldman also raising its price target to $840 from $735. Also with a buy rating, Wells Fargo, another analyst, $831 from $717 with an overweight rating. So all that to be said, this name has made a really nice move, and it's been one of the more consistent players of this year. As I mean, it's well above the 15 200-day moving average.
Hey, what quarter you on?
It's been consistently that way.
Oh, that's me. Oh, third quarter. I'll preface what I'm about to say with,
my bad, my TV up.
I like the stories like this one, that one in hindsight seem very obvious, but have a very clear narrative that you can lay out and say that makes a lot of sense. Not to say that GE Vernova should be worth what it is now, or it can go higher or go lower, but that this has been a performing stock, given the fact that we know this build out in AI, which has not slowed down, has really changed the dynamics of power demand. And so it's a natural, like, first order derivative of like, okay, well,
I'm just
that
turning my
means you
TV
need more
down.
electricity, you need more power.
TV's loud. I'm in my
And it's the same way, like in hindsight, like some of these quantum computing stocks, rightly or wrongly, it's like, okay, well, what's a natural place of research and development based off AI and technologies? Quantum computing. Like, I like that there's a very clear fundamental picture, and in hindsight, you're kicking yourself. You're like, how did I not see this if you didn't? All that to be said, though, when you look at this, I think sometimes we forget that what we're looking at is companies, and it's not just numbers on the screen, all these dollars flying around. It can be something that like brings some, optimism and faith back into the thing. It's like, okay, this is the kind of company that makes sense that it's outperforming. There's no questions here. I don't think anybody would argue against that. GE Vernova, right place, right time.
And I will also say this is a great example, and I know every company is different, it doesn't always work this way, but a great example of why sometimes breaking up various aspects of your business can actually be hugely lucrative. I mean, we've also seen GE Aerospace, for example, of course, it's part of the broader GE company formerly. It's also still 78% this year. It has a market cap almost double that of GE Vernova. So they've both been, separately, very, very successful.
This is such a good point, and there's companies that, we'll not talk about. One of them might be a Mag 7. There could be a couple of those names in the Mag 7 where it's like they've become conglomerates in a way, and it's like, what does making an airplane have to do with generating power? Maybe you can tell me, but they seem pretty different. And so it's like sometimes the sum of the parts actually isn't greater as a whole, they're actually better as parts.
Alphabet, Microsoft,
Amazon's a cloud company and an e-commerce company.
Yeah, we could just go down the list of these tech conglomerates, behemoths, if you will, that have just gotten somewhat difficult to sort of gauge, what part of their business the street will care about on the back of some of these earnings announcements and various news updates. But we'll leave it there for the top of our show today. Coming up next, though, it's time to look at Lennar as well as General Mills, which very different performers than a lot of the winners that we were just discussing, as Lennar here is down about 14%. Well, General Mills is also seeing some weakness, a pretty substantially different year for the home builders as well as the staples.
What's up, Crawl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Sean. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a tax specialist with taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. Welcome back to Next Gen Investing. It's now time to discuss some charts and some example trades and two names ahead of earnings, because even though we are very earnings-alike, it's always earnings season if you're a believer, of course. But joining us now is Ben Lawson, Senior Manager of Trading Services for Charles Schwab. And so, Ben, first and foremost, thank you so much for joining us on the last full week of trading of the year. I wish we had two better performers to discuss, but, always opportunity in some of these names that are a bit downtrodden. So we'll start off with Lennar here. It has not been a super strong quarter thus far for a lot of these home builders, as we're seeing this deferral mindset still weigh on a lot of the performance. But hey, again, always an opportunity. So walk us through the technicals here.
Absolutely, Jenny, and you're absolutely right. I mean, up is an opportunity, down is an opportunity, and so is sideways. It just depends on what you do with it. And Lennar had been on a little bit of an upward trajectory going into that September timeframe. In fact, it had just seen in really early September a golden cross, the 50-period simple moving average moving from below to above the 200-period simple moving average. And for longer-term investors, that can oftentimes be an entry signal, but in this particular case, the promise of that golden cross kind of faded into more sideways movement, because really from that September timeframe till now, it's been oscillating between right around that 110, maybe on the downside, and around that 120, 130 range to the upside. That range is constricting or squeezing down into a narrower area, and you can kind of see the symmetrical triangle almost, if you will, as it comes towards the apex of that triangle. Nevertheless, a couple of levels of horizontal support, namely right around that 117 mark, some short-term resistance overhead right around that 121, kind of caught in between the two moving averages there as they oscillate sideways. When you're caught between the moon and New York City, Jenny, what do? Well, you look for some kind of momentum to push it one way or the other. This isn't seeing a lot of that going into the earnings announcement, so the earnings could be the catalyst. At the same time, if there's really no change in the expectation from a rate perspective or from demand for new home builds, then it really could be more of the same, more of that sideways trend along that 200-period moving average, or between the 200 and the 50 here, Jenny.
Yeah, the one thing is, I think, always encouraging is the homeowners have exposure to different types of consumers. Like, we know that some are more of the affordable first-time home buyers, others are more exposed to, the higher price tag homes.
Right.
They all seem very out of reach to myself, but I can at least appreciate that they, offer some diversification across those that are interested in buying a home or, purchasing a home for the first time. So, really great breakdown on Lennar here. And so now, as we do think through looking at Lennar for example trade purposes, again, it has not been a super strong season for home builders, as I feel like we've said the last quarter. It's kind of the same narrative I think by a lot of the CEOs. But all that being said, we are hopefully in an environment from like a climate perspective, a rate perspective, that is becoming a bit easier for home buyers. And I know that this is, I think definitely something that's top of mind for so many consumers right now.
Yeah, and the stock itself has kind of had some fits and starts, right? I think Ben laid that on the chart. It's been pretty range bound. And so he said neutral can be a strategy. Well, that's what we looked at here. A neutral, range bound iron condor spread using that elevated implied volatility around this uncertainty of the earnings event to sell some implied volatility, sell some options premium in a risk-defined manner, collecting a credit and looking for kind of a boring, basically unchanged, if possible, earnings report, or at least reaction to it. And so this is the December 19th that expires at the end of this week. 118, 117 strangle with $5 wide wings. That'd be the 123 call and the 112 put. It's pretty tight around the current share price, almost like a straddle, if you will. So you're going to get a bigger credit than we typically would get on a $5 wide spread. You'll get the 350 credit for this example. That'll create a max profit at the gain at expiration where you can collect that 350, but it also creates a range between 113.5, the break even to the downside, and 121.5 to the upside, where there's some varying degrees of potential profitability. So this is again kind of like some of the other strategies we talk about, Jenny, where the more accurately you project where the stock is, the better it can perform. So the closer to unchanged it is, the better it will do. It does have risk definition though, and the max loss in this case is $150. So looking for a really boring reaction in Lennar post earnings, and for that to hold throughout the open.
Okay, and Lennar, of course, today reporting, and we hear from General Mills then tomorrow morning. And so, Ben, walk us through this chart, because they're not the only name that looks quite this disappointing. But frankly, I have been on a serial kick, so I am especially heartbroken to see that it is just not really resonating. And frankly, it's because it's so expensive to box of cereal now in the city of Chicago. It's like $7 or $8. It's insane to me. But, I mean, you gotta do what you gotta do. So it's one of my advices right now. So walk us through this chart here, what we can watch ahead of earnings.
Look at the market trying to go, bro.
A serial killer, perhaps, but I'll tell you, General Mills here, going, you know, it is going sideways. Again, I mean, let's look at it in the context.
I'm trying to see if my mama's okay. She had to go to the hospital last night, and now she's not answering the phone. I got a couple of shares of Lashley. They was going up, but they got liquidated. And I got a share of what is this? Lemon something? Lemonade. Yeah, this right here. I got a share of this. And I was trying to tell y'all before that this is bullet. I need to make a video about this company. Their options are going to. Another stock I like too that my guy was showing me. And something like that. Something like that. I gotta see what it is.
Descending triangle to the upside, because it's getting deep into the apex. It could be the catalyst to push the price below that 45 level of support.
I forgot the ticker. Let me get the ticker. Let me get the ticker. Let me get the ticker. I hate when I do that and I know what I'm talking about, but I gotta get the ticker first. It's like time travelers or something.
In this case, if the price just stays the same,
I just don't remember the ticker.
Just up a creek without a battle. Jenny?
You know what, and unfortunately,
The price is still right here, but they trying to.
Yes, it looks pretty down deep, weak at this point, but also as anyone knows from...
They're having a breakdown, they're going lower. And I already think they want to test this.
Appreciate it, Ben Lawson, our OG chart master, for all the technical help today as we do approach some of these smaller but still important company earnings. And so now as we say General Mills, I do think it's important to keep in mind exactly what Ben said, and that's, yeah, you can hope for a pop here, but you can also see continuation down.
Yeah, and so I think because of that, I looked at a very similar but exactly opposite strategy. It's neutral in the sense that we didn't pick a direction for this example. We're looking for a move, either maybe to recent lows or new lows, or perhaps a real sharp reaction, which may seem kind of unique when looking at consumer staples, but it's all relative. So I'm going to be priced
Hey, my bad, I missed your call.
Buying a strangle 45, 50.
I was trying to get a hold of my mom. She had went to the hospital last night, but now today she's not answering the phone. So I was trying to see what's going on.
So while the risk profile for the last strategy,
You doing all right, bro?
down towards its loss,
You say yeah?
Unchanged, this is the opposite. Unchanged or
I can't hear you.
between 45 and 50 is where the loss takes place, and then unlimited probability of the upside, and quite a bit of
talking to you.
Profitability potential down to zero to downside. So looking for the opposite of what we did.
She's not answering the phone.
Active,
to call her.
I did. I just got done call. I've been calling all morning. I tried.
I'm one of them. Probably pissed off at her. That's not. I get pissed off at my mom all the time. But anyway.
Yeah, I just tried to call her, but she's just. She could be. I don't know. Maybe our phone died. I don't know. But I just tried to call her. all this morning, and it's straight. Excuse me, she'll. Yeah, but ain't nobody worth a quarter. Ain't nobody worth a quarter or a dime or anything. No, I'm just playing, but she'll turn up. I was just about to smoke.
I'm pretty sure if it's really serious,
Yeah, she. I just was talking to her last night. I was making her laugh last night. She was like,
Trading at Schwab is powered by Ameritrade, unlocking the power of think or swim. The award-winning trading platforms.
hopefully I can hire on the Spark thing.
With robust charting and analysis tools, including
"Do you ever get you some smoke?"
tailor the platforms to your unique needs with nearly
Oh my God,
customization. And track market
I've been going crazy.
My mom did fuck with it. She's like that.
Trade brilliantly with Schwab.
Close that. Yeah. She put the ball up.
Live from Chicago, this is Trading 360. I'm Marley Kate.
She's literally just left out the room. She's like, well, I got a little bit left since I said it before later. Alright. I've been trying to do some DoorDash so I can get some bud, but she ain't nothing here. I said, keep my closet exposed. I'm seeing my car running. I ain't got no gas for that. So I'm going to hope I have the freezer. That's why I hope I get this Spark job. I'll do that. You heard of Spark, right?
Huh?
Have you heard of Spark?
One guard, and after he passed away, the torch has been passed to me, and my advisor Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for a promo. Today we are looking at Southwest Airlines with some analyst optimism as this analyst sees a lot of potential from the fact that they are shifting their business model and finally going to cities assigned seats, charging for luggage. And I know the Southwest enthusiasts are perhaps not thrilled, but I do kind of think this will not shift the loyalty of the ecosystem. I'm getting ahead of myself. Marley Kate is, of course, here with us in the studio, hosting the Shrug Network. And Marley, break down all of the various stocks on Southwest, which actually has been a really strong performer of the airline stocks this year.
It certainly has been. I think it's been the best of the performers of the airline stocks. And it has given up some of the gains that we saw earlier when this note first came out, but still up 1.5% on the day. On this positive note, this one coming from Barclays. Barclays upgraded Southwest to overweight from equal weight. They have a price target of $56. That is up from $34. Right now they're trading at $42.36. So it is a potential upside of about 30+% from where they're currently trading right now. The firm's saying that they view this new commercial strategy that Jenny just mentioned as charging for bags, offering extra legroom seats, offering assigned seating as a potential revenue driver. They think this is a positive move for them. They've also said what they call stagnant, if not contracting years in industrial economy for freight carriers and air travel. They've not been bullish on the space for several years. Barclays now said they see what they call idiosyncratic stock opportunities across transports and airlines, with Southwest being one of those opportunities that they believe in. They think the Southwest new strategy will drive material improvement in their relative revenue generation, especially in early 2026. They think we're going to see a lot of this hit right when these changes roll out in January, where you can pay for that extra legroom, you can pay for your assigned seating, which also comes with advanced boarding, which I think a lot of people are willing to pay for. And those options will go live then. Now, they did hit 3.5-year highs today following this note. Southwest year-to-date up 26%. In just the last week, they've gained about 11%. And these analysts not alone here. Barclays is not alone in their sentiment. TD Cowen up their price target on Southwest to $42 from $31. So not quite as high as the 56 that we're hearing from Barclays. They have a hold rating. BMO
just hear me out. I do wonder if Southwest in some ways is rolling a bit of the dice here, similar to, I'm going to use a very different company, but what Cracker Barrel did recently, trying to change to get a new group of people to come to your place, and you alienate your existing customer base. Now the key difference is there's not that many options, and there's none that really mimic Southwest, so maybe you do, but I look at it and say, you're just becoming what you were always trying to be different than in some of these changes, and clearly if it's revenue generating, that kind of means that it costs more for the everyday person who wants to go fly on these airlines, and at that point you basically invite a different level of competition because you're no longer different than your competitors, you have to be better or cheaper than your competitors, and I don't know that Southwest is going to be able to compete with the Deltas and the United straight up.
See, okay, then that's all. I guess my personal gripe with Southwest has always been, in recent years, and at least like the last decade or so, it's not cheaper. We call them like a low-cost carrier, but I mean, they're really not.
Yeah, I almost see it as it serves a different demo in the sense that it typically uses maybe the second airports in big cities, regional airports, so maybe it has a different client base simply from where it's located. But I know I like the flexibility that Southwest offered. That was part of the reason. I'm not a planner. You can move things around. It sounds like they're getting to where you got to be a planner, and I'm not sure how I feel about Mario Trio.
I don't think you have to be a planner, per se. I don't think they're changing the basis of their business here. I think that they're offering themselves another avenue to make money, right? You can charge for your seat assignment. Doesn't mean you can't have flexible travel plans. You're just going to have to hope that your same seat or something comparable is available on the next flight, or you're forfeiting whatever that upcharge was. I don't think they're getting rid of the flexibility that they're offering versus the other airlines. But yes, is it going to hurt and sting a little when you have to pay for your bags and you've traditionally never paid for them? Absolutely. But will it feel good when you've paid a little bit more to make sure your carry-on gets on the plane? I think that will probably feel okay. Interesting correlation you're drawing between the Cracker Barrel thing, and we know that ended disastrously. I mean, that was one of the worst PR disasters in a while in terms of an advertising choice that had to be rolled back and people got very upset about. I don't see this in the same vein. No. I don't think they've pivoted so far away, but you know, Jenny brings up a good point. The prices are not that different. I mean, I'm looking at, I just pulled it up quickly just to look at a flight from Chicago to New York to see, and I could fly Delta for less than I could fly on Southwest right now. So it's an interesting, in this particular dates that I had stored in my computer, it does beg an interesting question if it's not ultra affordable. And I don't know that I call them a low-cost carrier either, because I think of like Spirit Airlines in that conversation, or Frontier. But it begs the question, if I can get it for the same price on an airline that feels a bit tawnier, am I going to go in that direction?
Well, I'll offer two counterpoints to my own statement, which is one, this is like the least inviting, like consumer switching field, because you have your loyalties, you have your you're used to operating, and there's a reason Southwest nobody copied Southwest really. So clearly the other business model has more, I guess, endorsements based off how they manage it. But what I would say, and this is sort of to your point that you were just making, Marley, it's harder to hide that you're a little bit more expensive than maybe your perception when you're now offering the exact same service and you're compared side by side. Where maybe before it was like, yeah, you kind of, it's in the wild, wild west of on your seat, you don't pay for bags, we don't charge for switching, you go to the different airports. Well, now it's like, now you do get charged for all those things like everybody else, so what are you getting value-wise?
Yeah, I think that the entire, airline industry has done such a good job of somewhat like hiding some of their fees. We're used to pay cancellation fees. You used to have to you could not cancel your flight or change your flight. Now they, for the most part, do offer this, but you pay other hidden fees. Like you pay for any seat selection you have on like United, or you pay for like any various carry-on on America. There's all these various.
Well, they're like locked-in travel funds. You don't know how to get out of the site.
Yeah, even Southwest, the way they framed all this was like, we're revamping our loyalty program. So if you have a credit card, you can still have access to a lot of these perks, which I just see right through that. Just get really expensive to fly. But all that to be said is, you do think through Southwest here, and having the best year of the major airlines, and having a really nice month of December.
Yeah, it opens some growth opportunities too, maybe to get more corporate travel, maybe they can expand international, which we know is a really important revenue driver for these other airlines. But bullish strategy, I mean, the words from the analysts positive, the performance clearly positive over the last quarter, so if you think that's going to continue into the first month of next year, I looked at a bullish call vertical spread, buying the 42.5, selling the 45 call vertical for $1 debit, so it creates a little bit of positive asymmetry. You risk $100 on this example, but you have a chance to make $150. The break even is 43.5. So this is a strategy that looks for upside into the new year in that first couple weeks, continuation of the recent trend, and is endorsing the recent strength that you've seen from Southwest, as of course this is FOMO after all, and nothing induces more FOMO than a nice vacation.
Okay, and I did just check because I was just curious, like for comparison's sake, American Airlines, this is 3% of the revenue now, just these checked bag fees. I mean, they're clocking in $1.3 billion in just, I mean, like basically a 6-month period. So this is, aside from my own personal gripe, it is going to be a huge, I think, success story, at least as far as a revenue upside catalyst for Southwest. So perhaps we're seeing a really nice session today, and a really nice several sessions as we're now in an 11-session winning streak for Southwest. Appreciate it to Marley Caden, host for the Schwab Network, for that breakdown. Now coming up next, we will stick with our broader theme of transportation. We'll be discussing some of the recent auto market trends and what we can watch now into the new year.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage the investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network. Welcome back to Next Gen Investing. It's now time to discuss some broader trends we are seeing in the auto market. This has definitely been a topic of discussion in markets over the last several days, and of course all year long. But I'd like to welcome in now Kevin Roberts, Director of Economic and Market Intelligence at Car Gurus. Kevin, thank you so much for joining us today. We do know that we've seen some evolution and some real changes being made in the auto space. So as far as recapping this year, what you're watching into next, walk us through your thoughts.
Yeah, so it's been an interesting, adventurous year in the auto industry. I feel like most years are like that. Obviously, tariffs were one of the major stories at the beginning of the year. Did not have as much of an impact on pricing as much as we thought it might have, but definitely impacted when consumers were purchasing vehicles. And then in the second half, we had the expiration of the EV tax credits, which really pulled ahead a lot of EV sales volume into Q3, and then we've seen sales volumes drop quite sharply in Q4.
When you look at this space and you start thinking about the types of vehicles that are in demand, how much does where you're located play into that? We know there was a huge push into EVs. Just Ford has, pulled back on some of that just recently in the last 24 hours. Are there very different, trends in terms of what's in demand in New York City versus maybe rural Nebraska?
Yeah, there can be some, pocket trends. There's a higher rate of EV sales if you look at a market like, say, California. And then if you're looking at, say, the Dakotas, you might see more interest in, three-quarter pickup trucks on that side. So there can be some kind of regional trends in that. But generally, overall, we have some pretty consistent, smooth trends just in the U.S. overall for the new and used market.
Okay, now hybrid sales have been really interesting as we've seen these affordability concerns trickle into the market, but also hybrids are really resonating right now. Do you see this continuing into the new year, this momentum somewhat strayed away from that pure EV business more into the hybrid space.
Yeah, I mean, 2024 was a great year for hybrids. 2025 was even better, and I just see that trend continuing into 2026. Consumers really have kind of spoken. They are interested in more fuel-efficient vehicles. Those fuel-efficient vehicles are hybrids, though, so consumers are interested in them. And as we're going to start to see more automakers bring more hybrids to the marketplace, I really think that's where we're going to see a lot of future adoption. And then you're also seeing a lot of automakers also looking to the e-rev space as well. I think kind of hybrids is where we're going to see the U.S. market kind of move over the next several years. But I would say Americans are starting to shake off our kind of gas guzzler reputation with the growth we've been seeing for hybrids.
Kevin, as we look ahead to next year, and I kind of look back as I do that, the last 5 or so years within anything to do with financing was shocked by rates and wild demand and supply swings due to the pandemic, due to some of the inflationary supply chain things that we saw after the fact. And then you mentioned tariffs as well, really changing some supply chains and pricing dynamics, or at least adding uncertainty to that. When we look ahead to 2026, rates have been relatively stable. Maybe the tariff situation isn't loved by the automakers, but maybe it's a little bit more understood and stable. Is 2026 headline, tomorrow's headline today, more about a stable, understood market than any of the last 5?
So I would say the general expectation is for a relatively flat new vehicle market in 2026 and a continued recovery. Used sales still haven't recovered from their kind of post-COVID environment, so still continued recovery in the used vehicle side of the market. New vehicle market a little flat with that uncertainty about vehicle pricing. But again, the total cost of ownership has gone up quite sharply. It's easy to look at the overall cost of vehicles and interest rates, but also keep in mind that auto insurance and just general parts and maintenance have also increased quite sharply over the past several years as well.
So are we seeing any degree of this deferral mindset? We talk about it so often with like home buying, for example, where consumers are waiting for this more affordable housing market. Is the same being said about the auto space, where we're all just waiting for things to hopefully normalize, and perhaps we're waiting for a day that might never come?
So I think on the new side of the market, we are kind of in, I hate to say new normal, but I think we are in a relatively new normal with the new side of the market. The used market, I think, is still in that recovery mindset. Volumes still are not back to the levels we saw, say, in 2021 or in 2019. So still additional room for growth in that market, and a potential additional upside with how high new vehicle prices have gone. I think there might be some additional room for additional growth in the used vehicle market over the next several years.
Where do you think, from a consumer standpoint, the kind of Tesla auto driving, that kind of stuff, autonomous vehicle, the stuff that full self-driving, I think Tesla calls it, how much are those type of features, whether it's park assist, etc., that these different vehicles offer, how sought after is that from consumers right now, or do people just want something that gets them from point A to point B?
I think affordability is the number one feature people are looking for. The extra features are nice. Those tend to come at a pretty high premium. And so in the current market, I think if you can make a really nice new vehicle under $30,000, that would be a wild seller in this market. So those features are nice. I particularly like, anything that can help me have less kind of eyes on the road time on freeways or help with parking. They're all great features, but affordability is the number one feature that consumers are looking for.
Absolutely, and I feel like that could be said about so many different areas of the economy right now, but definitely being felt hugely in the auto space. So we so appreciate it, and really topical discussion is there's so much news right now, it feels like, in the auto space, as there usually is. But appreciate it. Kevin Roberts, Director in Economic and Market Intelligence at Car Gurus. Now, coming up next, it's time to stick with our car theme. We are discussing Ford, which is seeing actually some modest improvement on the session here, as they did unveil this $19.5 billion hit from the biggest EV bust we've seen yet. So we'll discuss more what that means for the company going forward.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's not going to discuss under 30 today, and that is Ford, which is seeing some pretty substantial news as it is expecting to take a $19 billion pitch from a perhaps not, EV buses, I think, overstating it, but some reallocation with its EV funds. So joining us now is George Tillis, senior markets correspondent for the network. And so, George, this is a fascinating story to me. I will say that Alex, I know he's probably going to say this, but he's been very right for a very long time. So I'm really excited to hear your thoughts here on the story today.
Well, I think, first off, just address the price. I mean, they're taking essentially, they declare about a $19.5 billion impairment charge because they're essentially pivoting their EV strategy, effectively decommissioning or limiting the F-150 Lightning. It was a higher price point product for Ford. It wasn't selling. The volume wasn't there. And they decided to basically scrap that project. They are also talking about at least this year saving about $1 billion or earning an additional $1 billion in EBITDA and improving their free cash flow position. So look at the price today, it's higher. This normally would be a bad sign for any company for that matter. And I think what's happening here with the price action in the stock, especially over the last year, about 36% for Ford, and many of the other automakers are higher. We talked about Rivian. We also talked about General Motors, I believe, as well. That they're focusing on core technologies, core products, expanding and using, I would call it the Toyota playbook, which is moving more aggressively towards hybrids, the ICE, internal combustion engine vehicles, and of course electric hybrids. That's Toyota's recipe for success, and Ford looks to be moving in that direction with the anticipation of about 50% of their total consumer fleet now moving to hybrids by 2030 as declared by the company. The other thing I think is important here is that Wall Street seems to also appreciate that there's idle capacity now in some of their battery manufacturing plants that they could certainly utilize to produce technology components that they could actually sell into the data center markets as well. So again, that's a good strategy. Increasing the yield on existing capacity, repurposing it, if you will, and effectively again. When you consolidate operations and you capitulate and say, hey, what's not been working, we're not going to throw any more money at, you do see some accretive potential in the stock price. George, clearly there's somebody different or some combination of different people that have the leadership in the boardroom's ears now. And I don't know that this strategy will work, but trying to create a product because you want someone to like it isn't a good strategy. And this is a company that's been around for 100 plus years because they made things people wanted. And they got back to that here, going where the market is.
A $5, $6 move down, which is bands and hundreds of dollars made. Then you got the same move on the upside, which is hundreds and dollars, $1,000 made within the same day. Then you got 2 more hours of trading day left.
Pounce on and take advantage while it's there. And to me, the decisiveness to
you know what I'm saying? Like, come to my stream. Look at this. This is real. So if you on Robinhood, you can see the options move. Like on these type of moves, when the market comes straight down like this, the premiums are jumping. Like say like if you put $100 in and bought one of them options, the option done went from $100 to about $500, $600. So you sell it and now you got $600. Where you don't, that $100 you put in, you bring it back out and it's $600.
Capacity that may be there. That's how repurposing it. That's a good strategy. And I think, at the end of the day, this is my view. I think of Ford, I think of, utilities and utility trucks. And essentially, maybe the EV truck space is more of a novelty space, not necessarily a utility space. And that might be why, effectively, the volume and prices were high, volume was low for their product. So they're just basically resetting themselves to their core business. And again, I think Wall Street is appreciating that, considering the price action. So, maybe the aspects of EV trucks are more novelty, Tesla, Rivian, for instance, and then going back to your core, but also, again, dealing with the MPG requirements across fleets by using hybrids. They can increase volume, increase production, lower cost of unit production, and that makes for better profits. Lastly, I'll just quickly say that next year, 2026, they're expecting about $1 billion less in sales than this year, but their profits next year are expected to increase by over 40% from $1.03 this year to $1.48. So lower revenue, higher earnings gives you an idea that they're moving towards operating leverage, and that's what Wall Street likes.
And I think that's exactly why we haven't seen more of a frankly negative move today. I say that as we slip slightly negative, but I mean, hey, you see $19 billion figure. I think that how you framed it is exactly what the street tends to care about. So we appreciate it. George tells a great summation of what the news story really today is facing forward. And that will do it for Alex and myself for Next Gen Investing. I will say, Alex, that we have seen a bit of an improvement throughout the last hour. So easing a bit off of these session lows, but that'll do it for us today. The watch is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for over 25 years. We were purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. show just how reliable has the futures market been as it pertains to daily trading. We'll take a closer look. Also, it's Technical Tuesday, so our very own Rachel Deshelle joins us to explain the data she's uncovered. And our panel discussion, we'll take a deep dive into those jobs numbers we got today. We got October, we got November. We are playing catch up on the economic data. All right, let's run now. Take a quick check on markets with just about 2 hours left in the trading day. We still got some pressure on markets. You are looking at the S&P 500 off by 0.5%. In terms of the weakest sector, that's energy, followed by healthcare and real estate. But you've got broad-based weakness across sectors in the S&P 500, just about every sector in the red. Nasdaq 100 off by just shy of 0.1%. That's been fluctuating throughout today. We saw a little green on the board earlier in today's session, but we backpedaled some later this afternoon. The Dow right now lower by a little bit more than 0.5%, 0.6%. Russell 2000 also lower by 0.6%. Let's take a look at some of the other price action across asset classes. We've been closely watching the dollar. That's off below 98 against a basket of currencies. Bitcoin a little bit higher today, even amid some risk off we're seeing, but again, nowhere near those highs that we saw earlier this year. Bitcoin better by more than 2% right now, approaching 88,000. Yield on the 10-year off by 2 basis points. Gold, a little bit higher. Gold has certainly seen a run recently. We've seen some gains in gold, silver. Gold right now better by more than 0.1% right now. Crude oil taking a step back today, off by nearly 2.5%. We've got some worries hitting oil markets. Crude oil trading below $56 a barrel for West Texas Intermediate. For some of the biggest stories in the markets, we want to welcome in Kevin Haynes, co-host of Fast Market. He's over there at the SIBO. I'm bookending the day with you, Kevin. So we started out this morning going through some of the economic data as it was coming in fast and furious. You've had some time to process some of the economic data. We talked earlier about jobs. Let's talk about the S&P Global Composite PMI. That was released today as well. Give us some of your takeaways.
Yeah, PMI composite flash. The composite dropped to a 6-month low of 53, down from 54.2 prior, Diane. Now, this is still above 50, so as these indexes go, this is still considered expansion, but it's the lowest number in 6 months. What drove it? Manufacturing fell to 51.8 from 52.2, with new orders shrinking for the first time in a year. Services PMI decreased to 52.9 from 54.1. Also a 6-month low, showing modest new business inflows and sales growth. Inflation, firms reported sharp increases in input costs, highest in over 3 years, linked to tariffs. So there's a lot of issues. I think this is why, after navigating the non-farm payrolls and retail sales as relatively positive, this is why I think the market weakened slightly, Diane. I think this number was still in the expansionary area, but weaker than expected, Diane.
Okay, let's talk about weaker than expected as well as it relates to Pfizer. They've updated their 2026 guidance. It is not what the street wanted to see today. We've seen the stock get weaker throughout today's session. I mean, Pfizer just really can't catch a break this year. If we're going back a few years, the COVID days aren't working anymore. The demand's not there. They haven't figured out something with regards to the weight loss drug. What's your take here?
Exactly right, and they mentioned exactly what you just said. The stock dropped today, forecasting weaker 2026 profits and revenues due to declining COVID product sales, patent expirations, and ongoing R&D costs, though they did say they are aiming for post-2029 growth with new drugs. 2029, Diane. So the company also announced new non-exclusive deals with Adaptive Biotechnologies, maintained its dividend, and saw positive early trial news for a cancer drug. I'm not going to say that name. I don't know how to pronounce it. But the weak outlook, COVID sales, strategic shift, boosting R&D and focusing on new pipeline drugs. But obviously, when you say things are slowing down and we're looking to 2029, that is not a good day for Pfizer stock, Diane.
I know. Oh my God, you have to have long patience if you want to wait for 2029 on that. My kid will be graduating from college. I'm exaggerating, not then, but not soon after, not too SIBO. Now let's find out, get a bigger picture take with Henry Schwartz, Vice President Derivatives of Market Intelligence. We're sticking with the CBOE. So Henry, thank you so much for joining us today. So one of the things you're paying attention to is the record volumes that we've seen in options activity. You're expecting this year will be another record year for options volume. I'm curious to know, what are the trends that you have noticed this year?
Sure, so it's really a continuation of what we've seen for the last 5 years. So this will be the 6th straight record year. We're averaging over 61 million contracts a day. Before COVID, it was about 19 million. So, and Kevin was standing in front of the SPX pit on the CBOE floor in Chicago. That's one of the biggest drivers. And in the SPX, it's the zero DTE trading technique, basically. Customers using these options on the very last day that they have to trade, and doing a lot of kind of rules-based systematic trading, and then also just using them for the fact that, you know, if you want a tactical hedge, if you want to cover yourself for maybe a bounce this afternoon, a very short-dated option is incredibly capital efficient, right? Basically, the leverage that is inherent in an option in its last few hours is enormous. So we're actually seeing about 2 million contracts a day in the zero-day DTE SPX. It's about 62% of the entire product. So, and then the other big themes that really have been running for several years and are not slowing down are retail engagement, particularly in the single stock activity. So, you know, I just refreshed data yesterday. We just recently launched this Mag 10 index option, which is the Mag 7 plus 3 additional stocks, Broadcom, Palantir, and AMD. Sorry, I have it written on a board in my office. And those 10 stocks are responsible for a third of the single stock listed option volume, which really is coming primarily from the retail segment. So it's really the themes this year it's more of everything. It's more index option trading, more single stock option trading, particularly retail in that segment. And ETF option volume is also on fire. So each segment is up about 20% this year.
Henry, let me ask you this. Let's go back to zero DTE. Why are so many traders gravitating towards that? Because that is inherently very risky, and I've seen stories of people blowing up their accounts doing that, or, you know, operating in that space. Why are so many traders gravitating towards that?
Well, you know, it's really interesting, right? The zero DTE strategy, which is simply using an option on its final day of trading, became possible 5 days a week starting in 2022. That's when we listed SPX zero DTE, or daily options. That basically about 80% of the activity actually happens on that final day. And you are correct. Options can be dangerous. I think of it like a chainsaw in terms of like a power tool. You got to know what you're doing. However, what we actually see when we look at the activity in SPX is that the majority of the trades are limited risk. Okay, meaning people either buying options. Okay, when you buy an option, the maximum you can possibly lose is the amount of premium you pay. So if you buy an SPX option for $4 because you'd like to position for some sort of a scenario or a move, your maximum loss is that $4. There is also a kind of a consistent flow of option selling, but it's in the form of capped risk vertical spread. So people that have traded options, you know, technically if you are short a naked option, your risk can be infinite, right? Because you are on the hook for a move beyond basically the premium you collected. But when you use a vertical spread, you basically sell one option, but you use a further out of the money option to cap that risk. And in index options in particular, it's very simple, right? At the end of the day, when these options expire, they expire into the cash number, and you're just cashed out. So there's no uncertainty. When you try to do that type of trading in ETF options, it can get a little dicey after hours, or if the ETF finishes right at the strike. So we see about 80% of the activity in the zero DTE is capped risk. So and it makes sense. I mean, SPX is almost a
y'all. I'm down like $2 in my bank account. I'm negative $2. So I gotta sell I gotta sell this crap in my Cash App so I can cover that $2. I'm selling Fastly. I have bought Fastly in there on my Cash App. Yep, make sure y'all buy y'all some shares. I wasn't really trading it, so I know it ran up the other day, but I didn't sell at the top, so I'm about to take a loss. I'm taking a loss on Fastly.
Single stock option space, which again is primarily driven by retail, it is influenced by kind of how the market's performing.
I had bought it down here, but
Having a great year, 15% in the S&P, or even more than that in
oh well.
the index. Russell's
Oh well.
basically been a great year for equity investors. That's been really, really helpful for the option bond because retail customers, there's a wealth effect. They feel like they have money to use to trade and put on their views.
I'm gonna see if this breaks right here. I think they're gonna come break through this. I mean, it looked like they're trying to bounce right here at 676, but that's terrible. This is a lot of selling pressure, so I think they might want to come lower and test this.
Knowing how to put on the trade and how to manage the trade and how to kind of anticipate what they're going to do if the stock goes up or if the stock goes sideways. That kind of approach to trading.
Oh shit! I sold them shares and let me get the money instantly. My man. Okay. I ain't never did that with Cash App.
Making activity easier.
Alright, so I just actually finished my little. Hold on. I'm about to see if I can buy me a put.
Continued growth in volume. So I'm pretty comfortable we will continue to see.
No, let me see where my man's is at.
Year over year, because this has been really a blowout. But we see new products getting rolled out. We see new use cases. There's just so much going on.
Yo.
Kind of, it's not just the derivatives
Hey,
and
that's down here.
business, right? It's basically becoming more of a
I'm gonna get y'all out of here.
risk transfer and risk adjustment. So people are using different kinds of products, different strategies, and they're just continually coming back and having a good
Let me see if I can call my assistant.
All right, thank you, Henry. Appreciate that. That's Henry George, Vice President, Derivative Market Intelligence over Siegel Global Markets. Have a great rest of your day. Coming up, we've got Options Corner. Joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news. You just heard about Broadcom, Pfizer, and strategy. We'll be right back.
Yeah, she's gonna take me to meet you and to the UPS store. Take the gastronostic to you, boob.
getting started.
Make this our home over here. Oh, I really wanted this put.
Are you a long-term investor? Our investing
Even that light volume is heavy.
different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Oh my God, I missed that barely.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome back to the watch. This time now for Options Corner, where we analyze unusual options trades seen throughout the day. For that, let's welcome in my teammate from FastMarket. You've got Tom White joining us with a look across three key names. So Broadcom, a little bit higher today. It has pulled back more than 15% from its all-time high. You found a neutral to bullish trade. Tell us about this.
Yeah, it's the steepest slide, 3-day slide in Broadcom that we've seen. It's trying to right the ship here today, relatively flat, that we've seen since 2020 as far as the pullback. And this comes post-earnings too, Diane, where they saw 28% revenue growth led by growth in AI, the AI segment of their business by 74%. CEO Hakan pretty hyped up about it. He still says that their XPUs that are the specialty chip designs that they make for some of the large language models.
Come on now.
Continue to grow.
Come on, who you looking at? You got to do it in the paint. I'm in the corner. I'm trying to give a dude 30.
They did raise guidance moving forward also as they continue to see AI accelerating at this point.
Nah, don't let the point guard do anything. If you get that rebound, make that right pass and hurry up and get that ball off the court. Like right now, hurry up and throw this up court so we can get an easy basket. I'm trying to get my man 40 points and y'all holding the ball, bro. I got to quit holding the ball, get that stuff up in transition.
Even after the slide post earnings, they raised the price target to 500 from 365.
No, the Senator can make. The Senator will get a triple double if he make the right pass.
They pulled back. Remember, going into this earnings report that they had last week, the bar was really high.
That right pass, I mean that wrong pass to me right there is a turnover. So that's what I'm saying. You gotta make the right play.
But we did see some neutral to bullish activity in here, and this was on the December 19th monthly.
That's a stop, big man.
Expired in just 3 days.
I live up court. I'm getting 30 on somebody. I don't even know how we losing if we was losing.
It's starting to consolidate today. So it's done going down, and if it does continue to go down, they're willing to buy it. So
it's making me tight, boy.
4,000 of the December
I don't know who was calling me.
The 340 strike puts collected.
I'll answer that phone call, talking stuff about Team Kate.
So that takes the break even for this trader. They start to lose money down at 336 over the next 3 days. It's only about 1.5% below the current share price. So selling cash secured put, taking that neutral to bullish stance where, hey, if the stock doesn't go down anymore, remains above 340, they just get to keep that credit that they collected on the 4,000 they sold. Or if it falls, they're willing to buy the shares at $366.
Let's talk about over in the healthcare space, Pfizer, that one moving lower today. No surprise after that guidance that it issued. The street doesn't like it. It just hasn't been able to find a solution in terms of its pipeline. What type of trade stood out for you?
Well, yeah, this is one of those things where they came out with a mid-quarter update, and initially the stock popped on it. The stock was positive, but now pulling back about 5%. And when you say things like, hey, we're going to on track to deliver majority of our $7.2 billion in cost savings that they've kind of anticipated by 2026, adjusted EPS for fiscal year 26, they lowered from $2.80 to $3. Consensus is about 306 on that, so they came in a little bit lighter than that was anticipated. But full fiscal year revenue is supposed to basically come in line. So it didn't seem like there was a lot of bad things in here, but market's kind of hitting the stock here a little bit. Pfizer said they plan to begin 15 studies in obesity next year. Remember, they already tried this once. It failed. And then they're not as dependent on COVID anymore, but they see declining COVID trends. continuing into next year. So it was a mixed bag on this mid-quarter update, but hey, investors still hitting the stock here. And we did see some bearish activity in here, and this was out in the February monthly cycle. So 66 days expiration. Trader bought over 30,000 of the 24 strike puts in February. Paid an average debt of only 45 cents. There's not a lot of extrinsic option premium in these out-of-the-money puts. So the break-even where this trader starts to profit is below 23.55 over the next 2 months. That's about 6% below the current share price in Pfizer, with put volume about 7 times normal daily average volume. So this trader thinks that this sell-off that we're seeing today is not done over the next couple weeks, couple months.
Okay. All right. Let's talk a move that you found, a bullish trade that you found in Strategy. The artist formerly known as MicroStrategy. It is moving higher today. Tell us about the trade that you found.
Yeah, it's moving higher on the back of maybe Bitcoin up today, but still down about 44% this year, off 70% from those all-time highs that we saw in November of last year. Remember, this stock was $543 at that point, so you see the decline here. The divergence between Bitcoin, which they buy a lot of, they just a week ago they bought another $1 billion worth. Second week in a row that they bought another $1 billion worth. The divergence between Bitcoin and MicroStrategy, the stock has been at the widest level that we've seen in years. So that's a concern, I think, for investors. And despite the buying, Strategy's Bitcoin yield, a core metric tracking Bitcoin per share of MicroStrategy, has turned negative for the first time in years, according to a report. And that's because they diverted about $1.44 billion into a U.S. dollar cash reserve instead of deploying capital into more Bitcoin. So that those days of using Strategy as a proxy for buying Bitcoin going away quickly here. But we did see some bullish activity, probably on the back that, hey, maybe we're going to get a rally in Bitcoin that'll help Strategy. This was on the December 26th weekly options that expire in just 10 days. Trader bought 10,000 of the 175 strike calls, paid an average debit of about $4.75. So the break even up at $179.75 over the next week and a half. That's about 9% above the current share price. So you're going to need some more gains in Bitcoin to get Strategy above that break even, because traders bullish over the next week and a half going into Christmas.
Yeah, Bitcoin higher right now by more than 1.5%, but nowhere near those big moves that one would need to see, especially if you're bullish on this. And to reach the targets that the most bullish people saw for this year. You remember, Tom, I know you haven't forgotten those like 200,000 or 150,000 targets. We're nowhere near that right now. All right, Tom, thank you so much for bringing the latest trades that you found there on the Pfizer, Broadcom, and Strategy. Coming up next, we'll check on the reliability of futures, or maybe unreliability, and how it impacts the market daily. That's next on the Watch List. Kick off the morning with the data and the decisions moving markets. Morning Trade Live that breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
Good defense. My bad, Joe. I was placing a trade in the market.
Breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily to identify who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Washington Banking Online from the floor of the New York Stock Exchange. Let's take a look at a couple of movers in the market right now. Shares of Southwest Airlines still taking flight today. They hit a 3-year high after an upgrade in March. Analyst says the company's new commercial strategy, including VAT fees and assigned seating, will drive material improvement in revenue in 2026. Stock is now higher for the 11th session in a row. It's been an outperformer compared to the S&P 500 year to date. Halliburton is moving lower today along with other energy names as crude oil prices continue to slide. That's because of supply concerns tied to peace talks between Russia and Ukraine. And Halliburton shares are flat this year but up more than 45% from April lows. We want to welcome in our next guest. That's Tim Kloss, founder and CEO of Market Structure Edge, to talk about futures as a predictor, as a roadmap first off. So futures used to be a roadmap, right? You'd look at futures at the start of the day, they'd be higher, you could say, oh, maybe, this is how things will work today. Earlier they were higher, but that's not what's happening today. Why do you see futures, or how do you see them as a signal for how this trading day will unfold? Is it still reliable?
Well, Diane, it's nice to see you again. Happy holidays, Merry Christmas. Yeah, futures are no crystal ball. I came up with that all by myself. And what the data show, I mean, if we do a statistical analysis, they're still, surprisingly to me, because I see the disconnect all the time, say 2/3 of the time will give you a general indication of the direction. But you're right, look at today. I was Market Structure Edge Daily Note this morning early. You can get those for free, just at marketstructureedge.com. And I've watched the futures go from positive to negative to positive to negative. And you think, what good is that? Well, traders, number one, it's not very good. And if it's a signal only half the time, it's no better than a coin flip. The cause, Diane, is a market that is an autonomous system. The market doesn't work the way most of us think it does. We spend most of our time talking about fundamentals, business fundamentals, and why is a stock value this way or that, technical signals, and yet the market is very mathematical. And it's global, and it trades all the time. And so much of the prices today, and you can see this by, you go look up the 13F earnings that public companies have to make 45 days after they report. It's a 1975 standard, by the way. But you could go look at the top holdings of U.S. stocks, and you'll find that 3 of them are Susquehanna, Citadel, and Jane Street. And they're part of the reason, I'm not picking on them, but it's part of the reason why futures have become unreliable. They have investment horizons of, I'll call it 400 milliseconds, about the blink of an eye. Yet they, at any given time, own $2 trillion of notional value in derivatives. Futures are derivative contracts, right? So, when those things are right, that's why. Yep.
Hey, can I jump in? I just want to jump in for a second because you pointed out those names. I know you said you're not picking on them. But does that mean that market plumbing doesn't matter anymore?
Well, the plumbing does, but the plumbing isn't maybe what we think it is. Here in the U.S., the plumbing is Regulation National Market System. And its principal requirement that every trader and investor should know is that all stocks everywhere have to trade between the best bid to buy and offer to sell, which can never be the same. If they be the same, that's a locked market. The bid can't be higher than the offer. That's a crossed market. And so, yes, Citadel, Jane Street, and Susquehanna make billions of dollars setting the bid and the offer by buying from a seller and selling to a buyer and taking a tenth of a penny from each share. And that investment horizon is so massive that it causes futures contracts to lose their reliability. Whatever the investment horizon is that is pursuing whatever the investment vehicle is will affect its value. blink of an eye, futures become unreliable. The same can't count.
So, Tim, one of the things we talked about earlier in our show was there's a lot more options activity now, right? Retail investors, this started a trend of a lot more retail investors being involved in that during the pandemic, and it's at record levels this year, and so that's expected to continue. And retail investors listening to this right now, which there are some, they may feel like, why bother when you talk about these big names? What's changed in the way money moves through markets, and why should the retail investor, I guess, bother? Because they may say, well, forget it, I'm just going to throw in the towel now.
Well, you got to know how the market works. I will always say to investors, the number one principle is to understand how the market works. Number two is to understand what the money is doing. If we don't understand both of those things, we'll have a hard time succeeding. So how do you make it work in this kind of environment? The number one rule in answering that question is don't trade price. Trade demand and supply imbalances. We can never outcompete Citadel.
I would think that dude's back,
data
boy.
and systems. And so
I'm up almost 50% on my call I just bought.
prices, and the prices are capricious because
I was up 60%.
It's why technical signals are difficult. They don't work very well. And it's because of the very short investment horizons behind them. So lengthen your investment horizon from seconds to days and trade demand supply imbalances that are not of a consequence to a firm like Citadel that wants to capture a brief spread between an ETF and the underlying basket of stocks. That's the best thing you can do. And also beware of weeks like this one. Options expire this week. The previous guest was talking about one trade where it's tied to the December 19 expiration date. Well, it's not just December 19. On the 18th, our expirations tied to index options. Wednesday, tomorrow, is VIX expirations. Next Monday, new options trade. That whole period is fraught. And in the middle of that are the last quarterly S&P and other index rebalances. So in the middle of that, you have a very difficult time getting a good, predictable trade, and beware of that. You can just avoid it. If you're risk averse, avoid monthly options expirations because they're 20% of market cap. And one small change can affect direction.
Tim, I want to get your take from, I guess, what you would see turning the page from 2025 to 2026. So not completely crystal ball, but borrowing a little bit from Ms. Cleo. So what would you say is the thing that should be in the toolbox from 2025 or that you see carrying forward into 2026?
Well, I always say trade demand, supply, and volatility. These are the ways that you make money. You have demand, supply, divergence, and that's what causes prices to rise. If demand falls and supply rises, prices fall. When demand rises and supply falls, prices have a tendency to rise. That's very important. Volatility helps us produce returns. So you should know how volatile anything that you invest in is. How volatile is the S&P 500? Well, the average component of the S&P 500 moves 2.5% daily from highest to lowest price. That's why Citadel makes so much money. SPY, which is supposed to track the underlying basket of currently 504 stocks, moves 1%. Well, if there's that tremendous gap between the basket and the instrument that's supposed to track it, you're going to make money on that. Those are things you have to keep in mind. Volatility at month end is a key lesson. It has become very large because of month-end index options expirations, and be very careful at that transition. Investors say from July 31 to August 1st. That was difficult. That can happen again, and beware of that in 2026.
Okay, thank you, Tim. By the way, I love your tree. That's Tim Kloss, founder and CEO of Structure Edge. It is Technical Tuesday. Rachel Michelle joins us with a look at the charts for the S&P 500 and a couple other names on her list. Very sober. Watch this. We'll be right back.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X, that's _virus, and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Back to the Washington Banking Hall. It is Technical Tuesday. So, for a look at the charts, we want to welcome in Rachel Deshelle, Senior Manager of Trading Services, Charles Schwab. Rachel, I usually talk to you in the morning. I get to talk to you in the afternoon today. Let's talk about the S&P 500. It's a little weaker today, but what levels of trends are you watching?
Yeah, great to join you in the afternoon as well, Diane. So, really, the S&P 500 has really been trading in a sideways range for the last 13 trading sessions or so. It's had a little bit of breakdown today from that horizontal movement over the past few sessions, but this is following last week where the S&P 500 nearly reached those all-time highs and really came within a quarter of a percentage point away. So I don't think it's real surprising that we're seeing a little bit of a pullback after nearly a 6% move to the upside from that 65.50 support. Now, I'd also kind of like to discuss seasonality as well, because while it's not a strategy or necessarily a guideline, it's definitely something that investors tend to pay attention to. And honestly, this time of the year until Christmas, on average, we do see a little bit of a pullback before that possible Santa Claus rally afterwards, seasonally speaking. But in the short term, we are finding support at this 50-day moving average where bulls may step in and buy this seasonal weakness around this level.
Bro, I was, I told you I tried to put 30 on my man's, bro.
And if we see a break here in the coming days, or
I ain't playing with him while we live.
we may see a
I ain't
continued
playing with that man while we on stream.
Around 66.30, which is really not shown here in this
Larry
chart.
Bird tried going that brother. Alright, boy. Hey, good game, y'all. The Frostman 21. Subscribe. Stocks, crypto, anything, bro. Subscribe. Lock in. Frostman 21. Sheldron Frost. We out here, baby.
Between advancing and declining stocks on the NYSE. It's coming off of record highs in the indicator, showing that breadth still remains strong. So if we can get past this seasonal weakness here, the trend and breadth setup could give traders more of a reason that the bulls still remain in control.
Okay, speaking of the bulls being in control, the next chart you brought us, Chimera Therapeutics. This biotech has seen its share price more than double since the start of this year. What are you paying attention to here?
Yeah, it's definitely been a wild ride for this one, Diane. So, and I'll just kind of start by saying this is a healthcare stock in the biotechnology industry, which as a whole, it's more of a risky industry because of the high failure rates of drug trials, massive capital needs of these companies, dependence on unpredictable regulatory approvals. So when the biotech sector is trending up, it's been more of a risk on indicator for the overall market. So with that being said, KYMR has had that phenomenal run this year. From yearly lows to highs, it's gained nearly 430%, far outpacing its peers. And with each of those new highs that are made, we see momentum really confirming, reaching those overbought levels. And really since September, momentum has remained in
market's trying to be bullish right now, y'all.
So I think that's notable as well. And even with this push to those all-time highs at 103, we saw RSI reaching some of the highest levels, close to 87. So as far as the trend and the setup here, we really saw that massive gap from December 8th that will act as an entire zone of near-term support. But really that move paired with this minor consolidation in the last few days, it's really forming a possible bull flag continuation pattern. So that possible flagpole really measures up to $36. So if we do see this pattern set up complete and break to the upside, measured targets could give this stock quite a ways to run.
RBC Capital raising its price target on Chimera. They're raising it to 103. So you see the re-rating that's happening with sell side record. Pan American also more than doubled since the start of the year. What are you noticing in this chart?
You are exactly right on. You hit the head on the nail there, Diane. So the reason why I'm paying attention to this stock is because honestly, it's really hard to pay attention to, or it's hard to not pay attention to silver miner stocks when silver has been on such an explosive run this year. And so this has been one I've been watching for a while here. So just to kind of put it into perspective, like you were saying, from really lows to highs, it's gained over 160%, and momentum's really followed that trend with the RSI reaching those overbought levels multiple times. The last time we reached those levels back in September to October, we did see that bearish divergence lead to a little bit of a pullback here, but this most recent thrust above 70 on the RSI is really confirmatory with the trend, which is what a lot of bullish traders would like to see, is that momentum confirming the trend. But as far as the trend here, most recently price formed a bullish continuation flag pattern, has really been trending higher along with that measured move towards 56. That may be a profit taking area level for Pan American silver. But something else noticeable here, or notable here, I will say, is if we take that anchored VWAP there in purple and anchor it to those recent swing lows of that flag consolidation, we can see right now price is really hovering right over that level.
Market's trying to go, bro.
60 as that near-term support, where we may see some buyers even step in continually at this level of support. So the trend is your friend, and we're really not seeing any signals of it bending here still, Diane.
Rich, I want to circle back to your S&P 500 patterns that you're paying attention to. You mentioned seasonality. I know that's not so much a part of the chart, but I feel like I cut you off. There was a thought I feel like you had that you want to finish with. Can we circle back to that?
Yeah, so with the S&P 500, I think the most important thing here is trend and overall breadth, because with the S&P 500 we do have that's kind of at the index level, we're just seeing that on the surface, but with breadth we're kind of taking that look under the surface and what may show as a kind of weak bit that we're seeing here, where we didn't reach those all-time highs, we didn't make a new high in the index yet on a open high low close basis. We did make a new all-time high in the S&P 500 on a closing basis, which a lot of traders would say that the close is most important, and that was at the same time that the advanced decline line also reached those record levels here. So on the surface and under the surface, I think it still remains strong.
Great stuff. Thank you, Rachel. That's Rachel Deschelle, Senior Manager of Trading Services, Charles Schwab. Appreciate that deep dive here for Technical Tuesday. Go ahead, we're bringing our panel to dive into the latest jobs data. We got November, we got October, both released today. Stay with us here on the watch list.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right. Here on the floor, I bring you real-time sentiment from traders driving the action. In Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on the Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I said
Like if I'm, let's see if they break it out. Oh, look at that bounce right there.
On payrolls, right? We got both November and October in the same day. November was stronger than expected, but October there was major weakness. Mark, what's your take?
No, bro. Should have shot that
Well, the
through.
weakness was where we thought it would be. Just we didn't know exactly how the government numbers would show up, and we're still probably only got a partial read on the Doge-related layoffs and
My
federal
dude got
payrolls.
7,
I
dude.
think
My
estimates really have
deployment's
it at
back.
about 600,000, so we've had
Oh,
about
no.
270,000 that have shown up to date, and we had a bunch of them show up in October. You know what? In terms of private sector payrolls, we still eked out a slightly better than expected gain. The pace of private sector job growth has slowed to about 40,000 a month, and it seems to spark back up to somewhere around 60 to 70,000 jobs a month.
Amy, what's your take on this? When you think about all of this, are you worried at all about the job market?
In fact,
Hey,
we're
good
seeing
time
this
out. I was just
cooling
gonna
as
pass
we've
it on.
all anticipated and seen over the last several months, but it's certainly not frozen. We have a bit of a supply and demand issue going on right now. There's still open jobs, there's availability, employers are still hiring. The question is, do the candidates match the skill set and
Get
the
that board.
appetite, potentially to go in office to take more
Get that.
traditional hours? So I see it as more of a supply and
They're not.
demand issue
Safe.
right
Oh my
now, and
god.
let's be clear, cooling doesn't mean crisis.
Okay, cooling doesn't mean crisis. When you think about the concentration of where the job gains were, you saw growth in healthcare, no surprise there. Some growth in social assistance. Mark, what's your thought on that? Does that worry you at all where the jobs are?
It worries me a little bit, and this is the type of hiring that takes place late in the cycle. Healthcare and social services are almost always looking for workers. They're two industries that were hit the hardest during the pandemic with their hiring volumes. We're seeing a rebound in social services. Some of that is tied to nursing homes, which were really devastated by the pandemic. So the fact that hiring is strong there and it's not so strong everywhere else, that does give me some concern. The breadth of job growth has been narrowing all year. What gives me a little more comfort is that the more leading indicators out there suggest that hiring is beginning to come back a little bit. So I think that the November numbers are also tainted a little bit by holiday shopping season distortions. I think that's one of the reasons that we saw that employment in transportation and warehousing was down so much. Couriers are not hired as much on a seasonal basis as they typically were, as they were in the past, since we had a seasonally adjusted job loss. We also saw less hiring in retailing. So I think that sets us up for a little bit better number in the next couple of months.
Amy, speaking of seasonal hiring, you all have unique insight into hiring trends and needs. What does the holiday season look like from your point of view?
Is still strong. We are seeing where employers are really taking advantage of productivity and have this notion of just-in-time staffing. So although we may see the numbers of employees taking seasonal jobs on, that average hours worked appear to be a little bit less from the ground. But seasonal hiring still as strong as it is every year. We anticipate an ongoing surge going into January with returns and customer service roles as well.
Mark, I want to go back to the point you made about some leading indicators that you notice about hiring picking up. So are you saying that we may be moving out of a low hiring, low firing kind of environment?
I wouldn't go that far. I think we may see a little bit more hiring, but I still think it's going to be lower than what we've seen earlier in the business cycle. I put it more that we're taking a few steps back from the edge. I mean, Chairman Powell stated that he believed that the employment numbers, as they are currently reported, are probably over-reported by about 60,000 jobs a month. That puts job growth since April, when the Liberation Day tariffs were announced, at either zero or slightly negative. And I think we'll see it improve off of those extremely low levels. But we're not looking for a whole lot of strength in job growth. There is something to the AI story. If you go back, I put this in the note, if you go back to when ChatGPT was released in November of 22, you see a pronounced slowing in job growth in the tech sector. Now, we saw that the tech sector was holding orders during the pandemic and the immediate aftermath to go back to the pre-existing trend. It's hard to say whether
Hey, you see this shit, right?
jobs or whether we're just getting back to trend.
Are you looking at the market still?
Anecdotal evidence, what you hear from a lot of young people is that
No, bro, they bouncing like crazy.
look at the unemployment rate, and most of the increase
675, they going towards fucking 679 right now.
age 16 to 24. The unemployment rate for workers over the age of 25 has risen very little. It's about 0.2 percentage points year to year.
Okay, I'm so glad you brought that up because that was going to be the next one thinking I had about the impact of AI. Amy, from your vantage point, what are you seeing with regard to that impact in the job market and, you know, kind of the needs that more skilled workers need to have?
Yeah.
So it's really interesting. We're seeing a workforce report we just put out that last year this time, most employees were seeing about an hour gain per week in productivity due to AI. This year it's jumped to 2 hours. However, employers aren't seeing
Oh
the
fuck, I gotta get out of this.
as a result of it. So employers need to continue
I had took a
to
call
not only
and made
upskill
like
and
50%,
reskill their
and
team
then I took
members
another one I'm
to
trying to get out of
using
now.
AI, but what to do with that
I wish I would have held it a little bit
free
longer.
time
It'd been
with
100%.
creative projects or strategy so that they get the full ROI
This is crazy.
of embracing AI within
I got stuck in a 2K game and everything.
Okay, all right.
But my system did say this.
So much for your perspective on the jobs data that we're playing catch up on. We finally got both October and November in the same day. We're finally catching up. We'll get December on time next month. Thanks to Amy Glazer, Senior Vice President of DECO, and Mark Bittner, Chief Economist, Piedmont Crescent Capital. The market initially had moved higher on that job number. It's taken the day lower, though, throughout the day as investors have processed it. We're watching weakness in the S&P 500, in the Dow, in the NASDAQ, off the back of those latest jobs numbers. October was weak, November stronger, but they focused on the weakness. That's what it is for us on the watch list. I'm Diane King Hall, filling in for Nicole Petalese. Download the free Schwab Network app. It's in the App Store. Tune in 24/7 on SchwabNetwork.com. Thank you so much for watching. You've got Market on Close with Ed Live and Marlon David up next.
Oh, we got shit down 10. Weak butts.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, your real-time market coverage from its expert strategy.
From the opening bell to the closing bell, we've got you covered.
Inside the minds of pro traders.
What is it they're getting? A higher rate of change in sales based on the guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis of breaking news, and sharp trade ideas minute by minute.
The show is built for action. We break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and
Schwab Network. 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Last year, my dad had a stroke, big shock. Since he's the person that I've always seen as a force in our family, be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, financial consultant. I programmed that 20 years ago. Jim, any questions I ever have makes a huge difference when you have someone that actually cares.
And this is Market on Close. I'm Margaret Hayden coming to you live from our Chicago headquarters. And I'm Sam Barnes coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up for today's show. We'll look at the trends in online retailers as the holiday shopping season rolls on and how cost considerations are dominating consumer decision making. Later in the show, we'll get some stories you should have on your radar for 2026. And in the options corner, we'll check in on Tesla after another bullish analyst note, this time from the Zuho. Molly, take us through what you're watching for today. Pardon the pun, Sam, but Southwest stock taking off to heights we haven't seen in 3.5 years after getting an upgrade from Barclays. The firm says that the airline's new commercial strategy, which includes charging for bags and increased leg room and assigned seating, will be a positive revenue driver for the company. We'll dive into that note coming up. Ford also announcing it's taking a nearly $20 billion hit as the car maker shifts its focus away from electric vehicles. The company announced it will also be launching a new high-growth battery energy storage business. And Pfizer shares some of the worst performers on the S&P today, falling after issuing disappointing 2026 guidance. Their EPS forecast range coming in below expectations, while revenue would mark little change from 2025. We'll take you through the numbers shortly, but before we do that, let's take a look at how the markets are as we head into the end of the trading day. We did see the NASDAQ turn around, and we've added some green to the board. The S&P, though, still trading down about 1/3% right now at 67.92. On the NASDAQ, like I said, a little bit higher, not even 1/10%, but we'll take the green, 25,082. On the Dow, we are trading 0.7 lower, 48,079. And the Russell 2000 is trading at 25.15. Ignore that 30%. That's a mistake there. The U.S. dollar is down 0.2, 97.78. Gold trading higher, though, 43.42.30. For crude oil, we're dipping to the lowest levels we've seen in more than 4 years, down 2.7% right now, 55.28 a barrel. And Bitcoin trying to stage a recovery here, but still below that 90,000 threshold, up 2% at 87,760 right now. I do want to check back in with Sam, though, and see what stories caught her eye on the floor of the night today. Sam?
Well, Molly, we've got that Friday feeling. The only problem is it's Tuesday. But after weeks of delay, we finally got the October and November payrolls reports, which were a mixed bag. November payrolls were rising 64,000 in November. That was more than expected, but it came after a decline of 105,000 in October, in part because of a big contraction in government payrolls impacted by DOGE, marking 3 months of negative jobs growth. The unemployment rate also ticking up to 4.6%, which was the highest level since September 2021. October retail sales, meantime, also came in flat. 8 of the 13 categories were up, but autos were a drag, in part because of the expiration of the EV tax breaks. So once again, that was another mixed report there. And we also got business inventories, which came in slightly higher than expected, which could be pointing to some softening demand there as well. Now, what was the market reaction? The stock futures had initially picked up, but then came off at the open, while the rate-sensitive 2-year yield has been coming
strong performance today following a note from Barclays.
Yeah, this note really highlighting a lot of the unrealized revenue that they think that they could capture here from, of course, the fact that they're now going to have a more traditional airline structure. And so, I mean, hugely
Oh
optimistic,
my
especially
god,
when you
bro.
look at
That
how
shit
much
is so
forward
late,
this
bro.
year.
Ain't no
I
way
think
he should
that
have
we
blocked
often
that, bro.
forget that it was not
I can't be going back and
really
forth in
AI
that paint like 8 times, bro. You're not seeing me,
airlines
bro.
one of our best performers last year, and now has not seen the same favorability as you're seeing. More and more encouragement from Southwest. And frankly,
Ain't
this
no way we
Barclays
should
note
be losing, bro.
highlights a lot of the bullish enthusiasm we've seen. So, well, now 11 straight days,
Ain't
which
no
is its
way
longest
we
winning
should be
streak on record.
losing. It's
We
like
did say
little
today
stuff
this
like
is for
that,
highest
bro. You
close
force me the
since
ball. I hit a wide
2022.
open dude. He's
And
thinking
also
about. I
the
don't
largest
even know
percent
why he's not
increase
shooting
since
it.
just earlier this month. But again, up
Yeah,
23.4% over just the last, 11 sessions
I
or
know,
so.
but I'm literally the
Barclays,
best player
though,
out here,
losing
bro, and I'm not even giving
$366 a share,
100%. And
ranking
then,
today
and then,
favorably.
and then,
And this
you
name
know, y'all
drop right
just
now
like
from
garbage
Barclays
for real. We shouldn't even be. We
is
going on a
that the
comeback.
about
We right
the bullish
there.
view amongst analysts has not always been the most favored. As we know, Delta
Like
this
if I
week
even
went
give
up.
80%, we
But
gonna
I do
win.
think it's interesting when you consider the fact that on average, just
I'm over here looking at
slightly
this
over
money and
one
shit. They
chart
printing the
has
market right
been
now. You
very
know what I'm talking
bullish.
about? We live. I'm looking at my phone, looking at the money. I look up my man scoring again, and y'all barely playing defense. Like, look at this stuff. Ain't no way it should happen. I don't know where the big man be at.
I always joke that, like, how do you know someone is someone that you trust? They tell you. How do you know
We
someone
down
is
4
a
points.
less loyalist? They will tell
This
you
is
because they
wild.
are a very
And I shoot
vocal,
threes.
loyal consumer.
993 or 99 close shot. I don't even know what the heck is going on. And all my guards shoot got 99 threes. The big got 993. You don't get a stop and start hitting threes. I'm already helping with the point guard. I'm leaving my dude open helping the point guard. Well, he finally hit him. That's off though. He finally hit the dude. Like this is a basket. Oh, get that. Like how's he block that? Good block though. Good block. Well, that's off too though. We need a 3. He calls a timeout. I'm already on the other end of the court. Saying we need a 3. Call timeout for what, bro? We need a quick 3 right now, bro. We down 4 still. Like call timeout for what, bro? I'm telling you, it comes down to IQ, and everybody just. You see, I'm not playing, but everybody playing. Like, what are y'all doing? Are y'all giving y'all all? Are y'all thinking the game out? For sure. For sure. We could have won. It don't matter what I am. I'm literally, I told you, my body. I carried you last game. Did you say that? Did you put that in the resume? I carried you last game. How about that? Every random I play with, I carried them. How about that? Did you say that part? I told. No, it's defense. It's defense. It's defense. Yeah, that's what I'm saying. Ain't nobody helping. I'm over here helping, and then like all kind of stuff is going on. I ain't gonna carry y'all no more. I ain't gonna carry y'all no more. Hey, you're talking about security. I ain't gonna carry y'all no more, boy. I'm trying to get out of my. I ain't even trying to play that game. I got sucked into a game. Look at Ruku, boy. I just told y'all Ruku was gonna go, boy. Just told y'all Ruku was going. What Ruku doing? We catching Ruku at the bottom over here. What I tell y'all, boy? What I said about Ruku, boy? I said Ruku, Goku, whatever you want to call them, boy.
We are seeing a pretty substantial downward move, though, for our next discussion topic about Pfizer here. Pfizer had
It's the bottom down here.
Guidance for 2026, sort of demonstrating that some of their long-term investments are not going to play out.
Oh, there's supposed to be a line somewhere on here.
Correct. And so this name is pulled back now about.
All right, hold on. Let me use the restroom.
So we're not seeing. I mean, like again, the volatility of the broader healthcare space has been all over the place. I think that if you close out this year right now, we would still consider this a pretty solid year, all things considered. But not helping with some updated revenue guidance now. They do say they expect roughly $62 billion in revenue for the year. They
revenue should actually come in at the lower end of the spectrum, as they do expect less revenue just in the new year versus last, especially as their real efforts to remake their business continue to play out. So, revising their guidance to the downside again, $62 billion. We do see lower than expected sales of COVID-19 products and a $1.5 billion impact from various therapies losing patent protection. Back in November, the company did reaffirm its revenue to range between around 61 to 64 billion. So this is not a huge miss by any means, but it would be at the slight and low end of the forecast. But now, as we look at 2026, I think this is where more the concern is. You have now revenue ranging between roughly 59 to 62.5 billion. Now that was below the 61.6 billion expected, and also anticipates adjusted earnings per share to be slightly below expectations. This name did hit an all-time high back in 2021 during the pandemic, but we've since seen a very different, frankly, just enthusiasm for various drugs, and they've also had very public, unfortunately, cost-cutting initiations, and also we've seen the replacement of several senior executives. It does seem that there is a transitional period happening right now at Pfizer. And frankly, in the world of GLP-1, which is the brightest spot if you have any exposure to, they have not been a successful story. We've not seen some of their promising oral medications come to market, or some of their various drug therapies have the same effectiveness as, say, like Novo Nordisk, Eli Lilly.
I am interested to know if at any point they brought up any of their most favored nation promises with the Trump administration as a reason that they had lowered those forecasts, because obviously offering these significantly lower prices for Medicaid, Medicare, and through this potential Trump RX forum, could certainly weigh on both their top and their bottom lines.
Yeah, and I do think it is interesting, because I will say their CEO is pretty transparent about right now really calling out specifically the CDC, FDA, and saying that right now there's also this perception broadly about vaccines. And so I'm embracing for, but they do expect more and more of these patents to expire this year. But I do think it's really interesting. I mean, losing roughly $17 billion in annual revenue to these patent expirations, plus also giving a pretty transparent really narrative around the fact that Americans are not as interested in vaccines, and that is not helping their overall business model either. So I think some of their commentary was interesting, as they did say they are hoping to return to growth by 2029, 2030, but I mean, this is like a long time away. It doesn't know.
That feels very far away. Yes, I agree.
It's a long time away.
Yes, it feels a long ways away. All right, this last one, we're going to move back into positive territory here. We're going to talk about Okta. It's sort of tis the season for upgrades and downgrades. This time we've got an upgrade and a move to the upside for Okta coming from Jefferies.
Yeah, and I appreciate this note, because as yesterday we discussed so many of these software names that were not seeing favorability from the sell side. A bit of a different tone today, as we did see Jefferies actually raise its price target to $125 a share from $90. Also a upgrade to buy from hold. And overall, just right now highlighting the fact that they continue to see more and more of these broader software sort of resetting trends into 2026. But specifically calling out the fact that this company does have a rare exposure into more of the authentication side of identity. And for that reason, they see them being more of an outperformer in their specific software world. And I mean, we do talk about a lot of the hardware versus software, the AI winners, the AI losers, those that are in the broader tech world that are doing quite well. I will say Okta has fared this year relatively well. We do not see favorability on the back of recent earnings. But right now, there's specialty to these go-to-market teams has seen some benefits. Like, despite the initial concerns that we were seeing overall, the space is seeing massive consolidation, we haven't really seen that as a considerable threat to some of their financial health into this next year. So I think, remember, not all software names are created equal. The cybersecurity space is one that is competitive, fairly fragmented, but if you're able to carve out a niche, I do think that Okta has really been able to do and see this AI security momentum. I mean, this overall note was pretty positive on software in a different way than what we talked about yesterday.
Yeah, certainly moving 3% to the upside here on this note, when we know software has generally underperformed throughout 2025. But Jenny, thank you for breaking all of that down for us today, all those top movers. That's Jenny Horn, co-host of Next Gen Investing here on the network. I do want to send it back to Sam in New York, though, and find out what we have coming up in the rest of the show.
Well, Molly, we'll check in on the fixed income market and global central bank policy. Market offers. We'll be right back.
401k, saving, spending, or even retiring. You can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. Let's just check in with these markets right now because, of course, we did get this all-important delayed jobs data. So we are, of course, working with that. Seems like a mixed picture as far as the labour market is concerned. Is pointing to a little bit of confusion in these markets just because, of course, we did get October and November's reading, which is telling us a few different things. We also got the unemployment rate ticking up as well. Not to mention also a flat reading on retail sales. Beneath the surface, there were a couple of pushes and pulls there, particularly when you look at autos dragging. So the markets are trying to digest these numbers and think about what this might mean for the Fed coming up in 2026, given that, of course, they have penciled in one more rate cut next year. So we've got technology, as you can see here with the NASDAQ, just putting on a marginal gain there, just to the upside. Technology, as I said, trying to make a bit of a comeback here. It does look like buyers have tried to step in, as we have seen that sector particularly under pressure in recent sessions, as we've seen that rotation out of high-flying AI names into other parts of the market. So that's a quick snapshot of what we're seeing at headline level. The futures, as far as some of these products are concerned, the US dollar, we know the DEX has been coming off. We're at 97 right now. Crude oil's obviously been a big story for us. We are at multi-year lows here. We're at $55 a barrel. We continue to track these developments around the peace talks with regards to Ukraine and Russia. Bitcoin, as we say, catching a bid, but still hasn't managed to recoup that key 90,000 level. We're at 87,000 and change right now. And the 10-year yield, which initially came off following those reports coming out of course, the jobs market, coming off, ticking back up higher. We're now at 415, so we have ticked lower once again. So perhaps a little bit of bond buying going on there. As we say, across the sectors, we've got an attempt to try to make a bit of a recovery here in some of these beaten down sectors in recent sessions. Technology is just squeezing through there on the line to the upside. It's a similar story for communication services and consumer discretionary right now. They're eking out just these fractional gains. Will we get there at the end of the day? That is a big question. We've got 42 minutes to go here. Consumer staples are under pressure, financials as well, and the rest are doing like this. They're all red. We've got energy, which has been really feeling the brunt of it today off the back of those lower crude prices. We are down almost 3% when you take a look at some of the names in that sector. Materials is feeling it, so are industrials, real estate, and utilities today. So we have seen a mostly risk off across these sectors, as of course we continue to try to shake off these AI jitters and these concerns around valuations, as well as digesting all of this data and what it might mean next for the Fed. But I'll send things back over to Marley for now in Chicago.
So much, Sam. Joining us here in our Chicago studio is Ed Francis, the co-founder and CIO of Convexitas, to talk about some of the action we're seeing as we head into the end of the year and also some expectations that we can have for next year. Said thank you for being with us. We love having you here in studio. You always send over a note before we talk, and this time your headline, you posed a pretty big question for 2026. The question was, can the world still finance growth? What is making this moment different from past years?
Yeah, so I think we kind of have had a calm fixed income market. It's been going on 3 years now, and I think it's like this constant setups where you had a booming fixed income market for a decade with zero policy, then surprise, we have inflation, we have an exciting fixed income market for, we'll call it 18 months, and because everybody gets addicted to, oh geez, like we're expecting chaos from that end of the spectrum, like now we've had a benign 3 years, and everybody's been able to focus on financing growth through the fixed income market. And stability tends to be important for that. If you're using fixed income markets to finance growth, it tends to be longer term projects. So when you're moving around like crazy, people don't like that type of investment in longer term projects, but we've had that acceleration of financing longer term projects because we've had such stability both in interest rates and in credit spreads. And the question is, are we going to still have that environment to finance growth next year?
And, we talk about a lot about the global central banks and how much they've been cutting, especially over the last 2 years. But you mentioned long-term. We haven't really seen those long-term rates come down. What is that signal to you?
Yeah, I mean, we might be at the capacity to manipulate policy, essentially, right? So, as you mentioned, like, globally, there's been a significant amount of rate cutting activity for the last 18 to 24 months. The U.S. is, I'd say, less than the rest of the world. Yeah, we're maybe a little bit earlier on in our rate cutting cycle in comparison to others, but 2026 is going to see a shift from a global perspective, most likely into folks actually like raising rates, even though the narrative here is continued cutting.
And so you mentioned raising. Japan has been a sort of a big part of the conversation in the last couple of weeks. It has been a major source of global liquidity. What happens if Japan is no longer exporting capital and they start hiking instead?
Yeah, and interesting, it's probably kind of part of the plan of their new government. They don't necessarily want to just be this financing engine to the globe. They want more growth internally from operating perspective, jobs, things along those lines, and they're probably going to jack up fiscal spending to try to force that to actually take place. And so all the mechanics of financial services that utilize wherever the cheapest tool of financing is to potentially accelerate growth maybe elsewhere for corporations, or even we'll call financial engineering in terms of investment products, might need to find a new home or need to reassess what the cost of financing actually is to continue those projects.
And let's focus back here at home. You said the U.S. not playing as big a part in this, but we got the delayed labor data this morning in the jobs data, and we did see an uptick in the potential for more rate cuts from 1 to 2, the 2% moving higher. The markets are still pricing in more cuts for us in 26, despite the fact that the Fed is not necessarily signaling that there are many more cuts coming. Are investors misreading, in your opinion, how much easing can actually help with growth from here?
Yeah, I mean, here's the balance, right? So what the Fed has signaled thus far, you don't throw it completely out the door, but you do a little bit, right? So we have a big change in the guard, and the change in the guard everybody's anticipating is going to be focused on looser policy, at least in the short term. So the real guardrail on that is probably the 10-year treasury. They're going to focus on one thing. So if the market continues to price it easy, even if growth expectations continue to trickle higher, where you're going to see that potentially, have a problem is if longer dated interest rates start spiraling, a little bit out of control. Because thus far, we've been very, very stable, and thus the market's digesting and accepting the concept of further easing, even in, we'll call it expectations of increasing growth. So there's no problems yet, but that's what I'd pay attention to. If all of a sudden we continue to get okay job growth, okay overall headline growth, and potentially easing into that growth style environment, that's where you expect longer dated rates to maybe push back on that concept.
So let's say that happens. Let's see we start seeing fixed income sending some different signals in 2026 than we've seen. What should investors be watching first for the first flag? Is it yields, is it spreads, or is it issuance?
Yeah, I mean, oddly enough, it's like almost every other environment, you'd probably say spreads should be where you should focus first, but I actually think it's the risk-free rate. It's treasury yields are going to give you the most kind of input. And a bit of the reason for that is the amount of demand for, we'll call it annuity product, fixed delivery, return style product, it has degree of returns is pretty important to support their fixed lifestyle. And once rates kind of got off the zero bound 3 years ago, unsurprisingly, demand for those types of products accelerated. And those types of products ultimately are investing in credit. Less so treasuries, more so credit, which ultimately I think is saying that credit is a little
Bro, look
bit
at the
of a
market, bro.
signal to some extent. Like the supply-demand mismatch there is pretty aggressive, helping credit remain.
Came back down here for the
benign in terms
retest
of
and took
spread.
off.
So I think the first signal is actually going to be coming from the treasury market, but you should pay attention to little blips in the credit market because it might be giving you a little inclination that, yeah, the supply and demand dynamics are a little bit weighted to excess demand, but you know when you have a little bit of issuance problem with a very specific name, then spreads move quite rapidly because ultimately the fundamentals show up later.
So do you think the credit markets are underpricing risk as we head into 2026, or just keep an eye for those blips?
I would say that they're pretty much pretty aggressively underpricing risk. I mean, you know, listen, like being at a call it 5-10% historical percentile where we're currently at in the credit cycle seems like pretty extreme underpricing of risk. Now, we're not saying there's going to be lots of defaults, so it shouldn't be somewhere else, but you're not exactly essentially getting compensated, what we would say is appropriately for the risk that you're taking. And again, I think it's pretty obvious where it's coming from in terms of the supply-demand dynamics.
Zed, always wonderful to talk to you. Thanks for being with us to talk fixed income as we close out 2025 and head into 2026. That's Zed Francis from Convexitas. And I'll send it back to Sam in New York.
Thanks so much for that, Molly. Well, coming up next, the holidays are almost here, so we'll check in on e-commerce trends this holiday season and the state of the consumer when Martin on Post returns.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley King alongside Sam Bodis in New York. We saw a big pivot from Ford today. The automaker announcing it's taking a nearly $20 billion write-down of its EV division. The company will end production of its current generation F-150 Lightning pickup truck and will pivot towards increased production of hybrids, extended range vehicles, and smaller model EVs. The company also launching a new battery program as well. Taking a look at how the car companies are faring today in the automaker space, Ford just down marginally right now. GM down slightly more than 0.5%. Stellantis seeing the biggest loss today, but Tesla moving much higher on the day. We will be talking about Tesla coming up here in Options Corner, but they are up about 2.4%. I do want to bring Sam jump back into the conversation and welcome in our next guest. Joining us now, Scott Ashbaugh, the CEO of DHL U.S. Commerce America. Scott, thank you so much for being with us today. You know, we have a lot of macro uncertainty in our environment right now. As far as consumer behavior and what's shaping it the most right now, is it rates? Is it inflation? Is it jobs? What are you seeing as we head into this all-important holiday shipping season, especially for those of us who are late holiday shoppers?
Thanks. It's a pleasure to be here. So yeah, we have seen this year certainly a pivot towards value and cost is a major factor, at least when it comes to the cost of shipping. So we had seen in our portfolio a shift from more air-related products to more ground-related products for the most economical path to consumers.
Yeah, I thought my mic was plugged in.
Got your mic plugged in, Leonard? Fascinating juncture and intersection, and happy holidays, by the way.
Hey, bro, you're trying to put me up out of here.
Without coloring, but
Why you say that?
you know, consumers, supply chains,
They had pulled me into a meeting yesterday, and they were like, essentially, they said they're trying to get me the fuck up out of here.
Why are you getting on their nerves for real?
Yeah, it was interesting. Like when
They said I'm not taking enough calls.
We braced for
all them calls you
decline in volumes. We
That's
fully
what
expected to
that's
see
what I said. That's what I said. I'm like, damn.
You gotta check his bids, they come in. Shit.
Bro, I know it's
on the
bro,
phone.
the same thing.
You stay on the phone. It ain't like you be somewhere doing something else. I don't know, but I always hear you on the phone when you're on the phone.
Bro, I said the same thing.
I would say
it might be
So
racist.
yeah, they trying to get me up out of here, bro.
in the beginning
So
of November, we saw
I got some
might get my answer.
downturn in shipments.
But you don't need them anyway.
Quite across the board.
Your money can eat off itself, and you can actually almost live off that shit.
And now that's been masked by the huge growth in peak volumes. And we're really interested to see what happens now in January post-peak of are we kind of still looking at some of this depressed demand level that we
Your
saw
money,
materializing
you
at
don't,
the
you,
end of the year? Or does it snap back to volume?
no, I mean that too, but you really can just set your shit up to where it just pays rent, pay all your expenses and shit, and live off the money you got. Cause even my cousin, he was just talking about, he was just like, what would you do with $10 billion, $1 billion? I said, bro, you invest that shit and you live off the dividends. You take the money.
I think it's more about the cost of the goods.
I mean, even a little bit, that's a lot still. You can still stretch it out to where you can still buy enough investments to where it makes a good chunk of dividends. Like, you know, you can start thinking about it like this, like list it to where, you know, here's gas money, here's weed money, you know, just little shit until it goes into bigger shit. Well,
I guess somewhat piggybacking off the back of Molly's question to you.
it's gonna be a lot of write-ups.
You know, are we seeing this degree of resilience because of just how pessimistic we were at the start of the
But as
year?
long as you keep making money off your shares and the leaps, swings, or whatever it gotta be, like you never gonna be where you depend on anybody, because you always got your own shit.
I think I never underestimate the creativity.
They can't do nothing for real, bro. They can just talk shit. And if worse comes to worse, they just let you go. But like I said, you can always live off what you got. Because all it takes is a couple of thousand. You got way too much money. You take a couple of thousand, you can take that and make, you know what I mean? Make another fucking 10,000 easy off 1,000 or two on the lead.
Will it stay? I think it'll change. But I do believe in the American businesses here to find a way forward.
And Scott, I'd love to get your perspective on how we're seeing businesses handle some of these tariffs, particularly from overseas. You know, we saw China drop their tariffs down. We saw those volumes rebound
I ain't saying be a
quickly.
day trader, but you got enough money to buy the time. That's the important thing. So after you see the shit move, you can just buy time on whatever, bro. Like,
did you see more
glad they try and break the trend and be bullish now and give us a Christmas rally right now today, but you know, once we know that direction, then it's easier. Like all you need is the time. By the time you gonna print,
and that piece is going to be
it's
shipped
not
as
even
a
that
single
hard no
item
more.
coming into the
Would
U.S.
we losing
We'll
money
still
not
have a
having enough
situation
money
where
and,
that
and, and
volume
trying to
of
take
the
0 DTE
transitions will
trades,
now be
swing trades,
fulfilled
couple
pretty
month
much held
trades,
in stock
and not having the
in the
liquidity
U.S.
to
So that
or the
means that
capital
the
to fucking
duties paid on
average in
that
and out of that shit.
product coming in is
But
paid
a
on the
person who
cost of the goods
does is a whole
rather than
different
on the
ball game.
retail value of it. So that was certainly a significant shift of volumes that
That's what changes
originally were
everything.
shipped, single piece, post-transaction or sale to the consumer. Now being shipped from, basically
Yesterday I was
fulfilled
trying to get a
out of
hold of you
China
because I had an
to
account that
then
was
instead
negative
being
$2,
fulfilled
but they
from a warehouse
overdraft
here in the
$2 in my
United
shit.
States. That
So
seems to have
yeah,
stuck, and I think
I
that's
got my.
going to
I ended up fixing it, but
continue on.
today the same problem happened. Boy, I had to
Okay, and just to give
went
us
on
a
Cash
snapshot
App,
and
sold
more
me
so
a
of the
shirt
holiday shopping season, I mean, what have you
that was
seen
on
out
there. I
there?
forgot
I
I
mean,
hate shirts
have
on Cash App.
you seen volume sort of
Trying to
picking
figure out
up,
how I can get
particularly
$2.
around some of the heavily discounted periods where, people are really trying to take
This man was
advantage of,
crazy.
I mean, the incentives that are out there because they are concerned about the hip pockets, or are things looking pretty stable?
Yeah, two things I noticed this time around. So one, the weekend of Black Friday through into Cyber Monday, that particular weekend, had a much higher portion of volume than we had seen in the past, which to me means where it used to be that Cyber Monday was the online buying, kind of point in time that really mattered. That shifted now, and even in my own buying, I would see a lot of Black Friday sales online. So I do see more and more that maybe it's just a perpetual shift from brick and mortar into online.
Yeah.
That continues to happen all around the holiday sales as well. So
So
those Black
say
Friday
like
sales will
if
be
you got a
moving
million
online
shirts, okay,
earlier
we
this
can
year
use
than I had
PL for
seen before.
example. I know you don't
The
like
second thing
selling
that I
and
noticed was
re-entering
that
shit, but with
believe
the
it or not,
same
the
money,
average package weight
why is it at the
jumped
top? Let
more
that shit come
significantly
back
than in
down,
years
take the
past.
same money at the
And
bottom,
so
then
that's just to say
that's how you
exactly
gonna
what
make
that
that
is. I
same
would
money go
speculate
back
that it's
up.
something to the effect
It's
of
not
merchants are
that
getting
same
more
money at the
clever to how
support.
to add more items into your cart
No,
there.
I was using
Some
that
of
as
them
an
have
example, but
maybe
that could
qualify
be any
for
stock,
shipping or whatever the case may
anything,
be.
any crypto, any asset.
But it does seem that
You just got too much
each
money,
package
bro.
is getting heavier, and I attribute that probably to the
Yeah, you
savvy
do.
of the
You got too
online
much
merchants
money
figuring
to
out how
where
to
you can take that and
buy more once they've got
live
you
off of it forever.
the
Like you
volume
literally
that
can
almost
10x that
Well,
shit,
they've
20x
definitely done
that
it to
shit
me, Scott, so
each
I can
day.
attest to
Each
their
day.
savviness. But
It's not
we want to
just.
thank you for
I
being
mean,
with us
all you
today.
need
The
is one
hundreds of
time
the
and you
trends that
done.
you're seeing
Like
today
say
during
like
the
if we
holiday
buy
shopping
like
season. That's Scott
200
Halpern, the CEO of DHL E-Commerce America. And coming
in
up next, we've
maps
got
or
Options
whatever the
Corner.
fuck.
Alex Coffey will join us here in our
The
Chicago
stocks that
studio
actually
to take a
move
look at options
like
activity
that
in
though.
Tesla. That's next on Market on Close.
You can load that boat up on anything. It could just be PL. And then buy the fucking leaves like you doing.
Kick off
You
the
gonna be
morning with
straight.
the data and the decisions moving markets.
So
Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth.
with the same money, you can multiply that shit, bro. And the market is just going up since fucking 570, 675. Now we at 680. Like I just made 100% on my IWM plays. Well, look changed though, made 100%. Like moves like this in the market happen each not every day, if not every single day. Like this is just waiting for it. Like it came all the way down and look at this bounce, bro. I just was sitting here waiting for it. I knew it was gonna do that shit. My cousin looking at puts, but now we all in calls. Like everybody should be in calls right now, printing right now. We got room to go further. They gonna come and tap this 682. This is dope. Bro, for the last out 2 or 3 hours, this market's just been running. I'm playing the game while this shit running, and I'm printing. I just got. Yeah, that's my friend, bro. We just be having that's my brother. We just had an argument. We had a disagreement. So I told you, niggas everybody don't always be on the same page.
I can't agree. And I track options flow
We
daily.
just had an argument.
Identifying who's buying, who's selling, and how it's going to impact the markets.
Yeah, I guess that too.
On Schwab Network.
We just had a little disagreement, and I told him what I was mad about. And now he cool. I tell everybody everything I go through. You can hate me some more, or you can find some humility in that shit, or whatever the fuck. Anything that happened to me, I'm telling y'all better watch out. That shit can happen to anybody, boy. Okay, what happens to me, boy? That shit can happen to anybody. For real. So even in the market,
you can spend less time searching
and more
I
time
don't think so.
Trade brilliantly with Schwab.
Top trading edge.
Welcome back to Market on Close. Another
I like to
analyst
close
is
my
maintaining
YouTube back
bullish
and
stance
pull it
on
back up
Tesla today.
sometimes because he
Mizuho
already
raised
he
its
had to
price target on the EV
get in my
today
list
to
every day.
$530 from $475 and kept its
Yeah,
outperform
just
rating.
refresh
Last week it
YouTube.
was reported that the company's U.S. sales fell more than 41% in November, but
They
Mizuho
just saying
is citing
anything to get you
improving
up out
investor
of there.
sentiment in robo-taxis for the price target
They
boost.
don't like you,
It's
so
now
they
time
try
for
to do some
Options
shit, say
Corner. Of
some
course, we'll
shit,
be talking about Tesla today.
make you
Helping
look
us do
worse
that,
than what
Alex
shit
Coffey,
is.
co-host of
And
Next Gen
it can't be
Investing.
that
To
bad.
take a closer look
Because
at
somewhere
Tesla
you
and
got
some of this
numbers
action that
to
we
back
are
up
seeing,
whatever it is that's going
Tesla
on.
hitting a new all-time high today,
No,
almost
PL's not.
exactly a year from its
I mean, it is
last
now,
record
but
high. And just noticing random factoid here, and very interesting too on the heels of this, this
I
weak
told people,
November
I
numbers.
made that
Everyone just
video,
seems to be
PL
looking
going to
past on the
$25 next
optimism
year.
of Tesla's future, not necessarily as an EV car maker.
Yeah, Tesla's always in the news headlines today. No exception.
Next year
For
is a
good
couple
reason.
weeks from
Today,
now.
though, new all-time high, literally just happening in the last 10 or so minutes. So
I mean, maybe they'll, if we get a bull run, maybe they can come tap $20. But for sure next year.
Was the catalyst or just well
Oh
timed?
man,
Nonetheless, here we sit.
I'm mad I didn't get in that shit.
Exciting stuff.
I had enough time to find something in PL, bro. I could have stayed in all the old PLs I had and made bank. I had a $9, a $10, a $12, $11. As soon as I got out of PL, I hopped in the other place in PL. I had Shures PL, like all what you saying PL. I was printing on PL, Google, and Apple, and I just kind of went away from PL. I just kept taking profits. I was taking profits in PL, get back at that shit, get into something else, get touched up, come back to PL, print. Like no, hell no, I'm gonna be fucking with PL next year. I can't wait till I get paid, and I'm gonna go back to PL now.
You gotta filter out what you disagree with, even if you have to acknowledge it, to get a more accurate representation of what a particular price range is. The bulls are in the 500s, the 600s, so it really just depends.
Yeah, right now trading at 489.22. Again, that almost a record high at that point. 490.25 is that
girl
record
talking
high.
about she can't talk because she at work. I know you at work. You busy at home too.
For Tesla through the year. The first quarter plunged 36%.
Yeah.
Worst performance in 2022. But then when we take a look at the chart, we just look at the last 6 months, we're looking up almost 50%. So, as you look at the chart, Alex, and you take a look at some of the technicals and what they're indicating, and also indicating a lot of this mixed sentiment that we're seeing because it is a highly volatile chart. When you take a look at it, what's it showing to you?
Well, one, a lot of the price action of the last year is no longer relevant. It is relevant potentially if you have a sell-off again, but when you're at all-time highs and
PL stand way up here in the area where it's at, and it's consolidating where it's at. And they going to break out here recently and go towards $20. This is what the technicals is looking like right now.
Levels that we've looked at
I'm
before,
going to stream.
the S&P 500 or other names that we talked about when I filled in here.
Not enough to give me that 20.
Two moving averages. One represents a week, one represents a month. And I talked about the relationship.
Bro, you gotta meet my cousin, boy. I gotta get him in here. I told him I gotta meet.
You can see back at the very beginning
Told him about your ass.
Crossed above the one month.
Both of y'all greedy with y'all money. Everybody agree with it. The only nice person I know is me, boy. If I get rich, I swear I'm gonna start giving random people money, boy. I don't care. And they're gonna have to work harder for some more. I'm gonna have a whole bunch of people working for me with that same leverage.
Let's call it 475-ish.
You know what I'm saying? I don't mind working for no money, boy. I'm trying to make myself useful for anything I ask for. Y'all rascals.
That would be just as indicators, of course. We're at all-time highs again. There could be resistance at that, but
my cousin gonna say if you got 10 million, what would you put on? You don't got no damn 10 million. I'm about to get your ass in here.
Visualize the next several weeks of what the market.
If he got a million, okay. Say if my cousin did have a million, still, bro, just.
Range up or down, so 8% from top to bottom. Range being priced in of what might
Yeah, man. Yeah, I mean, you can just use chat. You don't even really have to research as hard as you think, bro. You can just ask them. Yeah, I heard exactly what you said. That's a lot of money.
It's almost a 20% range, and then it increases to basically 26% if you go out to that January leap cycle, which is
Yeah.
550 to 420. So it just goes to show that things
So on
are
a lot of
always
money, you can still do that with a
relative.
little bit of money, the same shit. Somewhat.
It's got
The
low
numbers just a little bit
volatility
smaller.
relative to its own history right now, and you still have basically a 25+% range of potential outcomes that isn't even unreasonable over the next 30 days.
Yeah, potentially massive.
That's why I told him. I just told him the same thing.
It's very interesting as we look at that. I know Tesla is generally one of the most heaviest names traded when it comes to options activity. Did you see that today as well?
Yeah, always. I mean, specifically individual equities, it is rivaled really only by
Right. That's why I said you don't need a job. F them that they cut you. Get all the money you can and then make it multiply to where you don't even have to go back to any work. You work for yourself on DoorDash and shit.
Looking at this, I didn't put
Yeah, that's the only thing.
sophistication into this, but I put the lines here to represent some of these levels that I'm talking about. I like to use a stoplight system visually to kind of show, hey, maybe resistance to the upside.
Maybe a less demanding job.
Kind of battleground areas and then create potential support. That red
I'm smart enough, fake. What are you talking about? Now that I'm a business owner, my brain is like opened up, so it's just like I have to use the full capability of my brain. I ain't that dude just on disability no more, pretend like I don't got money.
Expiring on Friday, that's that red line. So perhaps an area you could see drawn like a magnet throughout the week.
I'm serious.
Resistance, and then there's kind of a range between about 480 and 470 where combined volume, calls and puts were trading relatively heavily. And that's that yellow section, and below that, when you get outside of today's trading range, which this chart only represents today's, market, system opening bells trading range, that 460 level is that green level, also a pretty noticeable combined volume level. So, yeah, always active, always making news headlines, and one of the most widely traded watchdogs on Wall Street.
And certainly that options activity kind of reflecting what we're seeing from the sell side as well, with mixed sentiment in terms of its action. But Alex, we appreciate
Bro, how you think I'm getting these subscribers?
today and highlighting Tesla for us. That's Alex
I'm
Coffey,
on.
co-host of Next Gen Investing and our senior equities contributor.
You talking about on the stream,
Send
yeah.
it back to Sam though and find out who she'll be talking to George about for overlooked stocks today.
Well, today the candidate is Lemonade. Molly, I'm going to analyst upgrade there, so George Tillers will get one. He'll break down the news about that company and what you need to know about the stock coming up next on Market Close.
That's why I've done pulled up lemon, boy. I told y'all about that lemon shirt, boy. Y'all gotta get y'all some lemon, boy. I think lemon trying to go 10% today, boy. I ain't lying to y'all. I don't know, bro. I found it on. Yeah. Yes. I found them on Cash App, bro. That's why I told people, I was like, bro, you even can kind of really mess with Cash App and print too. Because they find the stocks for you. Well, I just made one on PL just yesterday.
Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I want you to do the price performance. I want you to show that weekly and the daily, and be like, they're kind of do the same thing.
I'm Jenny Ford. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so sometimes.
Okay, hold on. I'm gonna write this down, bro. I write everything down too, bro.
Same goes for where you invest. Level up and invest smarter.
Well, the shit that you say, I mean, I'm only, you know what I mean? I gotta learn from somebody, bro. I spent a lot of time just learning, bro. When people thought I was just wasting time not doing nothing with my life, I really was just learning wherever situation I was in. The market broke out. It's a trend reversal right now. I think the Christmas rally is back in play now, bro. You know how they were saying it's over with? Somebody just said we finna go down for the next few months. Now, I mean, we ain't recover everything, but they trying to recover some shit. See, this trend I had right here, it got broke. So We gonna finish. I don't know if we can finish green today. We're not gonna finish green today, but these two green candles right here. If we get another green candle tomorrow on this big setup, bro, they're gonna be bullish tomorrow on the hourly. But let me see. Man, y'all quit calling me. Shit.
It's actually trading well considering business is evolving and also
Right here, this has to break some more, boy. Because if they happen to wick back under this, we can actually still go lower, I believe. But right here, it's a nice bounce, bro. Right here on the market.
Insurance company, so everything from auto insurance, property theft, liability.
We just gotta be careful tomorrow, cause they'll pull all this shit back. We'll wake up tomorrow, they'll been went down the pre-market bull and came all the way back down here.
They are competing with, major legacy companies like Geico and
Miss Rosa blocked me, bro. And then she hit me up today talking about what I'm doing. I said, girl, you blocked me. Like somebody blocked me on your phone, bro.
But one of the things about Lemonade is that they're essentially a business that is.
And what you want anyway? I told you put your money in the market and get this bread.
Onboarding using AI,
she ain't even trying to do none of that, I don't think.
Faster and efficient, and as well as
look at the market
rating or insurance, which again helps set the risk
I don't have nothing
prices and levels to actually mitigate.
Even my stables guy, I got that bomb put somebody.
Elements to Lemonade's prospects that Morgan Stanley alludes to in their call. So look at Morgan Stanley did.
No, PL's going up. PL's going up. They just pulled back with everything pulled back, bro, because everything is in these sectors that pulled back. But PL really wants to go up. It's going higher. Look at this. Look at PL. Look at this shit. Look at the technicals on PL. The whole setup on PL. This is a bull flag on PL right here. Like this would be the pole right here. That's the stick. This is the flag right here, right? So on the technicals on PL, they are trying to retest. Look at the volume. Look at the MACD curling. They coming back up here, back up here. This is the support right here. This is where you're gonna buy it right now. The print.
On an even up basis by the end of Q4.
MACD curling. Like soon as they get more buying volume, either this week or next week, they're gonna be $20. Like this is gonna be a breakout. It ain't gonna be a small breakout. Or even if it's a false, look where we at. Look where we at. We consolidating right here at the top at the earnings.
Going back to the second.
Like this is how the whole stock of PL looks. It's a whole bunch of fucking bull flags in this motherfucker.
To which point the actual company
declared this shit is stupid. This shit is really. This is a great stock.
Typically speaking, this has been
bull flag. This is the trend. This was that where it came back and consolidated at $12. This is right here a trend reversal. They was bullish. Now they was bearish. It was bearish. They break out of that bearish trend to be bullish again. Like I didn't even get a chance to put the damn supports right here before they just broke out at earnings and just went from 12 to 18. Are you kidding me? They touched 19 when they had earnings. These motherfuckers, people going crazy. Hey, mama, when you getting out of there? When you getting out of there? I was trying to call you this morning so you could tell my friend good morning. And not only you didn't even do that because you sleep, but you missed all the money in the market because you sleep. You gotta get this money in the market with us, so you can loan me a couple dollars when I need it. What?
In the market, but I mean, since you and I spoke about this last time, it's up about 16% or so.
Yeah, you gotta have an alarm set so you can wake up when the market is up, so you can get that. Look, Keith, I with this. Look, I was up all night making that damn video. I looked up, it was 8 o'clock. Is it time to go to sleep? Nope. The market opened at 9. It's time to stay on up for another hour, if not the whole rest of the day, 24 hours, and get that bread and then go to sleep. Right after that. Every time.
As you mentioned just a moment ago, maybe a lot of the customers
nothing else is more.
some of the direct-to-consumer trends that
Hold on, write it down.
Down, for lack of a better word, for these
What is it?
up and coming, if you will, digital insurance companies. This includes companies
I already
like
wrote that down.
Root,
It's Black Sky.
RWOT, and Lemonade. But
Yeah,
nonetheless,
I got that. I got both
again,
these right here. I
when it
wrote
comes
that down.
down to the powerful trends in sales, which in the case of Lemonade are estimated between 35 to 38%.
Okay.
The company's still not structurally
Okay,
profitable.
I just wrote that down.
But essentially, the net loss condition
I'll
of
try to
the
get on
business
that
relative to
this
sales,
week.
looking
Well,
last
hold
year,
on.
they
You know what? I'm
lost
gonna do it. I'm gonna do it
$74
on my Sunday thing.
658 million in sales.
I gotta do my video every week with everybody else.
Look at essentially the numbers for sales coming up this year. They're expecting 730 million for the full year. They've got one more quarter to go. And next
Hold
year,
on, I got.
this is
What
expected
time
to
is it?
jump
It's
to
4
$1.2
o'clock. The
billion.
market finna
So
close.
effectively, the sales growth for this underlying
I'm trying to.
business is
Mom, I'm
improving.
trying to. Hold on, Kate. I gotta use the restroom.
EBITDA extension,
I'm trying to
but
meet
there's
up
an
with
inflection
Trey.
point. The price moves first, and that's what we're seeing here with Lemonade. But it doesn't mean you can't see, a couple of great quarters, which we've seen, plus another quarter pullback
So how you
because
feeling
maybe
anyway?
some missed expectations, or potentially a bad quarter contingent upon, some property losses for things like, storms, events, and things out of the ordinary. So those are certainly things you have to keep in mind. But like I said too, the gross loss ratios are improving for Lemonade, and that effectively speaks to more operating leverage for the underlying business going forward, as well as pricing premiums correctly based on top line sales.
Okay, good look at Lemonade. Certainly a bright spot in what is otherwise a down market today. We've got about 5 minutes left until the bell. Thanks, George, for that, getting us across that company. I'll send things back over to Marley in Chicago for now.
Thanks so much to Sam and George. We're nearing the end of our market session. That, of course, means we'll be bringing in Kevin Green to break down the levels that he's watching on the S&P 500, as well as today's action. That's next on Market on Close.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst. Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
We're back here on Market on Close. I'm Sam Vitus here on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So we've just got a few minutes left to go now. So let's welcome in KG, Senior Market Correspondent, to help close out the session. So obviously we've got down arrows across the board, but there are some bright spots. Technology is managing to hold on there. We did see some buyers throughout the course of the session, it seems, KG. What have been your takeaways so far?
Yeah, I mean, actually, this was a pretty decent recovery day, and NASDAQ 100 actually is in the green right now if you're just looking at that particular index. I mean, at the end of the day, we did see some selling pressure happening early on in the session, but we were able to recover the 6,800 level. Not able to get to the 6,880, what we kind of highlighted as a key area of resistance for today, but at least some buyers stepped in. Now, what was kind of interesting about today, which has been different from the last week and a half, 2 weeks, is the Mag 7 actually did outperform. If you actually look at it, 6 of the 7 components of the Mag 7 are actually in the green for today, and a lot of the risk-on trades or the traditional AI trades actually did perform pretty well, and that's a little bit different. So we have a concentrated market, only 3 sectors in the green: consumer discretionary, technology, as well as communication services, but they carry a lot of weight in the S&P 500. So that's exactly what we needed to see, as well as defending that 6,800-ish area. Now, going into the close, I'm looking at that as an area of potential pen risk here for the market. We're about 6 points away from it right now, but I still think that that would be a win for the bulls, in which we're obviously seeing losses of over 0.75% at the lows of today's session here. So you did get a little bit of a rally back You also have to kind of look at some of the technical structure of not only the Mag 7, but also the semiconductors. The semiconductors tested the 50-day moving average. It was able to recover that on an intraday basis. That's really good to see. The Mag 7 as well, if you look at the Max ETF, a little bit of a bullish engulfing candle, which is obviously bullish for that particular ETF. Also holding the 50-day moving average, which is definitely key here. And volatility has not been able to stay elevated for too long, still sitting at around a 16 and a quarter VIX. So this is actually a pretty decent recovery day. I would state though, if you're looking at vol, I would probably still look at a vol spike here over the next 2, 3, or even 4 trading sessions, just based on the technical nature of the VIX as well as the options expiration on Friday. But today, I think it's actually a pretty decent win that the Bulls were able to recover. The Bears were not able to flush this market down.
We're just seconds away from the closing bell here, but as you say, a nice rebound for technology late in the session. It was sort of teetering back and forth, seesawing. We were wondering whether we would actually see a meaningful recovery. It looks like we got there, as you say. 6 out of the 7 Mag 7 has actually ended in the green as we get across the line here. And Tesla hitting a record. More bullish commentary, particularly around the robo-taxis and the technology side of the business amid slowing EV demand going into next year. So that's been helping things out with that name as well. Here's your bell. Performance here, as you can see, the Nasdaq, the tech-heavy board, sneaking in there, about 0.2% put on the session, as we did see a nicer rebound in technology. As I say, late in the session, we did see some flip-flopping. We saw some buyers stepping in. This has been, of course, a sort of battered down type of sector in recent sessions. We've seen that rotation out of some of the high-flying AI names, namely Broadcom, things like Oracle, into other parts of the market. But we did see this actually catching a bid today. So that was a nice little rally there. Let's see if it holds. S&P 500 heading in the other direction by about a similar amount, 0.25% lower. 6,800, nice clean number there. So we got the Dow Jones falling about 0.6%, 48,114 there, and the Russell 2000 small cap trade was down around 0.5% on the day as well. 25.19 we ended. Technology, as we see there, 0.3% put on in the session, and then communication services also managing to scrape through with discretionary, also just on the line to the upside, of course, as we saw some gains in Tesla. We had most of the Mag 7 in the green late in the session too, as we stated. Consumer staples, though, were underwater by about 0.5%, so were financials. And if we flip the board, we saw a pretty red kind of day. It was mostly risk off for the majority of the session, although we just saw those little bright spots later in the day. But utilities felt it. Real estate was down 0.9. Industrials as well down about 0.5%. Materials on the line to the downside. Energy, hardest hit. The most pronounced losses in that sector off the back of those crude prices, which, of course, we've been highlighting as well. So down around 3%, we saw names in that patch getting hammered too. So let's bring Marley back to the conversation and get to KG once again. And, just as far as where you left off, KG, what did you make of what we saw there as we looked across the performance there, particularly with that sort of late in the session type of rebound for technology?
Yeah, once again, that rotation trade going from that broadening trade that we've seen over the last week and a half, 2 weeks, getting a little bit more concentrated, and that could actually last for, a couple of trading sessions here. It could last for the remainder of the year. Who knows? Maybe there is some traders and investors that perceive some value here, and a lot of those names that have been beaten down. We'll just have to actually kind of wait and see. I still go back to the volatility complex and just state that usually once we do get a massive re-rating higher or an aggressive re-rating higher in volatility, it's usually led by these kind of small spikes higher. And so if you kind of look at the past and kind of project that to the future, it would not surprise me if we actually do see a 21, 22, or even a 23 VIX. And at that point in time, that's where you get closer and closer to capitulation, if you will, and where buyers really try to step in, buy that dip for the long term here. But a rotational trade for today, economic data, I think, was a little bit mixed for the most part. It didn't really shift the trajectory of rate cuts for at least January, but we are getting maybe closer and closer to a Federal Reserve Chairman pick from the White House here. And we have some earnings on deck coming for the remainder of this week. We have more economic data on the calendar as well. And I think Friday we should probably see some fireworks with that expiration for options and the beginning of rebalance season for a lot of these institutions.
And KG, I'd love to specifically get your thoughts on this Mag 7 performance that we saw. As I'm looking across here, we're seeing 6 of the 7 names, only Alphabet closing in the red. The last time we saw that was back in the first week of June, where we had 6 of the 7 names. And interestingly enough, the one who's in the red today is the best performer of the 7. What are some of your thoughts of this action that we're seeing from Mag 7? Because we have not consistently seen green across the board from them in months.
Yeah, so a lot of the stocks within the Mag 7 have obviously consolidated or pulled back here. So I think you can call it a technical bounce, at least for now, until we actually get maybe some more fundamental data or some news flow in order to support these prices. I think NVIDIA is probably still the best setup technically, because even though we have a pullback in the S&P,
we just got to work together.
In the NASDAQ, NVIDIA really hasn't gone anywhere.
Serious.
Obviously, that also means that it hasn't been bid up.
Ain't no joke about nothing I'm saying.
Down too aggressively either.
Ain't no gambling.
170 level is that key line in the sand. I think technically speaking, the 50-day moving average still holding as an area of support. MACD not looking really good.
Like, people be winning 90%, if not 100% in this game.
Potentially, that's something to be mindful of. Once again, I think this is a counter trend rally that you can book as a counter trend rally for now until we actually see
on that damn Cash App. They said my account was down $2. I sold some shares and then withdraw it out of my Cash App into my bank account. Now I ain't even down $2 no more in my chase. I forgot I had shares in my Cash App.
What has gotten us to the promised land in the past. I don't think that should be the case here in the future. And there probably is some headwinds when it comes to the economic data as well.
Stephanie gave me $100 out of nowhere. She was like, here's $100, take it. Here's $20. I need that action right now. You know what I'm talking about? I got nobody. You gotta get my baby back. At least get back in her good graces. I don't care who she want to date. But we gotta be friends. Let's be friends. Ain't nothing wrong with friends, right?
Dollars are not leaving this market, and I think if you're a long-time bull,
no, every girl I talk to got them a backup girl and all that other stuff.
Is it going to be the broadening trade, or is it going to be concentrated
a roster? That's why Michelle didn't want to talk to me. Then she hollered she had a friend for me.
Sorry about
and
that.
she's scared to give me the friends
to
because
ask you your thoughts
I think
too
she still
on
like
the
me.
Micron. We've got Micron coming tomorrow. We'll have the earnings here on the show, but the setup is expectations are so high from the guests that I've spoken to. They're in the process of refocusing their portfolio. How much of a catalyst do you think this could be, KG?
I don't think it's going to be a huge catalyst for the semiconductor trade as a whole. Micron is really focusing on the memory side of their business, and then they do have some cyclicality when it comes to DRAM chips as well, which they might be starting to see maybe a bottoming when it comes to the inventory levels there that they've been hoping for a very long time. But I think if you kind of look at the stock and the setup and the nature of this run, I think it's probably a little bit more to the downside probability post the report, unless they report something really aggressive as far as their backlog of orders. I think there could be a little bit of a sell the news event, but I'm not sure that it's really going to carry across all of tech or carry across all of semiconductors. Once again, it's been a laggard moving to the upside in the first place, and I think there was also maybe a little bit more of a short squeeze taking place there, and also a search for what could be the next theme within the AI trade in general, and definitely they are going to see demand. It's a commoditized business, and I would actually continue to expect that a lot of competition will be in this space, and there will be kind of a sharing of capitalization from some other names within this memory space.
Yeah, and KG, obviously there seems to be a bit of a confusion. There was some sort of hesitation as to, what to think about some of the data we got out this morning, particularly because it was backwards looking and also because of the fact that it was mixed. I mean, on a number of metrics, when you look at the labor market, when you look at the retail sales as well. So it seems like, you take away from it what you like, as far as, the good parts and the bad parts. I'm just wondering, as far as the next catalyst aside from earnings, how we should be thinking about inflation. I know also you mentioned the BOJ at the end of the week, obviously something to keep an eye on as far as the yields, the FX markets, crypto risk assets that are exposed to the sort of carry trade as well. So what should we be paying attention to as we sort of close out the week too?
Yeah, I think the economic data was mixed. If you're looking at these revisions when it comes to the BLS reports, you get a little bit concerned that the first flash or print that we get, the preliminary print, really is not going to be sticky or holding. And the contraction of jobs over the last 3 months, I think, is a little bit concerning. Now, yes, backward looking, yes, a little bit of an impact when it comes to the government shutdown, but I think there's probably a little bit of a trend that is taking place there that we do have to be mindful of. The S&P Global PMI's data too. A portion of that data set that has gone a little bit overlooked, at least today, is that the prices component or the input cost for services actually hit the highest level that we've seen since November of 2022, and the actual rate of change is the highest since November of 2022. Keep your eye out on that. Services inflation really does lead or the services PMIs really does lead to actual inflation hitting the market, CPI, PCE, PPI. And even though that's may be hard to see or talk about right now because crude oil is down and gasoline is down, there's still going to be some fundamental pressures there that a lot of these companies are experiencing. I think the housing data for the remainder of the week is also going to be key. We're going to have Lennar earnings, and then we will have some housing data that probably will show maybe some cracks forming there, as we are starting to see price declines showing up in very prosperous regions or growing regions over the last couple of weeks and the last couple of years or so, starting to see some rapid declines when it comes to prices. So I think that will probably lead us a little bit further. And I will just capstone it with this. Even though we might see some weakening data on the consumer front, the market doesn't really care about the consumer. It hasn't cared about the consumer all year, right? It's been the AI trade. Is it going to care about the consumer in 2026? I think that remains to be seen. If you look at the capitalization for a lot of these sectors that have exposure to the consumer, the market seems to kind of ignore a lot of that data. And I think given the environment that we have and the changing of the Fed, they might also ignore that data, that weak data as well going into next year.
Kevin, we appreciate you being with us to break all of that down on a record-setting day for Tesla. Some mixed action in the markets. We appreciate it, KG. Thanks again. Coming up, we'll dive more into the current state of the market and get some stock picks from our next guest for 2026. Market on Close. We'll be right back.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. Schwab Network.
few stocks. I mean, the Nasdaq just managed to pick up in the green. We saw a nice record day for
Yes,
Tesla.
sir.
This is a market that seems to be a little bit on edge about what's going on in AI at the moment. The bubble valuation concerns, circularity of financing. Obviously, you had the Wall Street Journal out with this story about CoreWeave today. $33 billion of value wiped out because of the AI bubble concerns. So what does this all tell you right now?
I mean, I think you see Tesla is really rising in our
I
signals.
just talked to
I think
my
there's a lot of
assistant. She said
optimism,
she's
both
finishing up with
in net
another
option
client.
sentiment, our short-term
She's about to come pick me
institutional
up,
demand
so I was trying to see where you
signal.
want
It's at
to
the
be.
top. It has been at the top and upside for a while too, more of a longer-term demand indicator. And yeah, it shows that institutions and retail are very excited about it. And yeah, they're playing it like a tech company, not like a car company, more and more.
Yeah, it's interesting because if you look at the Mizuho note, it was all about how EV demand is going to have some of its speed bumps next year, and particularly around some of the challenges to do with launches and, you know, off the back of the tax incentives wrapping up as well. But they're positive on the robotics side of the business. So obviously that's going to come down to, you know, how people think about the valuation there. As we sit here with, you know, obviously the last full trading week of the year, how are you thinking about things into year end?
Well, I'm seeing like a lot of concern in the markets, both in our QQQ and SPY net option sentiment, our market level indicators, our key ones, and they're actually at the bottom of our scale right now. And they're at like 0 and 4 respectively. Typically they're at like 30 or 40 when we're on like in a bull market. So that's a concern. And then you kind of have the macro story in that. I think people are concerned about the Bank of Japan raising rates. I think that has implications in the AI trade in terms of, you know, how much is going to be financed there. So I see a lot of apprehension in the growth market. It was better today. That gives me a little more optimism. But we're seeing a lot of pessimism in the institutional options markets. And that's where we get a lot of our indications.
The BOJ hiking, obviously the popular carry trade unwind, the potential for that to suck out of some of those riskier assets, which that is used to fuel.
You in there still?
How much do you think of an impact that's going to be? Because that seems to be a huge debate out there. I mean, some are downplaying it, saying it's not a risk because of what we saw last time.
Where the heck was
The
that
unwind
with?
has been done. Things are different this time around. But some say we could have a 10 to 20% correction.
Yes, I mean, I'm concerned about that. I don't know about 20% correction just because of Japan. But I'm definitely concerned about that. And what I'm more concerned with is what Jerome Powell said in terms of pouring a lot more cold water on the idea that there might be a rate cut in the next January meeting. And then we're also basically seeing the fact that low unemployment, like 4-year low unemployment was just reported. And then, yeah, and he's basically saying in spite of the job market, we're still not looking at a cut in the next meeting. So I think that's a pretty, combined with the BOJ, this idea that we might not even know when we get the next rate cut in America, is I think a scary picture for both stocks.
So you sound a bit bearish.
A little. I mean, this market turns so fast. Like, right now we have a pretty
Well, what am I typing in, bro?
And like the net option sentiment, especially at the market level, is one of the things that drives that. We've called like 5 market flips this year, pretty accurately with that, when we just see, you know, a big change. Like probably the biggest one was on October 9th. We actually saw 48 hours before that, we saw QQQ net option sentiment go to like a bullish.
I'm about to buy some Bitcoin, bro.
We're like, this is
right now, I'm about to buy some Bitcoin.
And that was before a big correction. So we can afford to take a very short-term look as a result of that. And yes, I absolutely think where it is right now is scary, but I was calling this market like the buy the dip market.
That's too far. Alright, y'all. Only got like. I need some. I need some jamming, like. I don't know. Might be able to squeeze one in there. My thing is that I'm a blue man to start. I want to see this work out right here. That might be a nice little way though. Let me see. The way like somehow get up here, bounce, and somehow like get up here all the way back to where they fell from, like back up there. If Bitcoin can do it, boy, get back up here somewhere. Like 4x on these money. Michael Sarah just put 1.3, 1.4 back in there in the market, or in the Bitcoin. I mean, excuse me. Yeah, let me see if I can grab me some Bitcoin and hold on to it. I'm making another crypto portfolio anyway, boy. I need that return, boy. If they can give me a nice old return. Right, I'll buy Bitcoin right here at this level. I told somebody that too. I wasn't gonna buy them up here at all-time highs. But if they get a good pullback like this and then they start trending back up, I'll buy it at this point, Bitcoin. I will. Cause I already done seen it go to 100 and something K, boy. What y'all talking about? Take my money with you, boy. Take my money with you, boy. Yeah. I'm about to buy some Bitcoin here in a second.
Hey, yo.
Yeah.
Bruh, you was right, bruh.
What? Yeah. Yeah, you can. I'm trying to take this off. Where is it at? There's a fish right here. It's somewhere around. I'm so good. Don't y'all judge me till y'all get your own shit, boy. Oh, here it is right here. I'm so cooked. That's my ticket right there. I had to take it off for a second so I can see, so y'all can see. Yeah. Yeah. I don't got no money right now. I need a little bit. Yeah, I only need a little bit. With $20, boy, I bought an IWM car. Them contracts was cheap as hell, boy. I bought a little one and made 100% on that thing. A lot of these. And I don't even need to have nobody's money. I just need to borrow some money so I can just have enough to smoke so I get paid. Cause I don't like doing all my work without having nothing to smoke. The smoking helps it be right. Doing it and being creative with it and just having fun. Yeah. Yeah, just having fun with it too, honestly. Like, I could not play the game. I don't have to play the game. But if I can smoke and just try to create and, you know, help people with stuff, make videos, I'll do that all day, all weekend. I don't need nobody for that. I can have myself and have fun. Like, I really enjoy doing this, y'all. I'm trying to get everybody onto stocks, even my mama, my girlfriend's mama, everybody. Yeah. That shit was fire, wasn't it? I'll just see if I fuck it up. Okay, that's good. Right, that's good. I like banana pudding. Y'all know she do. Yeah, that's what they do. Girls only got so much that they can offer to do for real. Hey, respectfully, chat. Don't y'all be getting mad at me, boy. I'm a man at the end of the day. I'm a man at the end of the day. It's our world, damn it. But it is what it is. So that's what they do. They do that with no money. But somebody who, yeah, like you say, really like you, boy, they gonna do a whole lot. Like, but I'm gonna tell you what's gonna change. Where the change is gonna happen is when y'all have y'all first child. Like, that's the area you gotta watch out for, cause that's where, you know, that post part of like the pregnancy depression stuff is real. The hormones and stuff is real. You know, how you treat her, the stuff that you say to her is real, stuff like that. That stuff can linger forever. So just never no abuse, never nothing harsh, like towards her at all, because they'll be somewhere thinking about that shit forever. Girls are sensitive and emotional already, so you don't want her to, like, you know what I mean. And they sneaky too. They'll fuck with you and really get you. So, but as long as y'all already, like, always happy on the same page and just, you know, respectful and all that, this shit can be beautiful. Even when the kid comes too, it's gonna be beautiful. As long as y'all can meet in the middle and raise the kid how y'all need to, you know, how y'all want to do it, it's gonna be good. But that'd be the point right there, you know. And it just kind of depends on the person with some shit, just how they treat their woman overall. But if they happy, they gonna stay where they happy at, regardless, and vice versa. So that's my advice. I would just treat that girl right. Y'all decide to get pregnant. I ain't saying go ahead and get married, but White about to win this one, y'all. White getting busy right now, boy. Come here, King. Bring your butt here, boy. Yeah, it's over, boy. White, boy, this chest stuff is something else, boy. It's your butt, boy. Come here, boy. I'm over here watching some of these checks. Let me see if I can get my cousin here. I'm trying to meet him to go get this pepper card. So I can take the guest from us to YouTube. But, oh, this is a different cousin. He's a trader too. I'm trying to get y'all to meet. He's pretty cool. Just chill. Yeah, my assistant said that was too far to travel, so I gotta see where he at, so we can meet in the middle somewhere. Nah, she's a girl, but I'm going to my cousin. He's a guy. I need him to get. Nah, she's driving me. Yeah. I'm gonna take my phone to the UPS store too. Nah, it's my assistant. She been helping me with stuff. I mean, she got other people that she helped, but I'm in the rotation too, where she helped me sometimes too with some stuff. Her personal life, I don't have nothing to do with that part. Yeah, we had a business. Not with my money, no. Insurance money and all that, yeah. The insurance pay, my insurance pay. All my stuff is covered by stuff. I use my insurance, I use leverage, I use whatever I can use that they don't have to be my money all the time. What? What? Hopefully rich between in 2026. Fuck 10 years. Alright. Yeah.
When you got a plan, you don't gotta worry about that shit.
I'm trying to be right in 2026 and be, I ain't gonna say done with this shit. Yeah, at some point it is, yeah. Yeah, you right. Yeah, bro, he ain't even answering, bro. I hate texting people, bro. And I hate being the middleman and stuff, too. You know, we could have just been all on freeway and just in a conference call and just figured all this out together in 2 minutes or less. You know, calm down. Alright, so let me see. Yes, sir. How close to the town can you meet us? Yeah, she said it was far, bro. I don't think she wanna go over there, but she is willing to take me though. At first I told her over by Walmart on Heights, but it just depends how. Right. It don't even have to be today though, honestly, but you know, I could try to catch you another time while you closer and see if she can swoop and get it, or you know what I'm saying, it don't even have to be today. You know what I'm saying? We can figure something out. Alright. If worst come to worst, I'll just come to you myself though, cause you know I travel a lot Uber myself anyway, so I don't have no problem coming to you. But I'm gonna see. Over by the oh damn, I know the area, but I don't know exactly where you go. But just text me or something like that place or that area, so I can just tell her and see if she cool. Yeah, so I can let her know, so see if she's willing to go there. I know, not today. I'm talking next week. What is it? Hold on, what? Oh, changing images. Okay. That's way better. Like, she like things like that organized either way. That way she can plan around shit. That's way better. Like, that's why I say, like, when it's like rushing like this, and she's already trying to get off and go home, another day might be better. But I told her Ferdale High School. I told her Ferdale area. And she's like, oh, that shit far. We already going to the UPS store. She's like, I'm about to get your... She should say it, but I know she think I'm about to get your out of here. Alright, though. Hey, join the Xbox party too, though. My man's is in here. Yeah, y'all dudes, boy. I want that capture card bad, boy. I wish I can give her a couple dollars to take me to Ferdale too. I don't know what her problem is on that. We get on the expressway. I guess it is probably far. I don't know where we at. If we gotta take 20 minutes from his crib to come in my area, then it probably is far as hell. I don't even know where it's at though. I'm just about to tell her that information. I gotta get my battery charger. Hold on. Oh. I'm trying to save my. You know where that crock pot's at? Oh my God! Stop! I'm licking it. that's gonna take me down there. My sister don't know. Alright, if you do see mine, just have them get it before I get there. So. It should be like maybe around 5:30 hours. Angry before. And what about Rellos? I think I got one more Rello yet left, chat. I got one more Rello left. Oh, they talking about gold rally, bull. Let me look at gold real quick. Gold ain't did nothing. Let me see. And I didn't even buy my Bitcoin yet. I gotta find Bitcoin. But gold ready to go, boy. I told y'all, boy. Gold ready to go. Right here. This is where we at trading right now on gold. Retesting. And they gonna be gone. Oh, let me see. Depending on what the market gonna do, boy. Y'all better stop playing with gold, boy. Like this line right here, boy. Gotta stop playing with gold. Oh god. So I got my wallet, my keys. Yeah. If I get some Rellos, she buy me some Rellos and some blacks, I might be good for a little bit more longer. And I take my phone back, get a couple dollars from that. Might be a little bit to stretch. The chat is crazy, boy. I ain't played chess in a minute, y'all. I'm about to get back on her and show everybody I'm still the coldest. I'm trying to get my babies, man. Doing a lot of different projects. I know I'm gonna come back and get liquidated, and I'm gonna do another a speed run. Right now I'm at 1200 rated, so I'm either gonna do a 1300 speed run or a 1200 speed run. Just depends how bad or good I'm still am. Rough out here. my God, I need you, baby. I need you. Give me my second assistant. God, if you can bless me, please. Thank you for coming back. If you coming back, girl, bring your cell phone back. I need my second assistant. I got all this work I got to do, boy. I'll be overwhelmed, boy. If you, girl, I can get you on my team. We going to the top. I'm telling you, baby. 2 assistants. I told y'all I had 2 assistants now. Don't be lying on me, boy. I ain't lying on nothing, y'all. I ain't playing chat. We getting these bands up. Let me call my kids real quick, too, before I get a chance not to even talk to them. Cause they don't never call, boy. I gotta call them, boy. I'm about to whip my kids' butt, boy. Their mama's butt not answering the phone, not calling. I'm sick of their stuff, boy. What is this, bro? Unglued.
Please note that this call will be recorded, and the recording will be accessible to both parties.
Hey, what y'all doing over there?
Watching TV.
You have a good day at school?
Yeah.
Hey, why is fix your camera all the time? You always gotta looking at a sky or something. I didn't call to look at no sky. Don't make me come up here and whoop everybody's butts. I'm just playing. I love y'all. You know, I have to give your mom some smoke because she be playing with this phone and about my kids and stuff. I don't play about my kids. She know I love y'all. I've been sending y'all some links for YouTube, trying to show y'all, like, I found some Pokemon Geographic stuff on here. Like, scroll up and look at the links I've been sending you, and you can click the links and go to the stuff. I found, like, Pokemon Geographic stuff. It looks real cool. You hear me?
Yeah.
Then say something. I'm just playing, baby. I'm hyped up. I'm feeling good. Today's been a good day. But I've been texting y'all phone. I need y'all to answer the phone. Your mama, you need to start calling me on that phone, cause that's what be having all the friction and the static. Cause she knows that I'm texting y'all and she ain't even giving y'all my messages. She's not calling back. So you need to tell your mom to give you your money so you can buy your own phone, and quit waiting on her to buy you a phone because you got your own money already. I'm gonna keep it 100 with you, baby. You got your own bread like your dad. You got your own land, your own bread. Tell her to give you your money so you can buy your own phones and go see your dad.
You know how.
Look, she heard that, right?
No, it's from I'm broke.
No, she ain't never broke, and she got all the money. Hey, put Aiden and Millie on the phone. I don't got that much time. I gotta go somewhere in a minute. My assistant's picking me up.
Where you going?
I gotta take this phone back because they tried to steal my work phone last week, and it made me late on my rent. So I gotta go take this phone back and get a couple of dollars so I can make some money. Hopefully, try to see y'all this weekend. Your mama got all the money. Tell her to bring y'all down here. I need some help.
Which phone? The black phone, the purple phone,
No,
or the other black phone?
All them phones broke. I have one phone left, which is my work phone, and
which one's?
All the phones broke.
So your purple one too?
Yeah, all of them are broken. I just have this one phone. I just got one phone now. They all just broke by themselves. Even the one I just bought last year, I had to buy another one. The one I just bought, now I have to send back. It's still in the box. I ain't even opened it.
Wow. It's already broke.
Yeah, I'm telling you. And then I have to pay $100 to get y'all. And then I gotta pay $100 in groceries or so just to feed all y'all when I do get y'all. You know, y'all got your own money. Your mama making up all them bills that she paying when she wasn't doing nothing at first. She could be helping her dad and helping the kids. Cause I need y'all help. You know.
Well, she got $2,000 into
I
bills.
don't care what she got and what she doing. I just know when lies are lies. I know what a lie is. I'm too old. I'm too smart. Ain't no tricking dada. Okay? All I know is on my end, it's worse because I have to like make I pay my own rent. So it ain't like I'm living with somebody. I have to do and pay everything and do everything. Even paying to get y'all. I gotta take my money and make money in the market. Like it's way harder for me than it is for y'all. Or especially somebody who's, trying to attach their stuff to some bills. Like I'm just telling you, this is the scale. It's a scale. One side's bigger and the other side ain't so. They got a lighter load. My load's heavy.
Yeah.
That's why I started my own business so I can catch up with y'all. Y'all got too much money where I can't catch up with y'all.
Why not? You? Yeah. I wonder if she's off Wednesday and Thursday. Yeah. Nice.
Or she's up on she might work. She works Christmas Eve, like Mama Food works Christmas Eve.
Hey. Well, I'm gonna try to see if I can get some Christmas stuff to send out there.
Well, do you have any $20?
No, I just told you got your own money. I just told you your mom got that junk. I just told you that.
She doesn't have $20.
She got all your money, all the Miller's money. Tell her to get some money from Tiffany because she's working on Christmas and Christmas Eve. Tell her to get some money from Miss Patty. Tell her to find some money and then give you that same $20 that you're asking me. Tell her to make some money in the market like how I'm doing. Buy some Tesla shares, buy some Walmart shares, buy Coke shares, buy Pepsi shares, and then you're going to have $20. How about that? Quit sitting there spending all the money and wasting it, and take some money and multiply it like I just told you when you was here. Tell them to learn how to read a chart. They can subscribe to the Frostman 21. I'm doing it for free. You can learn how to read a chart. We don't have to do FanDuel all day. We don't have to do, I can help you make $100 or so. You just gotta be willing to take the expertise that I got for you, cause I'm here for everybody. I don't tell Angela. I told Angela's mama come over and subscribe, get that money. I told everybody, so I told y'all about it. I told my kids about it. I made the channel about it. I tell the world about it. Let's get to it. Y'all got all the money in the world. Multiply that junk. Quit playing. Quit playing broke. And manage your money correctly.
Yeah, if I had all the money in the world.
You got all the money in the world. Like, use the paycheck money, buy Tesla shares, and multiply it. Buy Coca-Cola shares right now. Okay? Coca-Cola, let me see what Coca-Cola is. I'll tell you right now. Matter of fact, buy PL. I've been telling the world to buy PL. PL ain't even $20 yet, but it's going to $25.
What's up? So, I make my money.
I'm helping everybody make money on whatever type of money you got. Except that Earn app, and you can use free money to buy shares. Like, it's literally no excuse at all.
So why you asking for $20 then? And now all he's doing is rambling about.
I ain't rambling, you rambling. I ain't rambling, you rambling. Who ain't talking to, chat? They ain't talking to me like that, chat.
Her stocks and stuff like that for no reason. If you ask for $20, they'll ask you what you need it for. You don't need it for nothing.
Yeah, because you got your own money. Use your own money and use your mama's money and use stepmama's money. Dad don't got no money because he can't even see you. Don't ever ask him for $20. We live right now. You got all of them. You got your own money. Your stepmama got money, your mama got money, your sister got money. You ask them first, after you ask all of them, and then you ask me. I told you that last week, I told you that last month. Don't keep asking me that on live. If I don't have my own bag, who gonna have it? You can if you got some money, you can make it in the market. We watching stocks every single day. You know. Alright, hold on. I was just like, damn, my friend is gone. My family tried to steal my phone last week. I had to buy another one out of nowhere. But now I got my old phone back, so I can send this one back.
Damn, man, that's fucked up.
Oh, it gets worse. My life has been way worse than that, and it gets worse from all the crap they try to do to me. And then I just told my kids, because they're gonna ask me for $20. I said, girl, you get your own check. Your sister get her own check. She ain't using that money. She don't even know what money is. Your mama getting the pay of y'all checks. Her girlfriend got money, and the mama got money. Quit asking me for $20 when it's taking me $200 to come get you. And you got your own money and all them. Ask them people first. That's why I told her. They all hung up the phone. Hung up the phone. They hung up the phone, y'all. That shit was funny as hell.
Who'd you say that to? Your oldest?
Yeah, and everybody that was in that room, they got mad too. Yeah. I told them, I said, y'all don't have no money. I said, quit wasting your money and put it in the market. You can take your money and put it in the market like I do to try to get you and multiply it. I said the same stuff I'm telling everybody, now I'm telling y'all too. I said, subscribe to my channel. I subscribe to it for free. You know, hung up the phone, boy. My autistic is 8. My daughter is 8, and then my son is 4. My oldest gets disability SSI. Everybody get a raise. Everybody get a raise. So it's like, you know, she going from being broke, actually being broke, living with somebody, to God, Look at over 2,000 in 4 years. Y'all keep asking me for $20. Quit asking me for money. I said, y'all got more money than me. I'm trying to save money and to give y'all later, and y'all got money now. I just told you they got money. They get 2,000. Bro, if you with somebody and she a supervisor at a job, and then you living in somebody else's house, and you don't have to pay full bills, and then you got 2 kids out of 3, and they get 1,000 each kid. You got 2 kids, they get $2,000. You having kids for 3 years already. Like why you not having no money? That's the question. I'll slap everybody in there. I'll slap everybody in that house and then tell them be smart with your money. Like, what do you mean you don't got no money? And why she keep asking me for money when y'all coming for money? You know, give me some money. You know what I'm talking about? I'm streaming for free over here. You know, if I work, they want to check away, they want to tax away, they over just living the life. You know, trying to force the market into the market. Yeah, turn money. Turn around, ask me, knowing I don't got it, then I have to tell them that dumb shit, right? And then you got it, you know, you pay the mom, but then you pay the kids. Yeah. They got the wrong one, they trying to trick and shit. You know, I can't even say nothing. If I say something, it's the wrong thing. Hell no, it ain't the wrong thing, it was the truth. And I told them don't keep asking me that shit no more. That shit was the same thing last week, last month. And we go for it, it's gonna be the same thing too. If I get a couple of racks, I'm gonna be looking at y'all like, what y'all doing with y'all money? And they get food stamps. They got 600 food stamps. Yeah, they need to grow up. Yeah. Don't want to answer the phone when I call. That's why I be cussing them out. Then they go, y'all think you deserve that shit? Yeah, me and that is only. Shit, I'm about to get this bread. Whoever with me, we gonna get this bread. We gonna have a whole bunch of shit. Expensive shit, you know, go buy cheap shit, nigga. Bring that shit. Alright, y'all. I'll be right back. I gotta go take this up there. I can't really leave my stream unattended, but I'll be right back, y'all.